Yo, yo, yo. Good morning, everybody. How are we doing? How are we doing? Screen share, screen share. I'm supposed to have a screen share up. Screen share. There we go. How's everybody doing this morning? Welcome to Wednesday, Midweek Madness. We had some predictions that we laid out on Monday. And we're going to see whether or not anybody is actually close. I kind of already had a little bit of a gander. I already had a look to see who was close. It's going to be good. We'll see. We'll see the moment we get into LJ and Dirk's session, and then we'll see actually who was the closest. As of right now, it's close. Oh, it's so close. It is so close. I can say that Henry, you let's just say that Henry kind of like missed the plot a little bit. But it looks good so far. All right, guys. Today is Wednesday. It is the Midweek Madness Day, which means that this week we can have as much trading as we want. Because today, if I'm just going to show you my screen, is a low news day. So we only had the GBP CPI this morning, which came out as expected. And then apart from that, it's going to be yellow folders for the rest of the day. However, Will, what a good shot of your of your I don't know,
dude,
door and
bro, I have no idea what's going on right now. I'm having the most awful technical difficulties going on. Am I here?
Yes, there you are. Much better, mate.
Dude,
We can see your face. Anyway, as I was saying,
breathe.
Just take your earlobes and rub them a little bit and say "Hoosa."
Who's from?
Today is not a very high news day, let's put it like that. However, as always, caution, warning, I don't know, put a little X wherever you want to, a little star and asterisk or whatever you want to, and just know that at any point in time, there may be some information that gets sent out by a certain, I don't know, tangerine person that may or may not cause the market to do.
By a certain person who thinks he's the best thing since sliced bread.
Yes, certain silly movements. So I would say just trade with caution. We do know that the tangerine terrorist wakes up in a few hours or so. So let's not give him reason to destroy our accounts. Make sure that when you're going to enter a trade that you do so with a little bit of a reduced leverage, I would say, a little bit of reduced risk, until all of this sudden geopolitical unrest gets sorted out. At least that's what I'm going to be doing. But yes, as I said, today is a low news day, low scheduled news day, so no restrictions throughout the day on the high stakes accounts whatsoever. But do keep an eye out on, for argument's sake, financial juice, just to make sure that if news does come out suddenly, that you can get it as quick as possible. Where Forex Factor, I think, is a little bit delayed. So just keep an eye on that. All right. I'm not going to go through gold, because if I go through gold, I'm going to basically show who got their prediction correct and who was wrong. So, Will, would you be so kind, my friend, to go through gold, and then I'll go through a different pair before LJ and Dirk gets in, so we can look at who did really well.
For you, Rich, I can indeed look at gold.
How's the banana?
It was a very good banana. It's my first meal of the day. I just went to the gym, so I don't think I'm going to eat now until later on. So, we'll see. But yeah, it was a very nice.
It's a rest
Very
day.
nice.
It's a rest day
No,
for me today.
oh, is it nice? Yeah, awesome. I had chess today, chess and tries. And again, you know, for those of you who know my brother, he's an absolute, you know, he makes Hulk look small. So I was working out with him today, and he destroys me every single time I go to the gym with him. So I'm in a lot of pain today.
As they say, pain is just fear leaving the body, my friend.
Exactly, mate.
Void say skip rest day.
Pain is
Nah.
pain is weakness. Isn't that not Muhammad Ali? Bruce Lee, innit? Pain is weakness leaving the body. No, sweat is weakness leaving the body. That's what it is.
So on a hot summer's day, if I'm sweating my absolute backside,
I don't know if it works that way. Yeah, I'm not sure if it. If so, you know, I'm no longer scared of anything after living in Hong Kong.
that is true. Dirk asking, when is the cutoff time for our prediction bet, Richard? It is supposed to be whenever yourself and LJ drops into your session. So, and then you guys, before I jump off, we can then see who was correct with their predictions. I already have an inkling of who's the closest, because I had a little gander at it this morning. And all I can say is that Henry, sorry, mate. Just sorry, no 5K today.
Nah. I'm not gonna lie, I just know that I'm dead wrong after watching price action. Looking at that, I'm like, yeah, I was miles out.
Yeah, but it's close. It's close.
Yeah. Anyway, I didn't take this trade yesterday, as you guys know. However, it started to set up nicely. It started to look good. You know, we had the failure to break and close under. We did have the break and close above. We just didn't quite come up to this level here. And then, you know, we had news come out, and then boom, we had it wicked above, and then it just sort of before then dropping. So again, yesterday was just one of those where I was wanting to plot it out, see what happened. And I'm glad I didn't take it, because as you can clearly see, it didn't go too well. So what is the plan for today when it comes to gold? Honestly, like we said, I haven't actually looked at the news calendar today, but I don't believe we've got anything too intense coming out. Now, we've kind of wicked the Tokyo highs, if you want to say that. Go away. However, you know what? No, I do like that. I kind of rate that. Let me just get rid of... It's so distracting. I hate the session times up. There we go. So, it does look good. You know, we've got this consolidation here. We've got this clear bull movement here. Consolidation. Wick, 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 wick. You know, lots of wick rejections to the upside, showing that price does want to potentially try and push down. What happened after that? We had this consolidation range, and then a break and close under here, which was good. What happened then? We want some sort of follow-up transaction. So what we want now is either a pullback failure or a continuation on that momentum has moved down. We got the first option. We got that pullback, and as you can see, if we look at the candlestick characteristics, we can see that there's like real slow, choppy candles coming back. Taps into this lovely area here, wicks it one last time before then moving down. So what we are seeing now, or what we're not seeing yet, is a break and close under this level. Oh, technically, I suppose there kind of is a break and close. Very poor break and close, but it's a break and close nonetheless. So what I want to see is perhaps maybe something a little bit stronger under, pull back into a nice little area here, potentially looks good, before continuation lower. Now that is an option. However, you know, we go up onto the 15-minute time frame, and we're seeing, in fact, actually, we're seeing a more valid price action here. We could be looking at these lows. These lows could be nice on the 15-minute time frame because we have tapped into this area. And again, just like what I said about the 5-minute, we've got plenty of rejection. And it doesn't matter if you've taken Tokyo highs, like it's also, the idea is also valid, even if you're not taking session highs, even if you're just taking order flow into consideration. We're seeing here that price is pulled down, pulled back, nice little channel back, consolidation, price has slowed up at this area of interest, and it's starting to move lower. Now, what do we want to see? We want to see some high value structure point get disrespected, get mitigated, get, you know, whatever fancy, cool, sexy word you want to use. Basically, we want to break. We want to break of order flow, break a structure, and some form of shift to the downside if we're wanting to sell this. And that, for me, you know, what you need to, the best way you can identify that is looking at higher highs, higher lows, lower highs, etc., etc. So what we're able to do is we've got a low here, we've got a high-ish here, kind of a pullback. These bloody notifications are becoming more often, and it's starting to annoy me. I'm going to have to buy premium money. And then, you know, we've got that continuation upwards. We've got a pause in price. We didn't really pull back at all over Asia. It was mostly pauses. So as you can see, we've got low, we've got high, we've not got another low, we've not really got much of another high, we've got a high here, not really much of a low. Instead, what we've got, instead of lows, we've got pauses, or bases, as Rich says. So we've got base 1 here, we've got base 2 here, and we've got base 3 up here. Now, base 3 is quite a nice little base as well, because it's almost not a base, it's almost consolidation, especially on the 15-minute. Then when you drop down to the 5-minute, it does condense a little bit, which is quite nice. So what we're looking for here now is for price, instead of to break a low, because like I said, we haven't really got a low, what we're looking for is price to break a consolidation or a base. We're looking for price to break through a potential point of continuation for that upwards move. So therefore, that break below is going to be a disrespect of that, therefore a potential pullback in order for a continuation lower. So for me, on the 15-minute especially, if I'm going to be selling this, I need to see a break and close below, pullback, continuation, pullback, continuation, something a little bit like that. Now that's if I want to sell. If I'm wanting to buy, then, you know, this needs to be broken. This needs to be respected. Continuation, pullback, on off we go. Or a move, pullback, continuation. If I drop down to the 5-minute, just to see if I can clear that up and make a little bit more sense, as we can see, basically what we see is, yes, we've got 5-minute range here. It's I would call it an internal range. We've also, if I just delete this, there we go. Also, what we've got here is range low, range high. So now, on the 15-minute, what I want to see is something of a break of the range higher or a break of the range to go lower. Now, that's what I want to be seeing on gold right now. Internally, right now, honestly, if you want to get in on what's, early, if you want to become an early seller, then there's an opportunity here if we can break and close with a nice little bit of volume to the downside. But other than that, I mean, we've also, if you want to buy this, we've got a potential area here, I suppose, that we have tapped into that you could long from. But for me, if I was to long from here, it'd need to, I need to see one of these moves. I need to see option A or option B. And that is all I've got to say about Vietnam.
Yeah.
I got shot in the buttocks.
Nice. Let's have a little gander at...
Also, I've made world's worst coffee today. It's bland, it's boring, it tastes like crap and it's too cold, so I'm a bit worried to trade.
That might just be the perfect cup of coffee for, I don't know, sitting your hair on end and you just absolutely going into business mode. I don't know.
No, like you can judge a day on its coffee. You know, if you've made like a fantastic coffee, you're like, yes, this is a delicious coffee. Today's gonna be a good day. You know what I think?
No, sometimes when you wake up, you choose violence, you choose rage, and then stuff just gets done. I don't know, it just gets done.
You know what? You're speaking facts. You're speaking pure facts. That is so true.
Yeah,
There is sometimes I have woken up and chosen just violence, and I've been in such an anger. The productivity has been optimal, and you're like, wow.
yeah, there's no time for BS. It's just putting
Yeah.
your feet on the floor and just start doing. You just go.
10
So
toes down, as they
sometimes you
say.
wake up and your cup of coffee is just not as you wanted it, or I don't know, you just didn't sleep the way that you wanted. You just woke up, choose violence, and stuff just gets done. You go to
Yes, I'm
town.
used
There's
to
no
it.
meandering. You just like run, get it done, come back, start cooking. You just throw stuff into a pot. It's probably not a very good meal, but like sustenance. It's there,
Do.
done and dusted. Just throw it
There
in.
will be a broth out of this.
Yeah. I'll have a little gander at GU and then see what we can see potentially for today. So what we do have here, I'll go over to the 4 hour first and we'll kind of like see what happened the beginning of the week. Beginning of last week, we had a nice little gap, which then proceeded to follow by just absolute bullish movements until Tuesday, and then Tuesday basically became the high of the week until Thursday wicked it, and then Friday wicked it again. So technically, these highs up over here to me seems like a very strong high, so strong area of resistance, supply area, you can almost say, if you start getting some nice movements out of it. So the idea is I want to see us come and test these highs, which is, I'm going to draw a box from Tuesday's highs to Friday's highs, and then let that basically be the movement itself. Well, from Tuesday's candle closures to Friday's highs. So that's 135.87 to 135, let's say 136. It's like 4 pips off from it. So this to me is an area where we can potentially come and test, which is last week's highs. And the reason why I want to see last week's highs be tested is because of this. We had the gap on Monday morning, and the low of Monday has remained the low of the week so far. And we're in Wednesday already. So we're midway through the week, and it has remained the low effectively. We wicked it once yesterday evening, just one wick, and since then it seemed as though it wanted to push up. So I'm seeing a little bit of bullish reactions on GU. So if I go down to the hourly, we can see that from market open, which is roughly around here, we created the low of Tokyo, and from there on we have, started pushing up. We've come into the highs of yesterday as well as Monday. So this week high, not last week's high. So we've wicked this week's high this morning, but we did not really get any like strong reaction pushing price lower. We're technically still stuck in this area of the Tokyo low as well as the week high so far. For me, I would love to see price start trying to break above this week's high so far, so Monday and Tuesday's high, and start making its way up to try and get to last week's high. If I look back to where this week's lows were, so Monday's low and yesterday's low, and I draw the box all the way back, we get these resistance zones on Wednesday and Friday, the 8th and 10th, respectively. And then on Monday, after that initial gap that we had, we broke through that area. So this to me is a very nice area of interest. So I think as a point of interest, having been a resistance point, now becoming a support point, I do like the idea of reacting off of it. The only concern that I have as of right now is the fact that we have not yet really claimed any significant high. We've claimed a significant low. We've wicked lower than that resistance point. We've picked up some liquidity. We presented with a very nice bullish candle, and since then we have not really tried to come lower. I do think that we're slightly sideways at the moment, purely because of the high and the low of the week so far, not really being broken at all. However, I do have a little bit more of a bullish bias as of right now, based on the fact that we had this very nice reaction on this established zone, and we do have a triple top almost, of which technically it's slightly higher highs on each one of them. And then obviously the Monday just opened up with a gap. So Gap was filled, no issues there. We do have slightly lower highs so far this week based on the high of Monday. But I do think that there is something in here to try and push up. Even if it is just to fill basically this range that we have right here. So we've tested the low of the range. Now we need to go and test the high of the range. That's kind of like what I'm thinking. So for intraday, I'm looking for any price action that aligns with that bias of trying to push higher. Obviously, on the lower time frame, so on the 15 and the 5, I'm going to go on the 5 because you can see a little bit. Well, I'm going to go on the 15. I think the 15 looks a little bit better. You do have some consolidation here at the bottom section of Tokyo, which we had a nice volumetric reaction out of. Eventually, price dwindled its way down back into that area of consolidation. So we just wicked it, and then we started pushing up again. So this kind of indicates to me that even though we did not sweep the high of Tokyo, that there's still enough volume to try and push price back into Tokyo highs. So as of right now, we are making a bit of a retracement candle on the 15-minute, and on the 5-minute, you'll see that it doesn't look great, but there is a potential for us to continue pushing higher from here. So 5-minute, you can clearly see the consolidation here. Clear consolidation, break, retest, and continuation up. So a lot of flat movement. Then CPI came out. I think CPI came out right here, which was as expected. Didn't push price lower down, did not push price up either. But eventually price came back down to the consolidation area and then reacted off of that. So I would love to see maybe a little bit of a deeper pullback, try and get back to this 50 EMA, and then start pushing up again. And then basically with that, we have the low of the London session, the high of the London session. We have then a higher low, and then a higher high potentially. So that's what I want to see with GU, potential pushing price higher with that expectation of taking this week's high and then from there on try to take last week's high. Now, if that doesn't happen, if we do not get the continuation, same idea. We need a break. We need to start pushing lower if we do not take the highs. If we do not take the highs, then we do have the lows of yesterday, which happened to be the lows of Monday as well. So if price does not, so let me remove all, right, I'll do that and do that, do that, do that, delete, delete. Okay, so if we do not sweep these highs, if these highs of the week so far remains the highs for today, meaning that it provides an abundance amount of resistance, and we start pushing lower. Obviously, first port of call is we need to break the lows of the day so far, of today. So Tokyo low, we need to sweep that area of consolidation that we had during Tokyo. We need to break through, then potentially, where's my drawing tool? So we need to see price start coming down, disrespect this low of Tokyo, which happened to be the low of the day as well, and push through, maybe a retest of the consolidation, and then a continuation lower to try and get to the lows of this week so far. And if that gets triggered and fails and we don't have a reaction and starts pushing lower, then we'll need to look for an area here on the left that we can potentially come and test for. As of right now, I want to see price move up. If it doesn't, we will definitely have to come and test this week's lows. And we will see that if we break through the Tokyo lows. I know it's a lot of drawings on the board. Bias is bullish. I want to see price break through. If it doesn't, we have to come and test Tokyo lows and then the daily lows. Even though we did have a gap, I only just realized we had a gap.
We did indeed.
I just realized.
Sure.
That kind of changes things ever so slightly. not a massive amount, but still the same idea. We can potentially see us sweep these highs, potentially try to come back down, take the gap, fill the gap, touch the weekly lows, and then try and push up again. We can see that. I mean, it doesn't change everything. You know, it's not like a massive... We'll see. I still want to see buys, though.
On GU.
Yeah, because I want to see this week's highs taken. I want to see this week's highs taken and then an attempt at trying to get to last week's highs.
Yeah. Same with EU. I can kind of see that. Gold's coming down as well. Have you checked the NAS? The NAS looks nice. Look. Words, please. Work. Mouth. Make noises that make sense in English.
I have had a little gander at it this morning. If I go to the 15-minute, you'll see that we basically have this upward channel at this point in time. Actually, let me just use the channel tool. That might. We've had this upward channel here, which is a slow upward channel. The exact same thing that we were talking about yesterday about taking the highs, which this was the all-time highs, which we just swept, and then we had a strong reaction pushing lower, and then a reattempt at taking the highs, which we just failed, and then started pushing lower, and then we eventually came back into this initial, established, resisted ever so slightly, then reacted very strongly, wicked into it. Okay, we missed it over there, and then we just wicked into it this time, and then started pushing up from there as well. So another area of interest that we had a reaction off of. However, the problem that I have is the fact that when we made the all-time high, we started pushing lower, breaking these lows, the lows of Tokyo, breaking the low of the day at that point, retested the high, failed, and then started pushing lower, creating a new low of the day, which technically swept the previous day lows as well. So that's the only thing that I'm a little bit concerned with getting to this upper point. I do think that there's a potential for us to break this channel, retest, and continue lower to try and get back to this. Because when we had the opportunity to break higher, we just wicked, and then the follow-up was a lower one, whereas the lows of in this case, Monday, was just wicked, but we did not create a new high after pushing up from this move that we had here. So to me, even though we're currently in a channel, I feel like we're going to break, retest, and try and push lower on the channel. So we'll see. We do have the Tokyo lows as well as the daily open lows. So that was the daily open. We do have the Tokyo lows over here, which we're probably going to come and sweep, retest, and then push lower. That's what I'm seeing. Sorry, Matt, I just need to quickly reply to a message here.
Yeah, that's fine. Absolutely fine, my man. Not a problem. Can we bring my screen up? There we go.
Do you want me to? Yeah, there we go.
No, I got it. It's all gravy, baby. Let us know what you guys are looking at as well, by the way. I want to lean back, but because I'm on my laptop, I'm like, I keep wanting to like eat my laptop. It's really
eat my laptop.
Yeah, apparently I'm like,
just start chewing.
I'm trying to lick my screen. I'm like, bro, just like sit back. Because every time I go to sit back, I'm like, oh yeah, but then I feel too relaxed. I'm just edging closer forward to my screen. Does anyone else get that? Does anyone else feel like they start like sitting back, and by the time they're like entering into a trade, they're pretty much sitting on their desk? I can't be the only one.
I try and be under my desk as much as I can. So
Yeah.
I tend to have my desk almost touch my stomach so that I can have my arms just rest on the desk nicely so I can type. And then what happens is I sometimes kind of like just lean forward like this. But then it's a problem of I have a screen on the side, so I have to turn my whole body to look at the screen. So yeah.
That's why I try and keep everything within like an eye level proximity. So like I can look up, look, because I know for a fact if I had one screen over there and then one screen over there, it'd be
neck
and I'd
exercise.
end up I'd just end up cricking my neck or something, or I'd make myself dizzy or start making myself motion sick.
I could have sworn I saw that Trader Dax is in a trade.
I'm assuming it's going to be a DAX trade.
I'm not sure. I wanted to actually get to this. Tabs Forever saying, I passed the first evaluation stage for my 2.5K high stakes account. Nice, mate. Nice. Congratulations.
Congratulations to you, Taps. Taps
yeah.
forever. Yes, us Taps forever. I know that you're not Welsh, because I'm pretty sure I've had this conversation with you, but Taps is another word for a Welshman. So yes, Taps forever.
Yeah. In that case, maybe... Yeah, no, I'm not going to go with that. Anyway, Trader Dax saying, maybe I will extend TP to 24.024. Let's have a look.
Again, that is DAX, isn't it?
Yeah, it's DAX.
What do you say, 24.024?
Yeah, 24.024. Where did you get in, Trader Dax? Let's start with that. About to hit TP.
No, you're not.
No, he already did. 24.24. I think that the 0.20, it's 24.24 instead of...
Oh, so
0.24.
Apologies, it's 24.0.
Yeah. 24.24.0. Yeah. I think that is.
That's my bad.
Where did you get in? I'm going to assume.
Where the hell is that gone?
Wow, look at this. We had a very nice base reaction on DAX. So yesterday during the overlap between London and New York. Price were the gap base was 24,382 to 24,402, and we literally just wicked that and then started pushing lower. So pretty nice on DAX. And then if 24.24.0 was your TP, then that's pretty good.
I'll try putting in 24.24.0.
It says 3 minutes ago. About to hit TP. Oh, yeah, maybe I will extend TP to 24.024. Ah, okay.
Yeah, okay.
24.024 is previous day lows. So try and aim
for the right thing.
DAX 40.
I'm on the DAX 40 and I'm putting 24.24 and it's already hit TP.
20. Okay, so I misread his comment. It says maybe I will extend TP to 24.024.
Oh, so I was right all along.
Yes, I'm just trying to aggravate you, mate, because I know that you're having a bit of a day.
Really, you're trying to piss me off.
I'm trying to be a thorn in your side.
Oh, I'm too tired for this. I'm going. I'm off. See you later.
So, if I just point this out, so we had yesterday's lows, which was created by Tokyo at that point in time, which got broken by this move over here. So during the afternoon, just before New York session, we started to break the lows of the Tokyo session. This is on DAX, okay? We retested the lows during the New York Open, and then from there on, we started pushing lower. Right there is a 5-minute base. So anybody that knows, so there's technically one just above it as well. But for anybody who knows how I classify bases, it is a trend continuation after an attempt at trying to break the trend. So in this case, this is where there was a little bit of buying power that came in, or a buying attempt, and then a catastrophic drop lower. So that to me is a base. So this is basically a base where you have a new trend that is created, a attempt at a pullback, and then a continuation. So this is too big of a base. This is more of a retracement. which happens at breaks. So you have a break retest and then a continuation. So on this leg continuation, you get the basis. And anyway, so in that case, if you just go to the right, you'll see that we literally just wicked into that one. If this one got broken, we would probably have come back to this base. And if that one had broken, we would go to the point of interest, which ended up being a support, then became resistance, broken through, continued lower. So we just had that reaction here. So in this case, price came up a little bit strongly, let's rather say. What are you doing, mate?
I found a way to extend my monitor, and I now have a full-ass setup.
We can see how dirty your office is, mate.
Couldn't you? Yeah.
Yeah, I can't see you.
Oh, what is going on there? Yeah, as you can tell, I haven't sorted anything out since being home. I don't know what's happened to my camera there.
Anyway, so we do have this area of consolidation right now. It's a small area of consolidation, basically, which ended up being yesterday's Tokyo low as well as a resistance point for the dollar as well. Oh, not the dollar. During the New York session to try and push price lower. We could have a reaction here. It looks very strong bearish at this point in time. I think this might just be a bit of a retracement and then a continuation lower on DAX, just on this lower time frame. But it really depends on what happens in this area where we are right now. And then I also see a small little zone here where we struggled to push lower. We attempted to go back. Small reaction, tried to push back up again, collapsed straight through, created the low of the day yesterday, and then let's say a bullish reaction close to rollover, and then we had rollover, and then from there on, this low over here basically became the low of the day. So I'm going to remove that section over there. I'm going to remove this one. Right now, we need to see the low of the day be taken, which is this. Yeah, that's rollover. So this is the low of the day so far. We'll see whether or not we can have a reaction off of the low on DAX. We had a breakout, no real retest, failed to retest, and then a volumetric push up. We'll see. We'll see whether or not DAX can continue pushing lower. What do you think of gold going for a bounce off of 4752? Okay, well, I can't bring up my gold chart right now because it's going to show who's A, in the lead, and B, who's winning the prediction. So will have to do that. So Will can have a look.
I just pulled hang on. Give me 2 seconds. I've just pulled my mic. Just pulled my microphone out.
Oh, dude, it works.
Okay.
Do you guys DAX will go to 24.024? Like I said, now there is a potential for us to try and test yesterday's lows. We do need to break the day open lows and the Tokyo low. I do like this nice reaction that we've had off of this base area. It does coincide with the continuation of yesterday's downward action that we had. So I do like the continuation, trying to push price lower. So, however, I would say that in this case, there is also reason to believe that this low area that we have over here, where we had the consolidation during Tokyo, this section here, this consolidation, could also be a reactionary point. So it consolidated during Tokyo, and it also aligned with yesterday's attempts to try and break through. I mean, you could obviously do something like that and say that that is the zone and that we've basically already broken through. But we'll see with the consolidation that we've had whether or not that can actually be broken through. Or we're just going to react off of this and start pushing up.
Yeah, fair. Who was just asking about gold? Now that I've managed to sort myself out a bit.
Ciano.
Okay, Ciano. Do you think gold will bounce off 47.52?
Just bring your screen up.
Oh, okay, my screen doesn't look okay like that. Let me...
Extend.
Extend my screen. Okay, that's a bit better. It would be so 47. What is it? 47.52.
Yes, 4752. And then while you're busy checking that, I just wanted to tell Rexa, did you do analysis on pound odd? Not yet. We will do that for. I will go into that one while you're listening to Mr. Will talk about gold.
Right. So I'm just seeing that you've asked about a 4752 level. This is a really nice level, and it seems to be rejecting this level quite nicely. Let me just move this over for a minute, because that's a potential idea. Now, like I said to you guys, I want to see something happen around this level here, and it could be a case of what? Okay, oh, we're back. What just happened then? Anyway, so it could be a matter of testing my patience, trading view. There we go. Let's try again. It could be a case that we see a reaction from this point here. Like I said, there's a nice little area of interest here, potential point of continuation. We are in an uptrend. You know, we are trending in the bull market, so we are bullish at the moment, meaning this is a potential point of continuation, a PPOC, potential point of continuation. Now, the only point this would be a potential point of reversal is if we were in a downtrend and reacted off of it. So yes, I do think that we could have a reaction from 47.52, which is this low here, which we have literally tapped in and wicked twice. Yes, twice. However, like I said, I think we'll react from it, but it depends what you want to see it from. Well, like what you want to see happen from. Like you said, do you think gold is going to bounce from here? If you think bounce and continue higher, like something like that, then there's definitely potential for that to happen. However, it could also be an opportunity for price to bounce from that level up into an area of interest before then continuing its movement down as it is in the short term. So yes, I think we're going to get a reaction from this area. What will the reaction be? I'm not entirely sure, and that's why I said time will tell. Time does a lot for a lot of things. You know, time's a great healer. Time tells a story that, you know, patience or like impatience won't. You know, so the skill of having patience will clear a lot up for you. And I think that's the best thing you can do now is just be patient and wait and see what happens. And that's the luxury of waiting for confirmation. I like to wait for that confirmation instead of getting in early. Like, there's going to be so many of you out there that are probably thinking, well, just get in the trade. You know, if you're wrong, you're wrong. But when you're right, it improves your risk to reward. You know, your R ratio, providing you can get in nice and early, even when you're wrong more than you're right. So if you've got under a 50% win rate, usually your R ratio getting in early will make up for that. However, I like to try and keep my R ratio. You know, I had a 30% win rate. It wasn't great. You know, I was just getting into trades all the time, just like, oh, I'm going to lose this trade. I know it. You know, I'm going to place this trade and it's going to hit stop loss. And it was just mentally draining. It was just always like death by 1,000 cuts almost. It was just always niggling at me. So I thought, you know what, I want to try and be as close to or above a 50% win rate. So I've got around a 60-ish% win rate at the moment. Actually, no, probably a little bit less with current climate. However, so what I'd wait for now is if we're going to respect this area, if we're going to hold at this zone that you've just marked out, what I'd want to see then for me to have confirmation would be a move above this. A break and close above, pullback continuation. Or, if you really want to be patient and you think something's going to happen, you know, like some form of consolidation and then a break and close above. That could also happen. Now, that's also probability, you know, or probable. But for me to just trade it from where it is now, like this, I couldn't do it. I couldn't do it. Where would I could find a target for you. You know, you've got low-hanging fruit. You've got yesterday's highs over here. You know, so you've got plenty targets. But where are you going to put your stop? You're going to put it down here. But then the chances of you being wicked are almost 100%. Are you going to put it down here? But I suppose then, even if you're going to go to yesterday's highs, you've got, what, 2R? So that's quite nice, I suppose. But then, what are the probabilities of price potentially wanting to come down to this level? Or, you know, to this level? Or there's too many levels to the downside that would make me think, you know, price may want to come down here first. And the way that price is moving overall, honestly, I'd rather be seeing sells, but I do think that we're going to have a reaction from this zone. I think we'll see something, but I don't want to see buys now until a break and close above here, because if we do get a break and close above here, we can trade something a little bit like this, and then, you know, you can have a pullback, stop loss can be on the low here, and then you can look at your risk to reward, and then potentially, even though it's probably still going to be around a 1 to 2. Yeah, okay, nearly a 1 to 3. There you go. So that's what I would call the ideal setup, post confirmation. You know, you wait for the break and close, wait for a pullback, boom. That's when you're looking at entering, because you've got that little bit more confidence and confluence stack in your direction.
Nice.
Nice. That's that's my thoughts. So Sian, hopefully that helped. What else we got? EU. EU's just ranging at the moment. Not much going on. GU looks okay. As you can see, my squiggles. Let me just delete some of my squiggles.
Me squiggles.
Me squiggles. I decided to go and do some Banksy on the charts. You know, we've got this nice little area here. Tapped into it beautifully. We've got this high. Pretty sure this is Asia high. Have a look. Yes, it is. It's Asia high. So we've got Asia high, Asia low, and then, you know, consolidation, pullback, continuation. We've got slight consolidation with a small pullback. The only issue is that it is at these highs. And it seems to be struggling when it gets to these highs. What would be nice to see is if we can actually get above them. Even if we break and close above them, pull back, continue, or if we can just break above them, pull back, and move downwards. You know, either way. But I want to. Either way, I want to see these highs disappear. I want to see them get taken. I think we will move higher on GU. You know, we've also got highs up here that we could target. So I think I think GU today can reach 1.35398. I think that would be a nice target zone for GU. What happens after that, I'm not sure. Whether it decides to continue its upwards momentum or whether it decides to completely reverse and start heading down. But I think that's what we're going to be looking at on GU.
Nice. Let me go through pound Aussie dollar. So this is the daily chart so far. So notice that we did have quite a nice little channel for quite a while from last year, July, August-ish. We did have some consolidation, so you can basically see the consolidation here. It's granted, it's a large area of consolidation. So you had pretty much sideways action from the whole of April all the way to July, which is quite a while. And then we had an attempt at a break a retest of the highs, and then we started breaking around about September. We were outside of that channel, outside of that consolidation for a little while, and then we came back into it, and then that's basically where we started creating this downward channel out of breaking out of consolidation. Slow downward trudge, not really all that strong, and then roughly around January, we really started sinking lower, really started pushing lower. I'm just going to remove that, and then you can see the misclick. Then you can see this small little area that we had here. A little bit of sideways action, and then eventually we just absolutely tanked through, just really started pushing lower. Okay, where did we react from? We came down to this area over here around about the 12th and the 11th of March. If you go towards the left, you'll see that we had an area, small little area of sideways action roughly around December 2023. So the reaction that we had here, if you pull left, you'll see that it is close to, but not completely engulfing, a low basically that we had during June of 2023. After a nice pull up that we had from February-ish, a nice upward channel pushing price up. We slowed down around this area, a little bit of a retracement, and then a continuation to try and push price up, eventually reaching the highs around about 1.9965. So I do like this area because basically when price came back down to it, it reacted off of it. However, it did not initially create a new high. So the high being basically in line with this arrow, we only got that high touched around about August 2024. And then from there on, we really started pushing up higher. So overall, a very good upward moving asset for the last, I don't know, from September 22nd until April 2025, with some sideways action and then eventually pushing up. However, this is the longest downward price action that we've had in quite a while, and it happened in a very short period of time. So if I just remove this one. Hello, Dirk. How are you?
What is good, Dirk? How are you doing?
I do think that it is 1-0 for Richard and William versus Dirk.
2-0.
Yes. 2-0 now. It's about to be 3-0.
That's about to be 3. When? At what point do we give ourselves that third point?
At 4th 0, maybe, I would say.
At what point do we tell him? I don't know.
Shit.
It's going to be a whitewash.
What are they
Like
talking
a
about?
rugby scoreboard before long.
Yeah, dude.
Yeah, good morning, boys. How was it?
Morning, Dirk.
How are you, Dirk?
Not too shabby. Not too shabby.
That's good. That's good. I was just quickly going through AUD or pound AUD.
Yeah, go for it.
Maybe.
So this downward action that we've had, when it actually really started picking up, was basically, let's say, you do have a little bit of, let's say from here. And that basically took about 106 days for it to drop by 8.7% from where its actual highs were. It was about 338 days, so about just slightly less than a year to drop by 13.7%. In order for it to get up to the highs from that same area, so which we came to test now, is from here to the tops, took 466 days to make 16% gain. So the same distance, effectively. So from that high all the way down to that low, because we didn't even reach that low. So to there. Slightly shorter time frame. So a little bit more volumetric sell-off, or at least in this case, more bearish price action on pound AUD. The fact that we have already reached this price point down here and misclick, okay, reached it and then tried to push up and then it seems to be coming back down, kind of leads me to feel like we potentially are going to try and test it again. Even though we did have this reaction here, we would either have to have a W, in this case where price then starts picking up, and then we can maybe try and get back to this area of consolidation. Now this is on the daily time frame, so it's we're not talking today. We're talking in weeks' time or so for this kind of reaction. But it was very bearish. If I go down to the lower time frame, it is very... What is it with us today and misclicking?
I know. It's literally.
We did go into a bearish price action from roundabout up over here. And we did eventually break above. We did eventually break above this downward channel. Short-lived sideways action and then reinstituted a downwards price action again. So let's say from there. There we go. And then a new downward price action, pushing price lower, eventually broke above it and kind of just sat in consolidation right now. So just looking on the lower time frame, it does seem as though there is a propensity for it to want to maybe try and push up again. So where can we try and test? First and foremost, we do have the gap of Monday, the highs of Monday, which we can contest if we do start pushing up, because right now we do have sideways price action. We do have the lows of yesterday that can be tested, which we've already wicked off of with Tokyo's session, and then we started pushing bullishly. That can also happen. You know, we can start pushing up from here, or alternatively, we can literally just look at this area over here where we are right. The highs of Tokyo, London, yesterday's highs as well, that need to be tested. For me, pound AUD is a little bit flat at the moment. I can see it wanting to push a little bit lower so that we can retest this zone down here, which we had the reaction off of. When was this? This was all the way back in March 11th. And then also having the reaction over here around about the 17th or so. So we can see it potentially go all the way down there and react. However, in order to get there, it needs to break through last week Friday's lows. But right now, it's a bit flat for me. So I don't know if that helps you. Who was it that asked for it? Rex, I don't know if that helps you like long-term and short-term. Right now, a bit flat. I want to see how it's going to react round about yesterday's highs and yesterday's lows. If it's going to break lower, it's going to come and test down here. If it's going to break higher, we do have some price action up here that can potentially come and test. Yo, LJ.
Morning.
Yo,
How we doing?
LJ, what's good, my man?
Good on you, mate. Good on you.
Doing well, doing well. Looking at this price action,
Which
I
price
don't know
action?
what to do. All of it.
Yeah, today's price action is dog, mate.
It's a bit boring, isn't it?
Yeah, a bit.
I'm
Wait, guys,
like long time frame. Sorry, Will.
That's right. I was going to say, I'm going to take this opportunity to duck out because, like, as you can tell, I got a whole lot of chaos going on in my office right now. So I'm going to go and try and organize itself and conduct it a little bit better so I can come on a little bit more optimal, hopefully, and join some more optimal trading later as well. So, you know, I'm going to duck out, grab some breakfast because I feel like that banana just wasn't quite enough.
Yeah.
So, nice one, guys. I'll leave you in the very capable hands of LJ and Dirk. And for those of you who haven't already, make sure you smash that like button, subscribe to the channel. Dude, it's really off-putting how I look at you guys over there and then I talk to you guys over there as well. Anyway, guys, I'll see you in about 2 hours' time. Peace.
Take care,
See you,
mate.
mate.
Just Will. You were saying, LJ?
I was just saying I feel very split. Like lower time frame right now, I can see. Say we talk about the majors, I can see us moving higher. As soon as I look at the 4 hour or the daily, I want to short, which has me very split at the minute. Yes, I know, and that I was hoping we'd sit in that pocket. I was hoping we would sit in that pocket, but we had the reverse headlines last night towards the end of New York, which drove us higher, which I'm very sad about. But
I was looking at all of the predictions
Dumb.
this morning.
Dumb.
I was looking at the predictions this morning, and I was like, oh man, what if LJ was like trying to sell into this area? That would have been amazing. And then I remembered this was the prediction. And I was like, oh, you were correct. Just one day too early.
Yeah, we just didn't hold there because that's where my short was due. But yeah, Trump sucks.
I mean, if you go up there and you look at Victor's prediction, it's a bit far off. It's a bit far off.
Yeah.
Unless we just get the craziest of candles that just does this in the next, like, I don't know, 20 minutes or so. You never know. You never know.
If we got a deal, then yeah, maybe we get there.
Yeah.
But
yeah, maybe. I don't know.
I don't think that's happening.
But yeah, that's close. I agree. It's a bit flat. Mark, he predicted 117.809.
Not too bad.
Which, I mean, he assumed that we were not really going to have much movement between yesterday and today. And, I mean, nobody could have foreseen this, like, weird attempt to, push price lower and then kind of flatten out. So I like this guess quite a bit. I actually did like his guess yesterday. I don't know how you guys felt about his guess.
I mean, I was looking for that downside momentum kind of headline stuff, but I thought we'd stick closer to it, given today is meant to be sort of D-Day. Obviously, Trump came out last night already and said he's going to extend the ceasefire until Iran just responds, which seems essentially indefinite until Trump says yes or no. He's just making his own rules now. It's just whatever, right?
LJ, you have quite the admirer in chat at the moment.
Do I? What's that? How's that?
Bro, Cap Boy. I like you. Bro. And the banana.
My God.
And horse. Are you gay?
Dude, all these comments just like came up for me as you're now saying it. I was like, what are you talking about? Like on the side, I was like,
the Fiverr streams, the Tinder of prop trading.
yeah, there you go.
I mean, yeah. Anyway, so I agree with you when it comes to the majors. They're a little lackluster right now. They were a little lackluster yesterday. Then we started getting some reactions, and I thought, yes, let's get continuations. It just kind of died. I did want to see pound break to try and test the highs of Friday, basically, which was the highs of last week. So I did like the reactions that we had around this area. So Wednesday the 8th, Friday the 10th, we had a little bit of resistance. We broke through on Monday the 13th. We retested it on this Monday that just passed, the 20th. We tried to push up again. We retested it yesterday. So I want to see us attempt to break through this current week's highs, which was the highs of Monday. Try and break through, maybe retest, and try and take the highs of last week. But if we don't reach there, that's fine. Then we can potentially start pushing lower and see if we can come back to this area down here, which was Monday the 13th's low. So if we do start pushing and start creating some bearish price action, that's what I can see can maybe happening. But as of right now, I want to see it break higher, just purely because of the most recent reactions that we had here.
Yeah, that's the only thing I can see it on though is really the pound as far as like from a 4-hour or daily. Everything else looks like we want to turn around, which hence the kind of mix, kind of confusion. So I don't like it, especially when we don't really have data on the docket today, right? It's going to be headline driven. More comments from Trump, that kind of thing.
Trump-driven,
yeah. Which
it's such a weird mark, I was
now starting to get sick of.
Yeah, really. Yesterday, I thought to myself, because I was like a little bit eyeing on shorting euro dollar on Monday. So yesterday I was like, why didn't I do it? But now I'm happy because it's like nowhere.
Well, our Monday setup did come through pretty nicely.
It did. I wanted to say, LJ, before you do that, did you want to have a look at the predictions for gold so I can hop off quickly?
Wait, what's this? Predictions for gold.
Monday's predictions.
You have them on yours, don't you?
I have them, yes. That's why I was like...
Yeah, okay. Yeah, sure. I'll go back
Yeah, let's do that. So
that's fine.
Everybody basically wanted to do the gold predictions. And we had one or two outliers like LJ and Victor that wanted to, do their own thing. The gold thing is very interesting because we had some like crazy. So this is the results. So I'm going to go down to the 15-minute and then you'll see it. So currently Louis is got it right. Like he got it right as close as we could get. Like he was the closest. So Louis, congratulations. You were the closest with your gold prediction. And then Sean was just as close, basically just slightly above you. And then Matizo was a little bit lower. So, but the funny thing to me is like, if we scroll up a little bit and we have Henry has an outlier for 5 days.
Goldilocks.
Like, okay.
The revenge of Goldilocks.
Yeah, the revenge of Goldilocks. Steve Baker 4920, Dirk, which you said 17 basically, so 4917. I understood what you were looking for.
I was looking for the breakout because I thought we are going to, because we are in the squeeze again. I thought if it breaks out, it's going to be violent once again and probably to the upside. For sure, probably it's going to break out today or tomorrow in the afternoon or something.
Yeah, maybe. Then we had Raf, Thunvu, and Samir around 4-9, which also made sense, and it would have aligned with yours. If we got somewhere over here, that would have been great. Will 4861, he wanted this cluster over here, didn't get quite there. Innocent 4844, we never came back to the highs of yesterday. Or the rollover highs, let's put it like that. Kim 4811, a little bit far away. Sean 4798, good attempt. Louis the closest, and then Matizo, Hendricks, and then I think that was the lowest, was 4720. Yeah, 4720. So Louis, congratulations, mate. I'm going to see whether or not I can get you something for this prediction. I'll go and talk to the managers, and then we'll make this a more. We'll make this a more regular thing, along with the trivia, which LJ and myself would be the runners of that, I think. And then we'll get the trivia stuff up as well, and then also get some prizes out for that, because it seemed like everybody enjoyed the trivia. We're just going to bring in a little bit more of different things. I think it's stuff that we used to do in the past, but let's reintroduce everybody back to getting a prize every now and then for...
I agree. I think it's good. Sounds fun.
I see the sunny day. Yeah, sorry. I was just reading something.
I was like, wait, did I crash or something? I was like...
No. All right, LJ, we can go over to your screen, and then you and Dirk can have your little discussion around...
Our little discussion.
Yeah, I might actually go to Dirk's screen. I think I might have to reset, because I think my thing is, because I'm just looking at the chat as well. None of it's loading, so I might actually have to reset.
So your whole EV Max, you mean, or?
Yeah, EV Max is
once again
being
reload.
The way.
And
give me 1 second.
Take it from there.
I'll come back. Okay.
It's also like it always likes to add like hosts that are offline also to the window, no?
So I don't know why it does that. Maybe it memorizes who was on when there was a changeover, and then it
like
just keeps
packet data or something.
Yeah.
Residual. All right, give me 1 sec. Sorry, Dirk, and I'll.
No worries, mate.
But yeah, see you soon, Rich, as well.
All right, mates. I'll see you guys in about 2 hours' time, and then have fun.
We will see you. Wait. So, guys,
wait. I will.
That was
I'll wait with you. I'll wait
Okay,
with
you can
until
leave. I know you
LJ.
have other stuff to do as well.
No, I'll wait until LJ gets back. So,
Okay.
so you don't sit here by your lonesome. You have somebody to talk to.
That's okay. There's always a lot of stuff to talk about, even if the markets are boring like they are at the moment. So let's hope maybe that Trump, says something that is, of course, positive in terms of a resolution of the conflict, long-term resolution of the conflict, so markets can go back to their normal states. Yeah, one thing, the ones of you that were with us specifically during mine or LJ's and mine session on Monday, you might remember that LJ had this idea of, because we got people who asked like, how do I actually measure a change in market regime? And how do we go about this? So LJ and I said, well, maybe we should specifically talk about how our approach to that is. And I started actually just yesterday building like a little tool that can do this for you on TradingView to kind of give you an idea in what market regime is the asset I'm looking at right now actually trading. It's not done yet, so roughly like version 0.4 maybe yet, but basically what I want to do is like on whatever time frame and chart you put this tool, that you can very quickly see, are we in a contraction, are we trending, are we in an expansion, or are we in turbulence at the moment, and then basically adjust your strategy towards this. So when the market is trending, naturally you should like use trend following strategy. On the opposite, if the market is in a contraction, then, mean reversion strategies like the classic RSI strategy, oscillator, momentum type of base strategies will shine. I'm not still completely there yet, just to, you guys out there, give you kind of an update. Pretty sure I'll manage to finish this one maybe by next week, Monday or Wednesday. And then, like always, I'm going to make this available for you guys, open source, and maybe it's something that can help you a little bit. It's not going to be a tool like that gives you actual trading signals, obviously. It's going to be a tool that where you at a glance can see just what is the regime. And from there, you can deduct from my toolbox of strategies what is the correct strategy for the regime I'm seeing the markets trading in at the moment. So something I'm working on right now. In terms of trading, not much. You guys might remember I was looking to find entries into a little euro-dollar short. I still am kind of oogling onto that. What I want to see, however, is first a little bit of a tick lower. And especially I want to see this cross in stochastics here. This is, of course, only technical based. Whenever Trump comes out and says something, you could potentially throw this in the garbage can very, very quickly. As I said, very often in times like this, where markets tend to be immediately news-driven, just going with a technical analysis is kind of like playing 2D chess in a 3D world. So that should not be your only means of judging where the market is. Another trade I'm eyeing at the moment is actually same like on Monday, but we might see dollar yen approaching 160 again. I think this has been a nice zone to kind of short-term swing trade scalp off a little bit. I did this a couple of times already. However, if we go over 160, so for this trade, my entry would be somewhere around 159.90. Stop loss somewhere 160. I have it here with 160.65, and then take your 2R down, which puts us into this territory down here where we have like all this nice wicks sitting. And if that doesn't, if it goes into the opposite direction, meaning like we go over, especially we close around 161, then I'm actually quite confident that we are going to continue higher and that we are finally going to see maybe the market even dollar yen going above 162. So basically a continuation of that carry trade that has been going on for a decade now.
Quite a while.
For quite a while. Quite a while, yeah.
Longer than most people's trading careers.
Yeah, really. It is really like this. It's true. That was already a trade, by the way, back then when I started my trading career. But then it was like more euro-based. So people would take out loans in yen and then invest in euro-based assets, for example, back then. When also was very profitable for a while, but when it comes down and crashes, it crashes very hard, especially especially when people do that in a leveraged way, which, let's be honest, most of the people do. People like to use leverage. Yeah, so that's going on. It's a bit boring, really. I was like scanning earlier through the markets and didn't see really much what to trade. Later, I want to ask LJ again about his opinion on Nasdaq, because like also very typical sideways range, not much going on there. So I'm a little bit afraid the true moves, for example, gold going to 4,917, are going to come this afternoon. And once again, not during our London session or late European session. Did you trade anything today already, Richard? Or are you also sitting on your hands?
No. Today's price action has been very flat for me. And like I mentioned yesterday, I am not the biggest fan of trying to buy when we're at current, like, let's say, all-time highs. I want to see... Say again?
Oh, I'm surprised about this, because, like, historically, if we look at the other 10 times where we had like a series in the Nasdaq of higher highs or green candles, basically, and if you look at the return, going like the 1 year return, it's always been positive, minimum 3%, maximum I think 30+%. So of course that doesn't translate into our day trading strategies here.
Yes, that's basically what it's about for me. It's like my day trading strategy is a little bit tighter stop losses, and generally when we do reach all-time highs, there's a bit more of a pullback and then a continuation. So
I can see that, yeah.
Yeah, so when we're as close as we are right now to basically all-time highs, and we've already had a reaction off of this area where we are now, so 26,720 to 26,746, we've already had reactions there. And if I wanted to buy into this, that would go against my strategy requiring a reaction off of an established area, and in this case, the highs of yesterday, the all-time highs is an established area. I need to see a breakthrough, retest, and continuation before I would enter.
Totally understand this. Look at the Renko chart here. It's basically you have this giant order block sitting up there, And
exactly.
I would be tempted to trade it if we, for example, see something like on as a day trade, for example, or a very short-term swing trade. If we see, where's my drawing tool? After all these years, I'm still struggling with TradingView. I've been a TradingView user since 2021.
I was about to say, you can favorite them and then you'll have a bar at the bottom.
Yeah, I know, but then this stupid bar is always in the way where I don't need it.
Put it right next to your, like the day 5, 1 minute, 3 month, there at the bottom, just underneath.
I've always done it like this. I'm going to do it.
All right. In that case.
Old men yelling at cloud, So I would like to see something like this, maybe a breakout, and then on the comeback, on the retest of what was formerly the resistance, buy there, and then I'm pretty sure, we're going to attack eventually 27,000. If that doesn't happen, it could be potentially something that we see later on, but we would need to also see some kind of good news from the mouth of Donald Trump. My problem is also with Donald Trump. It seems like it's not only me or us that are slowly getting bored with his antics. It seems like the market in general is also getting bored. So the reaction to whatever he is saying in regards to the Iran conflict is not that volatile anymore than it was, for example, 3 weeks ago, where we suddenly would have like crazy movements. Now it's like, let's go 10 pips up or 20 pips up or down in euro dollar and then get back to business. Welcome back, LJ.
Thank you. LJ. I updated drivers as well, so I think I'm good now.
Maybe that helps. So Dirk, just based on that, we were too close to the all-time highs now from yesterday, basically. And like I said, I need that reaction first. And as it is right now, there's no reaction that I can play off of. And that's basically step number 1 of my strategy is established area reaction. And it's not yet reacting. So I'm just going to be patient. I did get decent trade last night during the New York session. It wasn't a full TP. It went down to about TP number 3, and then it just came back, and then it knocked me out of the position at break even. But it was still a positive trade. I got in a little bit later than I wanted to be dead honest. But yeah, it's neither here nor there. The idea is just that for now, I'm going to wait. I'm going to be patient. I agree with both, with LJ and with yourself. You saying if we're going to break through, retest, and then we'll probably then try to go to 27,000. But I also agree with LJ with the sense of there is still that probability of us potentially going lower as well, because when we spoke about it yesterday. If we're going to break, retest continuation. If not, it's going to go lower, and then I'll probably try and sell from highs.
If we go lower, this area around basically 26,420, 450, somewhere around that area, I think that could be a nice area, to look for upward trajectory again.
Yeah, I have 26,400 and 26,350. That's my zone that I'm looking for a potential if we start selling off. If not, obviously, all-time highs, reaction, and continue higher.
Yeah.
Because it's like what we were saying just before you leave, Rich, last night, right? How we were sitting up there, and then we did, come off. That was also part when, during last night, we saw the Aussie run higher. Actually, it outpaced the euro and the pound and everything. And I was in that Aussie trade, and I was sitting there. I re-hedged it again after removing the original hedge. And I was going this is not. I don't know who's buying Aussie. I don't know if this is like a company or something, some kind of someone having to shift something around, because it just went and just outpaced everything else. But NASDAQ, S&P were coming off, so held it. Then we did come down. I wouldn't be surprised if we see a similar deal just now. I don't think we're quite ready. I agree with we'll talk. I'll let you go, Rich. You need to go. Sorry, I'll talk it to. Otherwise, I'm gonna keep going.
You're gonna repeat. You're gonna repeat what it is that you were gonna say anyway.
Yeah.
All right, guys. Enjoy. I'll see you guys in about an hour and a half.
Take care. Get some rest, man.
Bye-bye.
Bye-bye. Yeah, when you went offline, I was just talking about, I was thinking about what some viewers requested, and your idea of market regime, how to identify that. Do you remember what we talked about on Monday?
I did. I completely forgot about it, though.
It's okay. I actually, I was yesterday, I had some time on my hand, and I was starting to put my thoughts on this in code, to kind of get an indicator which doesn't give you signals, but it tells you on the time frame you are taking into consideration also higher time frames. Where are we right now? So are we in a contraction? Are we trending? Are we in an expansion? Or are we in what I call turbulence? And then kind of that helps you to select which strategy from maybe the belt of strategies, the number of strategies I have right now. So contraction, which according to this indicator, and it's not finished, it's version 0.4 or something yet, would be typical. Well, contraction means low price swings, low volatility. This is where mean reversion strategies usually shine. Yeah. Whereas when we are in a trending, of course, you should go with trend following strategies. So something like moving averages and pullbacks to moving averages. And like I said, I probably going to finish that hopefully next week, maybe Monday or Wednesday. Always depends on how much other stuff still lands on my desk. And oh my God, I still need to do taxes. I've been dragging that for weeks already. And
I was about to say I've had a busy day. Same thing. I completely forgot. Same deal. Doing heaps of admin type stuff with
work in progress.
We have taxes here in 2 months.
But maybe we can then open source this indicator and make it an ongoing project, with input of our dear viewers out there. I think that works quite well. I did this also for a bunch of other indicators that I talked about on my YouTube channel, which, by the way, guys, you'll find in the description of this video. So visit it, please. And before you do that, leave a like here and subscribe if you haven't done so already. And for example, I did something for ICT, although I'm not an ICT trader, obviously, but it's kind of cool, you have a baseline, and then people come oh, maybe we should add this and that. And Like it grows into this nice community project where even people who cannot code can still feel like they can contribute, because just because they cannot code doesn't mean, of course, first of all, they are not great traders, but they might have great ideas, And I quite like this. And, depending on how the resonance is, maybe this is something we could do continuously, like in our live streams, to build this up until we have something, where everybody says, hey, this is really useful for me. Just an idea.
I agree. I really like that. In general, I've always loved those kind of group project type ideas. Where you get that kind of collective, like hive mind kind of coming together and doing something. So I like that. I like that a lot.
Cool.
Definitely do it.
Nice.
Yeah.
Is my comment section frozen here? Let me check.
Could be. Mine did freeze before. I think mine's currently updated to what it was.
Let me just see here on.
But I did have that before. That's why I.
No. It's exactly where we are online on YouTube right now. So because it said like last comment 4 seconds ago, and I thought, no, this comment was there for a longer time already. But anyway, then everything is.
The timing thing might just be.
Yeah.
You scroll down and it kind of resets. Yeah.
Another thing I was just talking about, like I have really difficulties finding trades, to be honest. Like this week, it's a bit like, I said from a technical perspective, I would like to see euro dollar dipping down a little bit. That would trigger for me probably a short trade based on this system. But then again, it's like it feels like looking at the market from a pure technical standpoint, is not good at the moment due to the market just basically reacting to whatever Donald Trump is saying. So I want to be careful with this. Other trade that I could mention again is dollar yen. When we approach 160, so I have an order in there at around 159.90 to short it. Stop loss 160.65, because I think if we go above that, we would have that scenario where we are probably going to break out and we see continuation of the carry trade, basically. But that's about the only idea I have. I just mentioned to Richard also, when LJ comes back, I need to ask him where the option expiries for Nasdaq are today, to kind of get an idea if there is a zone to enter, where could it be,
Yeah, so just with what you're saying, I mean, that's one of the other regimes, right? Like how you're talking about, we've got the kind of sideways trading, lower volatility, mean reversion type regime. We've got the trend following kind of momentum driven regime, which is kind of when you get a break of the local sort of structure and a run that has momentum. And then you have like the heavy macro geopolitical dominated, heavy dominance type regime, which is what we're in. Come back in an hour, positive tweet, negative tweet, market will be here or there. It's not down to anything else or any other positioning. Options like gamma levels also somewhat go out the window. They will then gain another pull after, perhaps, depending on whatever the headline is. But yeah, we're now even more so, even through the past weeks of this situation, we still have had like technical trading within the chaos of the geopolitics.
Yeah.
But now that I think some of that chaos was actually producing some of the technicals, right? Because we had very well defined sort of ranges at each sort of top bottom that we've snapped to, and now everything's sort of calmed down. So since the volatility of the geopolitical situation has calmed, the technical structure is also calmed, because the technical / the path forward is now still a derivative of the current geopolitical situation. And then they can go very different ways, and it's very binary, right?
Yeah.
The strait is either open or it's closed, right? It has two very distinct decisions on either side. This is the same thing that central banks are dealing with right now. So then you go back to central banking, that kind of thing, rates, inflation, all of that. No one can really make a proper decision on that either. So you can't even go back to the typical sort of data headlines that we see week to week and try and forecast that. all of it is literally we're waiting for Trump to tweet, which is why it's very much annoying me, because I can see
mega
technical
annoying.
structures sometimes, right? And I know that, yeah, I'll take this, and we'll get a headline that will just blow me out, right?
I'm
Even
actually-
like last night towards, just before you go, like
Yeah.
last night towards, before we finished up New York, we had that drop down, massive spike up, all the way back down, all the way back up again, right? You just, yeah. Outside of picking the extreme bottoms and literally like where we are now, we're kind of in that mid range, and you got to wait for the headline to come through to either pick a bottom or pick a top. You are susceptible with like a toss of a coin to get whipped out in between, or maybe you actually hit it, you get your TP, but again, toss of a coin, you're just as likely to get knocked out the next time.
Exactly.
So, yeah.
I kind of feel sorry for everybody who in this kind of environment is actually starting their trading career, is picking up on trading, because I'll be honest with you, this market is unlike anything I've seen in the past 26 years.
Yeah.
It's really, really crazy, and just because I have all this experience, I know that many times sitting on your hands is the right strategy, because eventually things will trigger, and usually they are going to be very violent and sudden. Like we saw with this gold spike suddenly down here, we might see this in the Dixie or dollar pairs as well. And ironically, these are the situation where you want to enter the market, when we reach this extreme levels, basically. That's a valid strategy, but it's also a strategy that's not very good for beginners, because you'll be very afraid to pull the trigger when this happens. It's like you get the typical feeling of FUD, oh, no, it's going to continue. Or you're going to try to jump onto the train, when in reality the train is about to crash into the train station and then bounce back. What a weird analogy, actually, to make. But it's crazy. And I'm not so sure how to handle this, because like you said, we have these structures, technical structures within this weird situation, but it's very easy to miss them as well, because it gets, I don't know how you handle this, if you put in like alerts or something. For me, it's like very boring to sit here like for 10 hours or 14 hours and just look at charts. I think like, well, I don't want to miss out, of course, when the move comes, so I better put in maybe an alert, when like extreme moves happens, that I'm aware of that. But just sitting here staring at charts is probably just going to tempt me to do stupid trading, and this is what I have seen a lot of beginner traders doing. They're sitting there and they think like, I'm going to miss out the longer I wait, when in reality this is actually a good trading strategy at the moment, to sit on your hands and wait, and not be the victim of another Donald Trump tweet.
Yeah, exactly. So I definitely still have stuff. I always have charts up somewhere, and then whether I'm at my PC, if I am waiting, like I'll have it in the corner on one of my screens, and then doing something else, and I'll just wait. That, or if I have to get up, go somewhere else, like I'll put it on my phone, take that with me, or bring the laptop somewhere whilst I'm doing whatever. Normally for me, obviously it's like nighttime, so I can't really go too much for anywhere else, right? I'm kind of landlocked here anyway. So I try and get all the other stuff done during the day, which does keep me outside of that generally. But yeah, it is. I just try and, I guess, define some of these levels, and particularly right now using cross correlation. So I look at certain levels on euro dollar, pound dollar, Aussie dollar, dollar yen, NASDAQ, then take a further look at like the Dixie. I think oil is kind of to the side now. I'm not really taking much from that. But still, I'll try and level that stuff out. And then as certain assets move towards that, how much are we moving there as a collective? And then I'll go to other types of risk barometers or the VIX or something else to further confirm it. But it's definitely very much muddy. And then eventually I am having to take just either I'm not going to trade at all, or I have to take some kind of position and just include that kind of degree of variance into it.
Yeah.
And that's pretty much what I've been doing. It's worked out quite well. But definitely, like I was saying before, we had more of that technical structure, which I could also apply to it, which was a bit more robust, whereas that has now kind of left the chat, per se. Just like you're looking at gold now, we're in this condensed kind of defined range. It's far more tight. It's not as clean, where we had some of that momentum sort of coming through before. So you to go down to much smaller time frames. The problem with that is, just like we were saying, one headline, toss of the coin,
Boom.
wicked out, then you come right back. So it's definitely
And you
tough.
cannot even say, I'm going to hold my stops tight. You have to factor in slippage, like we said on Monday as well. And so it's really difficult. Like, a good comment here from MGN Talentire. Hope I pronounced that correctly. I think these are really good conditions to learn how to trade. If you can survive these markets, you can survive anything. I very much agree with this. If you are starting to trade right now and you are able to maintain, a green zero on your account when it comes to P&L, you're doing very well already, and you probably are going to have a much better time and see better results if the market regime continues to what we are normally seeing, but who knows when this is going to be.
I was going to say, like, this is really good as well. Schrodinger is straight. Yeah, that's brilliant. I love it. So yeah, MGN is Rich's brother, just by the way.
Ah, okay, I didn't know that.
Sean. Yeah. So, hang on, I'm just scrolling on chat just to make sure I didn't miss anything.
Shane saying, if you're training AI on this current data, maybe you should look to clean out this data before attempting to create a strategy. I don't necessarily agree with this because, if you have a strategy, it needs to deal with any market regime or any market phase, whatever it is. And if your strategy says at the moment, I'm not going to do anything, then, well, you have your answer and this is correct. However, be careful with training in AI on market data. I know there are so many of these YouTube videos out there that show, you just need to download here data on gold or whatever for the past 15 years, and you feed it in an AI, and it will just, based on the open, high, low, close price, maybe plus volume, tell you where the price of gold is going to close tomorrow. It's not. It's not going to do this. And these time series problems are notoriously difficult problems because price does not contain every bit of information, especially not every bit of information you need to forecast how price is going to develop. Believe me, I've done this for 15 years, and I've never seen anybody just purely based on price data able to predict where a price is going to close tomorrow, other than, a coin flip. So usually you end up with something like, I can predict this with 50.2%. Congratulations, you might as well throw a coin, and if you want to go down this road, rather go into something like volatility projections. So based on the volatility we see at the moment, what is the range of price that I probably going to see from this asset tomorrow? And when you want to be maybe at the extremes of these price ranges to try to, pick the trade into the other direction.
I will say I do agree with it, though, cleaning out the data. The thing is, though, that's only really something you can do when you've had that forward activity in the market. So you were around for a certain time. So, for instance, like you were saying, if you got 15 years of gold data where you're around for the 15 years, because if you're going to pluck out this section, you probably also got to pluck out the other sections. And then hence that's also for the type of, if you're going to robotize something or, systematize it, where you've got a kind of semi-automated system, not like fully automated, where you might come in, press stop, then press play, then press stop, then press play, depending on that market regime. which is definitely a valid thing. Now, the other way, like you were saying, might be something to set up a kind of like what you were developing, like a secondary analysis system that will then define the regime on its own and automatically set the bot
Yeah.
on or off,
Yeah.
or reduce exposure or increase
Yeah.
exposure or that kind of thing. I don't think it's a bad idea. I think that's a good way to think about it, though.
Fair enough, yeah. If you have,
Yeah.
but then going forward, the problem will always be, how do I identify in the future when we are in this kind weird of market regime? I just said it, this type of regime I haven't seen through 26 years, like to this extreme that the market is so dependent on a single person tweeting something, saying something, not saying something, tackling out, and so on and so forth.
Wait, who's this? Who are you talking about? Tell me.
I don't know. I've some kind of orange. And so it's like, how do I identify when the next phase like this is coming? This is this discretionary element also that you were talking about. So I'm probably never going to find like a valid even regime detection that is always going to pinpoint the current regime. You always have those overlaps when regime changes where you're going to have some kind of lag until your systems notice or you yourself notice, hey, this is now different. We would say probably as traders, this feels different than the market from last week. So that is like us adapting to a regime change probably. But it's very, very hard to quantify that and without having at least a little bit of lag.
Indeed. And I think that's also an important point to mention. The difference between, because I feel like the word discretion gets thrown around a lot in trading and especially day trading, where people are like, oh, I've got this strategy or approach or whatever, but I have to have discretion, which their discretion is kind of just doing something else. It's not actually discretion. Like true discretion might be, say, for instance, you want to create an algorithm, that kind of thing, trading bots, etc. Very effective. Most trading day to day is done by algos in general, has been for a long time, especially since 1995, the advent of computer processing actually becoming usable, and that's only increased over time, right? Now, the thing is, though, same with we have AI right now, not very good in doing that over like a 5, 10, 15-year period. Trading real time, next either seconds or milliseconds, or next 1 minute, 5 minutes, 15 minutes, they do great because it's all quantitative, that kind of thing. Projecting that future, those future kind of spins and turns and twirls of, people, geopolitics, government, taxation, regulation, all that kind of stuff. AI is going to do terrible, right? It's not very good. And you've seen every single hedge fund manager, bank CEO, whatever, basically talk about this ongoing. So there'll always be that place for that person, but that is true discretion. And you still have the models, but then the discretion part is further out. Now, when people talk about discretion real time, where they have a strat, I think some people say you don't have a trading strategy or approach to the market if you can't potentially put it into an algorithm at all, right? I don't necessarily agree with that.
Yeah.
Because I think there's definitely some chop and change, and especially with things like macro and everything going on right now. But I think you should be able to get a good portion of the way there. And then the other thing with actually trying to do that is, like you said, quality of data, that kind of thing. Like if you were trading real time, yes, that might have fit your strat, whatever. You put it into algo and it takes a trade where you'd actually be looking at the larger block of everything. You're like, yeah, I'm not taking that. So I don't 100% agree with it, but I do agree with it to the degree that you should be able to explain it to a certain portion, right? Most of the way there. And then the rest is that discretion, which is not really discretion. It's more your skill, your operational skill of deploying the theory and turning that theory into execution, right? Whereas often I think people say discretion just means they're actually deciding to go off mark and just do something else.
True, yeah.
I changed my idea.
And this discretion is very often at a subconscious level as well, so there's some sort of compute going on. We're just not aware of that. And that changes and gets, hopefully, more correct as your skill level increases. If you've looked like at the euro-dollar 5-minute chart or multiple time frames for thousands of hours, there is some sort of automation and automatic pattern recognition also going on. That being said, like if we look, for example, at quant traders, hedge funds that are actually trading, we also should not forget, like you said, most of the market is driven by algo trading nowadays, but it's usually not directional trading. So it's very rare that you find like a quant or a hedge fund that says like, we are predicting price is going to X or Y over the next week or 2 weeks. What they usually do is that they do neutral trading, meaning, for example, stuff like a popular example, I think, is statistical arbitrage, that they look like at, let's say, two car manufacturer stocks, let's say Daimler and Volkswagen. And when they look at, like historically, intraday, the correlation between both of those has been at 0.95. So that means like if we deviate to a certain extent from that correlation, I need to buy the one stock and sell the other stock, betting that the correlation goes back. That's a neutral trade. So they'll do something like this, or market making strategies, which are also neutral. You will find no investment bank nowadays where you have like a trading team taking directional trades anymore. Usually the customer comes in with an order. Something typical, like large customer says like, I need to sell 500 million euro by dollars for the 30th of May. For example, give me a price for this. You'll give a price, make the trade. You'll mark in a spread for yourself. Then you need to hedge for the bank the order on the market, hopefully defending the spread you gave to the client. This is how it's done usually. This is how you are. This is mainly all the algorithms that are on the market, specifically also the New York Stock Exchange, where you have then algos exploiting order books, front-running order books, for example. Like I remember that was like very big in the press when this whole Robin Hood disaster happened back then with the Citadel fund, where it came like out that the actual revenue strategy of Robinhood was not, executing trades, because they do that for free for their clients, but selling the order book data to a hedge fund, in this case Citadel, which then has the opportunity to front run your order, earning like a fraction of a cent on every order. But if you do that 1 billion times a day, of course that accumulates for a lot of money. And this is a neutral strategy. You have very, very little risk because you're in and out of a trade within a millisecond.
Exactly. So this is what I was going to wrap that around into. So basically what they're doing is like clipping small portions, fractions of each trade between other people just trading whatever they want to do, right? Which goes back to the whole thing. When you start to see stuff of, say, I think it's approaching almost 80% now.
Yeah.
It's like 77% of all stock market transactions are algorithmic. And I think FX has now gone up from 26% like 4 years ago up to 43 or something, also increasing. And the point is, people talk about algorithms or banks or someone else trying to, stop hunt you and all this kind of jazz or whatever. And you see like, it's just algos running the market. It's not like that. It's more like exactly what you said, where basically they're clipping a small portion of each transaction. That's their business. So it's more like they're like MasterCard or Visa, where every time you tap your card to pay for something, MasterCard and Visa get like 1% of the transaction, right? They don't care what you're buying. They don't care if you're buying a coffee, if you're buying a new car, if you're buying this or that or whatever it is. They don't care. They just get a portion of the thing. And then they want to put themselves in as many pay terminals as possible to get that revenue. But they're not trying to like jip you out of, I don't know, some kind of opportunity or otherwise, right? So yeah. that's all I wanted to mention, which goes back into all of that.
Contrary to this, by the way, the business model of many Forex brokers and crypto exchanges out there is not to earn on the trading fees you are generating there, but they actually take the opposite side of your order. It's called debooking. So, and it's like one of the fundamental conflicts of interest, in my opinion, because that means it's like sport betting, basically. You know, your broker is going to win when you lose your trade. So they have an interest in you actually losing that. This is also why I like prop trading companies so much, because if they are run in a good way, of course, that is, they are actually interested in you becoming successful, because they want to, as a trader, to get access to their money and know, like, okay, my money is in good hands there in trading. But that's a huge difference, you know. If you
like directional bets.
Exactly, directional,
It's completely different.
like poly markets or whatever. You know, it's more obvious there, obviously. But so, despite what like the typical Forex broker or crypto exchange is going to tell you, you know, it's like it's probably not in your best interest. And I know this because I've worked for a Forex broker before, and I couldn't believe that they actually did this. I hated that, really.
Mm-hmm. My first experience with first major broker I actually went to had that problem, and then this was when I was doing well, making a bunch of money, and then I got banned off it. For doing nothing, just making money. And I was so naive. I didn't understand. I didn't think that was possible to be a thing. I was like, surely that's illegal. And then they tried to bring up some kind of stuff with like KYC or whatever. They're like, oh, well, you're still at university. You're like 19. How have you got this? You're doing this well. You know. And so I was freaking out because I had like 170 grand sat in there and couldn't do anything. And I had then been talking to my mum going like, oh, look, you know, I've done it. Like I've cleaned up, rah, rah. And then I decided to drop out of uni, all that kind of stuff, and had all this stuff frozen. And then you get the whole thing with trading in general, especially, 10 years ago or more, 13 years ago. When you have prospects through academia or whatever, drop out of that, you go into this other thing. None of the rest of your family understands it. Then something like this happens. They go like, oh, see, you're a dummy. Like I knew it was some scam or fraud, which it wasn't, I eventually got things out, but
especially if a broker then has like the headquarters are like on the Seychelles or Mauritius or something like this. Nothing against those countries, obviously, but it's very hard, for you to get your money back if the legislation, jurisdiction is on one of those islands.
And that was the thing. Like I went with them because in particular they did have like the Australian licensing, that kind of stuff. But there was the owners got like bought out by another company. So it was with GFT. And then they got bought out by someone else.
But GFT actually was quite a good broker.
Yeah, they were for a while. But there was some other thing with some of their subsidiaries that they sold off for portions of different jurisdictions or something. Because then I later found out, and I got like contacted by like a lawyer for some class action thing that they had done it in various whatever story. But
it happens.
The point is, it happens definitely, and that's why you have to go with someone that is if you have a personal broker, long establishment. Another good point is ideally licensed on or public shares on like a stock exchange, for instance, because typically they're going to have a bit more oversight regulation, like looking into financials, that kind of thing. Plus, if they have the track record, at least these are kind of the things you can do your best without having direct access.
And even that, guys, it doesn't fully protect you. I had last year.
It doesn't. No.
Last year, last story about something like this. I'm usually using a well-established crypto exchange in the European Union because they're regulated here.
Come on, Dirk.
But they are regulated here. You're not going to get into stress with your bank if you have suddenly, withdrawals from that exchange and all that thing. That's important, no? But last year I saw the larger portion of Bitcoin So we're talking about roughly 250,000 euro, which I transferred the Bitcoin to the exchange, and then suddenly they froze them. It's like, and you get in touch with them, and then you have these AI bot kind of support, which goes around and round and round. And I basically had to threat them with, getting in touch with a BaFin. I said, guys, this cannot be.
Yeah.
I've done the KYC to the max level. You see the volume I usually do here. And just because I deposit now a little bit of a larger sum than I usually on a monthly average deposit, you freeze my assets and you don't react like for 2 weeks to anything. And I'm like, prone to the price of Bitcoin going up and down. Now, luckily for me, that was during the time where Bitcoin was still going up. So I eventually managed to get out at, I think it was around about $93,000 per Bitcoin. So nothing wrong with this. But imagine that goes into the other direction. Then you're like, oh, well, thank you. I just lost 50,000 or 100,000 because of you. So you really, this is this side of risk when it comes to trading that a lot of people oversee. So if you need to do KYC, I really do it on time. Don't wait until the last minute when you want to have a payout. It's really, really important, and look into whom you are dealing with. No matter if it's crypto, if it's traditional Forex trading, futures trading, or even prop trading. More than enough black sheep also when it comes to prop trading, as we've seen in the past. But anyway, war stories of two traders here.
Yeah, war story. I was trying to see if I have because I've still got that screenshot of like the first sort of dollars I made back in the day. Anyway, we can move on. I will say, so market has jumped down a bit because, like I was saying, my screen is not shared. Hang on, here we go. So first of all, when we were talking on Monday, Dirk, this is like what we were looking at for euro dollar, right?
Yeah.
So we move up to there and then start coming off.
But I didn't get into that trade.
Yeah, I didn't jump in on the euro. I took it on the Aussie with this guy. And then I end up moving that stop higher. I had various hedges in between this. So we were talking about it yesterday on stream. So I took like a hedge long through, what was the first one? Like there, jumped out of that. Then we came down to there. And I deleted it. There we go. But then didn't keep kicking on. So I re-hedged on that break again, held it up to here. It's net, in profit from where I took it. But I was deciding so we broke these tops and I was like, am I missing something? I couldn't see anything in the market from like headlines or anything. So euro dollar, pound dollar weren't quite running the same way. Like we just came up sort of through here. That was it. We didn't start pushing new highs or anything.
I think I need to look more into the Aussie as well when it comes to spot trading. It's like, it seems like it, back then when we were doing option trading on the Aussie dollars every now and then, it was always kind of this pair, it's like, it's just going to copy anyway, what other major currencies are doing, but it really has gotten a life of its own lately.
Yeah, I mean, it's one of the pairs I've always gone back to since I started trading. Obviously, technically started looking at it because I live in Australia, so you're trying to learn about markets, you go to your home currency, that kind of thing. But it's stuck there because it's quite good. It has a whole bunch of dynamics. It sort of gives you the other portion of like the majors, like I was saying. So you do get a bit more of that volatility, that high beta type aspect, some of that commodity exposure, risk on, risk off with like stocks, that kind of thing as well. And a slightly different interest rate / central bank regime, because Australia obviously didn't jump into the whole QE type situation the same way as everyone else. We did during COVID, like slightly, but that was COVID. But yeah, so you always, even when there's a situation going on, you normally have like a clear divide where other people are doing QE, Australia is not, so yada yada, yeah. It's good. I like it. But yeah, anyway, so overall, yeah, I hit the TP through there. Currently short on this as well, because like we said at the beginning, I was tossing up whether to go long or short. I ended up just jumping in short here. I don't know how confident I am on this. I'm targeting 39. But I can't see much else of a trade overall. So hence when you were talking before, and I was like, because we started dropping down. So yeah.
Well, it looks good. I mean, to be fair.
That and the euro, I wonder if we can actually get lower. Because overall, when I look at, say, looking at this, especially before we started dipping down, this looked like we might start be like trying to make some kind of base and then start to drive higher. If we go out to the 4 hour, let's hide everything else. The 4 hour definitely appears as though we're heading back down for another revisit once again.
Yeah.
Towards the 50 moving average.
I don't know. There's a nice pin bar there.
There is, but we like both sides. If I think about fair value for the Aussie as far as a currency, and the larger macro kind of structure, that kind of thing, I can't see beyond 72 cents right now.
Okay. If I would look at this just from a, first glance, you would show me this chart, not like tell me, what trading pair it is, what Forex pair it is. Just say, hey, you have to decide now what to do this. I actually would be prone for a more long trade here. Maybe on the pullback to whatever the green moving average is there that you have applied at one. And I see your argument though there, but
yeah. So this range is
like
what
a
I'm
long
looking
trade. But who am I to judge? I'm not the magic Aussie trader like you are.
Well, this is where I'm split. Like, I'd prefer to see another run into here, see how we fare below the green and by the blue, which is the 50 moving average through here. We're still sitting around that 10. I can see on lower time frames we are starting to build, and hence we've just dipped down a bit, but we were a bit higher, so that 4 hour was looking a bit different. So,
what time frame are you looking at?
The
daily,
other thing then, that was the 4 hour. Now, if I go to the daily, I mean, this has been a bit of a run, right? So I definitely see more highs up towards 73 later on, but just not yet is basically the point. So similarly on the daily, I want to see another tap, like a third tap on this 10-day moving average here, the gray, before potentially running higher, or we see a breakthrough there, a fallback towards the 50-day moving average, and then start to run higher. So if we think about how much the Aussie dollar has run up already, right? Gone from like 59, we're now up at 72. And from the start of the year, so where's January? Basically here, right? So 66.70. We've come up to 71.72.
Yeah, I remember just like, what was it, like 2 weeks or 3 weeks into the new year, you said already, well, my yearly target has been reached already. Projected for Aussie dollar.
Yeah. Hence, I was, it was my Q1 target got hit in the first 5 weeks, right? So I was definitely looking for that upside, but hence, I don't know how much we can have that further momentum just now. One, it comes into, things like commodity prices, that kind of stuff, start getting hit because of the exchange rate. Obviously, we still have the other portion of the RBA increasing rates right now.
Yeah.
Thus, we've got that sort of upwind, that lift to price, but hence
becoming the new carry trade slowly.
Yeah, well, we used to be before COVID because we always had another 2 or 3% high interest rates in general, and that carried on for a long time since GFC, right? Which is why the Aussie got up above parity with the US dollar.
True.
Okay? But basically, my point is, it goes. So what I'm alluding to is through here, I feel like we need to see a pullback. Similar thing with the Nasdaq. I mean, it's definitely possible. This is where I'm torn, that we could just punch for like 27,400 or so, on the Nasdaq, like just keep running another couple hundred points higher. But I don't find that healthy at this stage. I got to say, this is a bit exuberant. This is almost like we've got something good going on, which now it's better than bad, but it's not good.
It's a bit very resemblance of what we had for a very long time in gold, Remember when we were moving like higher day by day? Of course, we are also always prone to, we want to go long, but eventually there needs to be a pullback because we are deviating too much from the neutral sigma level, for example, if we want to talk about standard deviation again. But then on the other hand, once the trend establishes itself, it's like always prone to continue. Thank you for changing to my chart. I didn't want to show ICT here, but I like to look at it sometimes.
My bad. Sorry.
I like to look at it sometimes, to be honest now, because I like those overflex of fair value gaps and OTE zones. These actually work
Dirk
quite
is
well.
an ICT trader now.
No,
Dirk is an ICT trader.
Don't tell Jonathan, please.
Don't tell Jonathan.
He was like texting me the other day, like, wow, man, your video has like 40,000 views right now on YouTube. And then like a minute later, oh, it's about ICT, that's why. And then another 5 minutes later, so you have switched to the dark side of trading, right?
Yeah. I was meant to bring this up before. Shane said this ages ago. So sorry, Shane. I saw it before. We got talking, but there you are. That was lovely.
Thank you, Shane. Yeah. For those who do not know, my last video was about, to give like a framework how you can backtest your own indicators where you have a source code to, and find like optimal settings for them in a scientific, rigorous way, especially using like split data, train, test, and validation data, and like different methods on that. So, I think nowadays everybody can basically become their own mini hedge fund or quant trader. There are good tools out there. The language models like ChatGPT, especially called Code, in my opinion, are at a level where they can really help you with stuff like this. It's mainly all Python scripts, but I used to code those all manually. And what I was doing basically in a week back then, and I'm quite proficient when it comes to Python, I can do now in half an hour. And I think everybody can do that, but you need a right way to do that, because otherwise things can also go off the rails very, very quickly. So if you're interested in, backtesting or getting a framework of how to backtest your own strategies and indicators and optimize them towards something like success rate, or I would rather go for something like expectancy, for example, short videos, only like 12 minutes on my YouTube channel. And thank you a lot, Shane, for your comment. I really appreciate it. Yeah, let's switch ICT off here and go back to actually charts that matter.
Yeah, I will say I just took profit on my Aussie dollar trade.
Nice. Show us. Come on. Switch to your screen.
Hang on. All right.
Oh, wow.
Oh, where's my stuff not up? There we are.
That was quite some nice candles here the last minutes.
Yeah, so I've just taken it since we've hit the... oops. That was the original thing to go down. I pulled the stop back down through to here then. And I was thinking, do I just hold this the whole way through? But I think we're going to...
Did you close out the whole thing, or did you keep some?
No, I closed out the whole thing.
Okay.
I'm not sure. Like...
It's one of those things, sure, that in hindsight,
not sure enough.
You would have been smarter
to
again.
keep it going. Yeah, because I've still got it open on one account. I've got
okay
on various accounts.
Yeah, I mean, then fair enough.
But I'm also wondering if I close that as well. I just don't like that we sort of had some of these wicks here on the 5 minutes, not quite getting down as far as this. If we look at the euro dollar as well, similar thing, 200 moving average on the 5 minute, and just by that drive kind of candle, at least that's what I call it, like a, pump candle, drive candle, whatever type thing. so yeah, until we sort of break some of these levels, similar deal with the pound, we're not quite getting down to some of these recent sort of lows.
Is
I
that
think I'd
something
want to
down
see
there where you would consider long, like a reversal trade?
flip a coin, Dirk.
Yeah, no, but I mean, it looks kind of
you
like
got a phone call to Trump or
yeah. Hey,
right?
Donald, buddy, tell me something.
Yeah, I mean, if we were talking about typical market conditions, yes, right, definitely. I'd potentially even go long from here, probably, right? That's the only thing. That's why I'm being sort of cautious, step on, step off. Given we can have Trump and just come out and say something else, so like I've done pretty well with these, so I'm happy to take that little bite for now, and then I can re-enter. Like if we come back up, we start to get some more wicks up through here, and start to turn back down. Then I'd happily re-enter, especially now that I've got this portion of profit. Then I can take that window and have basically net or potential profit. Right.
It kind of feels like, whenever you get out of a trade at the moment with a profit, or or maybe you didn't lose anything, at least it's kind of a relief, no? It's like, oh my God, I got out of this trade without the orange man, interfering with it.
Yeah, you're like, oh, I survived.
Yeah, really.
Live to fight another day.
Yeah. We also have uncapped traders. Just wanted to mention I took profits on Nasdaq, a 1-3 risk reward trade. Took those sales. Well done, mate. Great one. 1-3 is a super good risk reward ratio. Always remember, you only need to be successful with what is that, like 34% of the time to not lose money. So you are better off than a coin flip already. Well done, man. Happy to see you posting something like this here on the channel. And yeah, guys, also remember to leave us a like, subscribe to the channel, leave a little comment here, discuss with us. We are more than happy also to look at trades or assets that you are currently trading and at least give our opinion on this. Doesn't mean that you should translate our opinion into a trade, then please. You're responsible for your own trades, but yeah, go for it. LJ, I need to quickly go to a room where the sun does not shine. And
yeah, that's fine. Yeah.
5 minutes.
You go and come back. That's all good. All right, Usman. You're asking, LJ, how to use 0DT option levels and do you use it when the New York market opens? All right, so basically the site I go to for this, pretty simple, pretty easy, optionscharts.io. For you guys that have not seen before, you've got a bunch of stuff for, various like popular stocks, that kind of thing as well. You can go up here, just go to index, depending if you want the S&P, you want the NASDAQ, whatever it is. Say we go to NASDAQ, you go here to options charts. Just the easiest way to look at it. You go to probability distribution, and you will get the center point of that bell curve right there. So 26456 is today's number. If we then go over to the NASDAQ, what was it again? 26456. So that's down about here. So we'll pump that in. 0DTE options level. 546, wasn't it? 456. There we go. Boop. And today's the 22nd of April. Okay, cool. So yeah, basically how I end up using it, let's just try and put it, that's roughly in the middle. 5, 6, there we go. There we go. Here we are. So how I use it is basically coming up towards New York Open. Those contracts are going to roll over. Now, coming towards New York Open, you get a flow of like gamma, like spot gamma, pulling the market towards where the base portion, the bulk of those options are sat, right? So the providers of the options have to potentially fulfill those options. So as you come closer to that, and either options are going to be fulfilled positively or negatively, and they expire, etc., without going into too large of a thing, when price skirts away, the options providers, let's make it simple, dump contracts on whatever asset it might be. As price approaches that level, and they may have to potentially deliver on those contracts, they have to buy up the underlying asset as it approaches that level. So say hypothetically, we're up here, you get general trading in the market, price starts to go down here. The more it goes down here, they have to buy more and more contracts until you get to this level. So as price keeps moving down, it starts to accelerate into that level, right? So that level tends to have a bit of an extra draw because those participants are forced to buy or sell the underlying asset. So the options providers. So similarly, if we go back to past couple of days, we mapped that out when we were, sat somewhere through down here on stream. That would have been my time, about here. And that's where the options level was. And we got that drive up to there. Once that's cleared, those options are gone. And then the market is kind of a bit more free-handled and it can move around wherever it wants. Yesterday, they were sat down here. My time on stream when we jumped on would have been, where is it, about here. Right? So we had that final little push up. There was another sort of top level through there. We ended up hitting resistance, coming towards New York. Bang, we draw down towards the options level. So it tends to happen pretty religiously. It's quite a good thing to work off. I haven't seen it fail for some time. It's not going to work every single day. It depends what other financial data is coming through that might overpower wherever the prior, because obviously people have taken these positions prior to whatever new information might come out. So if there's a new piece of information, that can dwarf positioning as people flip and go the other way, right? But generally speaking, it has a good kind of a pull. What you're looking for is when price is distinctly away from these kind of levels and try and trade into it. So long as you have the appropriate setup, say to the left of the chart or something like some kind of resistance. Say in this, since we're moving bullish, resistance levels or prior head support or something else, some other kind of structure at the same time that would give you confidence in it moving down, then you take that trade. Similarly, conversely, if we're sat down here, you might look for it to drive up, right? And then you lean on that kind of support. So
when I see this, I really am so tempted to revisit my whole, option expiry, max pain kind of strategy that I was doing at the beginning of a year. When it turned out, it doesn't work because I had a flaw in my data, just a little one, but enough that the strategy didn't work anymore. I sometimes, I have a feeling that it is like you said, it doesn't work every time, but that there's a certain threshold of distance where this expiry price acts a little bit like a magnet.
Yeah, it's magnet.
Yeah. This would be really interesting to find, historically, on average, how far in terms of whatever you want to measure it, standard deviation, sigma levels, or whatever, where's the sweet spot where if we are that far away at this time or this many hours before expiry, there is a certain pole or a certain probability that the market is going towards the option expiry level. But it's very hard to quantify that. This is one of those things that I think, at a discretionary level, it works quite well. Here we are again, discretionary. But it's extremely hard to quantify that because you have, it's really hard to define this gray zone, of, where's no need to take action. because systems tend to either be binary, either like, oh yes, it's going to attract, or no, it's not going to attract. Like a zone of maybe is very hard to define in a automatically traded system.
I think that's always where I kind of put in like a relative ATR, right? So if you're sat through here and you're looking for that kind of expansion, like that's pretty realistic, right? Especially when you've got left of the chart, like some other kind of structure put in there. You could use, say, the previous day's close or whatever it might be to get like a pinned level if you're trying to like automate it somehow. And then so long as it's like within relative ATR distance, then you might expect it. So for instance, if we have this level today and say, hypothetically, this is a new bar chart, say we had traded up to like up here, are you going to expect that price is just going to...
That's the thing, it becomes irrelevant when, of course.
Because then we've had the kind of ATR of this and that, that distance, say we just say it's roughly that, we've now okay, let's actually go all the way to the bottom even, right? We add that onto here, price was up here, you've gone an entire distance plus the ATR, the typical ATR from prior, outside of current price, especially in one direction, right? So that typically would mean that something has changed. Therefore, the prior information set that would have been in the decision making of the people that took these prior options wouldn't have been included in that.
Because
something new has changed.
The delta is basically zero on those options already.
Yeah. So hence, I'd use, I don't know, some kind of a ATR or something maybe.
But then again, also, the ATR is probably not going to be the same setting everywhere. It needs to be like also dynamically adjusted to.
Yeah.
Well, it does, I mean, that's the nature of an ATR, that it adjusts to volatility, but it's more the ATR length.
Yeah, you can. Yeah, exactly. There's length, and then as well, having like scrub within it, like a bit of variance, plus minus of whatever the ATR is, that kind of thing. But yeah, either way, to the question, the original question, that's basically how I do it. So the reason being is that market makers holding the options, that kind of thing. Basically, they have to buy the underlying asset as it approaches wherever the bulk of that pricing is. Right?
Is that the max?
Buy more of it. Yeah.
Is that the max pain level you have there, or is that like the average strike price?
Yeah. So this is probability distribution based on all the contracts out there, where the basket is. So it's a little bit different to max pain, because max pain is obviously the best position for the market maker,
the one who sold the option, exactly.
Yeah, and then this is where basically the clustering of participants is. So outside of
that's very interesting, really.
Yeah.
What is that from your optionscharts.io, or what was that again?
Yeah, from that one.
I should look into this again. That might be actually the approach I was missing before.
And then they've got it for, you can go Nvidia, Tesla, Apple, all the popular stocks. Plus
because I was like trying to calculate my own probability distribution. So basically option expiries that are like way out of the money, that basically do not have delta anymore, to weigh them in at basically zero or at a very low percentage to get the max pain. But I can see also maybe that for stock options or index options that is easier to do, because Forex options are over the counter. It's a decentralized market. It's like dealt with banks. So the data itself is a bit sketchy. There are sources for that, but either you need to shell out like something like $5,000 a month to get that information, which I'm not willing to do for a theorized strategy where I don't yet know is it going to work or not, or you need to basically pass through the internet and look for sources there, but they are all very sketchy. So I'm really wondering how much of my strategy there was maybe also not working down to the fact, that just the expiry information, strike information, and so on was not correct. And I don't know what this is based on. Is it like based on on the what is it here, CMT or?
Yeah. So okay. So if we go up through here, this is basically you can read where all the data is coming through. Basically comes through.
So
brain freeze. Through blah 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 blah. CME.
Chicago Board of Trade, or what is it?
Yeah. SIBO. Yeah, SIBO.
Yeah.
Sorry, that's what I was trying to think of. But yeah, you can see how. So, for instance, you do have the max pain levels all through here, right? But you can see how much of a difference there is. Whereas that's set at 26K. And then we go over to options charts. Probability distribution, and we're sat at 26,456. Right. The other way you can look at like expected move that way. Obviously, it's just
this is just normal distribution curve. Okay.
Yeah, pretty much. But yeah, since it's 0 DTE, it works quite well. Now, going beyond that, it might you're going to have variance, that kind of thing. But when you're that close to the expiry, if you haven't taken the trades, like who else is taking it? Other than people trying to like punt something an hour or 2 hours before close, or
I think I need to subscribe to them and do some research. I think that's really like to kind of see, is there like a certain distance where it makes sense to take the trade towards where the probability distribution has the highest probability, basically. Very interesting.
So there's heaps of bits and pieces where, like you're saying, you have to subscribe to get the further
of course,
info, that kind of thing. So
data is expensive nowadays.
Indeed. But if you wouldn't mind, give me one sec to do similar to yourself.
Sure, of course.
In a moment.
See you in a minute, man. Good. Let me quickly look through the chat on messages. I missed gold thing is short in euro dollar right now. Let me have a look at euro dollar. Maybe we go a little bit down. Yeah, why not? I think that makes sense. This is a bit neutral to my liking, but yeah, it's the same picture in a way like we had with dollar yen earlier. I also wouldn't be surprised to see us later, maybe at 170.30, maybe 117.20. Definitely a trade that makes sense. Uncapped traders. You were the one with a 1-to-3 risk-reward ratio earlier that closed out a nice trade here. I just think with me a 70% win rate over 120 trades. So I finally got my edge just working very hard on my discipline. Yeah, discipline is always like one of those key ingredients that many traders, also seasoned traders, struggle with. We like to do things as humans, as traders, that are not necessarily always in the best interest of our profit and losses. In the best interest of our losses, yes, but not of our profits. Nice win rate. Of course, like if you want to judge, am I a trader who's like long-term successful? I would always measure something like Sharpe ratio if you're a longer-term trader, or especially something like expectancy. So on average, how much can you expect per trade to earn? That's like a very good metric in my opinion. Using it for bias. What did this tie into? Sorry, I need to. That was tying into the options. Yeah, and that's the question, really. I mean, LJ does that beautifully, like somehow in his own ways, to kind of know like when should I take the trade, when shouldn't I take the trade when it comes to option expiry. I would, and I'll look into this as well. Another project to add to my list of projects, like if we can quantify this, for example, if we can say something like when Nasdaq moves away X% from the option expiry today, or the most probable from the highest point of the probability curve, let me put it like this, is there like a sweet spot to either go long or short? Quite interesting. What else do we have here? Yeah, that's the thing. I kind of agree with this, honestly speaking. But at the end of the day, guys, it's all going to be dependent on what Donald Trump is going to do again. What else, guys? Yeah, something I'm also working on right now is a auto detection system for harmonic patterns. So that hopefully will come out. I'm not sure if I'm going to get this done by Monday already because it's quite complex, but basically like an indicator that can measure harmonic patterns in a way that they are supposed to be measured, meaning like by the textbook of the people who back then created those. I don't remember, was it Gentley who created harmonic patterns like over 100 years ago? So working on that at the moment. And, this is like how I spend my free time when the markets are doing what they are doing today, where not a lot of movement is there. So, yeah. What else? Yeah, nothing much, honestly speaking. It's
Not much, no.
I'm really waiting. I would like to see some movement. Dollar yen maybe ticking a little bit higher. That's the only.
I find it. Yeah, I was just going to say, I find it interesting that Iran said a little bit ago, received some sign the US is ready to break the blockade.
Okay.
Which they kind of said similar the other day, and then went back against that and said they violated everything and it's all over and we're done. And I don't know. This it's almost like we're outside of the tit for tat kind of game theory thing, and everyone's just like when you get in an argument and two people are no longer even, they went from kind of like talking to debating to then arguing, and it's getting more heated, and then eventually just blows up in everyone just yelling at each other, and there's nothing going on. It's just noise.
I was watching, was it Jimmy Kimmel? I think it was Jimmy Kimmel, like yesterday. And he basically said, what a time to be alive. If you trust what an Ayatollah in Iran is saying more than your own president, what your own president is saying. Which is kind of right, It's like, what they are saying probably is the truth of a status quo right now, what is really going on. And Trump is just going to, basically tell you how great he is. I think he wants to give himself also like one of the highest military decorations there is in existence. So it's basically, putting the badge of honor onto yourself. the ultimate narcissistic move.
That meme of the
exactly.
Yeah, I have no idea. There's also other weird stuff going on. Like I was looking more at infrastructure type stuff, oil refineries and that kind of thing. And there's been like 45, almost 50 of them. They've been blown up or destroyed or set on fire. Yeah. Outside of the Strait and the Iran situation. Sorry.
Now I have to cough also, and that's contagious.
That have been sort of taken out or struck or hit or whatever globally. So we even had the one here so we've got 2 left in Australia. We used to have 8. Now we've only got 2 left. The others have been closed. We've got one in Geelong, which is sort of further down south in Australia. And then we've got one in Lytton, which is not too far away from where I am in Queensland. The Geelong one got set on fire.
Okay.
And there's been a bunch else all over the place. There was also a bunch of Russian refineries. Kind of weird that everyone's refineries outside of the Strait, since we've had the kind of ceasefire, randomly getting sort of blown up or attacked. And then you have to go back to, okay, why, when it's happening all over the globe, who stands to benefit, you pretty much have two people, Russia and US.
Yeah.
So I couldn't say who it is. I could say it's equally as much Russia or the
Shadow
US.
ops. Yeah.
So yes, it's weird. It's one thing when it's like 1 or 2 or 3 or 4. Once you start going 10, 15, 20, 25, 30, 40, 50, now you're like, okay, this is not,
Normal.
from zero
Yeah.
prior. Yeah, this is not normal. And in countries that are sort of standing outside of the current situation. So I don't know. It's very hard. I feel like we're now in a bit of a dark spot. It's hard to know what's actually going on. I think we're only now getting sort of some of the more proper, satellite stuff coming through. Iran has had their internet shut off since the beginning now. I still don't believe it's quite back. So outside of like satellite pictures, like it's hard to even know what the ground picture even looks like. Toss a coin.
Toss a coin.
Toss a coin. I don't know what else to say at this point.
But even like this, I mean, on some, with my very non-existing, understanding of whatever might go on shadow ops or who's going to profit from this and so on and so forth. And it's like I can see Russia, doing something like this, or North Korea maybe, but why would the USA do something like this? We know they are oil independent, from Iran, for example, and other sources. They have Venezuela basically under the umbrella now as well. But still, I mean, the oil price is going up. So either that's kind of, some sort of long-term 4D chess game, which Donald
now
Trump,
they
let's
can
be
sell
honest,
all
is
the oil.
not capable of, and all this is something else that we do not see. And
I don't know. It's really hard. You can make arguments both sides, right? I mean, the US, even though Russia, pumps oil, but the US definitely has more overall capacity, especially after taking Venezuela, and a different distribution and diversity of types of oil, which people forget about, like sweet and heavy.
True.
So light and heavy crude, which are very different, and you need them for different types of industry. Now, with the US they had a lot more light crude and oil. Taking Venezuela, they have a heap of heavy. So they are covered across the board.
Yeah.
So you could argue.
I read that Venezuela has the largest oil reserves in the whole world.
Yeah, they do. Yeah,
amongst other, metals and other minerals, precious metals, and so on and so forth.
Yeah. So they don't have the full infrastructure to just go ham, obviously. But as far as stores, yes. I think Russia is technically bigger in total, but the thing is, there's technically versus what you can actually get to. Obviously, the rest of it's under like permafrost. It's not feasible. So I don't know. The whole thing's sort of getting weird. Like before, a couple of weeks ago, we had, there was sort of a bit more of a sequence of logic and things. Now we're in kind of a no man's land, kind of Mexican standoff. We're in that
I wish
weird
we could go
pause.
back to the situation, where we worry about something like NFP coming out. How's the inflation data going to be going to affect the prices? Now it's all like, who cares? The only thing that's important is the orange man going to be in a good mood when he wakes up, or did somebody say something bad to him and now he needs to get his revenge?
Yeah.
I also read like other. I think that's not true. I opt to not believe that it's true. Like people that are saying like in his fourth term, Trump also already said like, oh, we should like throw nuclear bombs on China. Now he said that as well, up to the point where some general basically took over and said, no, we're not going to do this.
I saw something about that.
I cannot.
I don't know how true any of these things are. It's like, What I will say is, we did have this drive high to get back into Aussie. literally
It's
on this tab.
nice.
Just there. So
Did you get back in?
yeah, I did. Yeah. So I'm gonna sit on that for now. See what happens. If this doesn't start to kick on, we come back to flat, then I'll probably just close it for basically 0-0. But we'll see.
The Aussie market wizard LJ doing some live trades here again.
Yeah. Outside of that, like, I mean, gold, I don't know. Just looking at this bog standard, I would like to see us come higher, to be honest. But can I draw straight? Wait, isn't there a button to make you draw straight? Is that control? No? Pedro does this all the time, where he just... and it makes it straight. I don't know. But anyway, that's good enough.
I didn't even know there was something like this.
I think well, I've seen him do it. I don't know what the button is, but I've seen him do it 100 times, and it's just perfectly straight. There must be a button. I don't know if some of you guys in chat know what the quick command.
Yeah, let us know. That would be actually.
Yeah, I kind of see that gold. Like maybe we get. I mean, it's gold. Like something like this. Move lower, up a touch, down, and then it just pumps right up. You know? But again, it's kind of the same as every other asset. I still lean to the downside. Similarly with gold, they're still correlated. So whatever direction Euro dollar, Aussie dollar, all the majors go, gold follows. So it hasn't broken away from that inverse to the dollar correlation right now.
Man, I need to know this now, how to draw.
Where is it shift, Louis? Where you said... Wait, hang on. Is it actually shift?
Is it really that easy?
No, it's definitely not shift.
It is? No, it's not. I was just accidentally drawing very straight myself.
You just accidentally drew a straight line.
It's not shift.
But yeah, look, if you guys have any other assets you do want us to look at as far as technical setups, structure in general to try and play out whatever happens later, and then obviously
here we go,
and give like an upside downside of whatever's happening.
This is the answer. Alt T to start and then hold shift.
Dude, I just realized I've actually asked a very bad question.
You did?
Because someone's going to tell me some weird key command and it's going to like delete my computer.
The classic one. Alt F4.
F4. Yeah, exactly.
Yeah, I'm going to send you a tool. You know, it's a zip. You unzip it. And but Alt T works. It really works.
It does? Oh, you tried it first? You were the sacrificial lamb? Okay, or are you just telling me this and then I'm going to try it?
Yes. It doesn't look like I actually have a virus. So Alt T and then Shift. And then you have your line. Because I think it switches to the trend line tool then.
Oh, okay. Oh, it does. Yeah, no, yeah. Okay. Yeah, no, I was talking about like the drawing tool. But nonetheless.
But here we go. Learned something again. So thank you, Mr. Ok1.
I appreciate it, Mrog. Also, I love the duck photo.
That too.
Profile picture. Yeah. Nice.
But who wants straight lines if we can have beautiful LJ drawings?
Picasso. Yeah, we can have
Picasso charts. It's supposed to be Pikachu.
How do you know, Dirk?
I have a daughter who's 8 years old, who's like probably into Pokemon. And they have a Pokemon celebration tomorrow at school. So she's been working on, you know, like making paper Pikachus and stuff like this. I never could draw it. Like my drawing skills, they stopped basically in the second grade.
Okay, there we go. We got Pikachu.
Pikachu.
Oh, I can't remember. Is the little black thing on the end? It's not. It's on the bottom half, isn't it? Or am I tripping out?
Don't ask me. I've never seen a single episode of Pokemon.
I think it's on the bottom half. Right, and this is all colored in whatever. But yeah. Oh, we need the cheeks as well, of course. There we go. Now we got Pikachu. It looks kind of evil. Not gonna lie. That doesn't look like a friendly Pikachu. It looks
like the Bart Simpson chart formation. Pikachu formation. But it only happens on the Aussie dollar and yen. That's actually really a good drawing. I agree. I want to quickly answer this question because I've seen that you posted it a couple of times. Apologies for not picking up on this. I think you're referring to this here. It's very simple. There's no strategy behind it. It's just a nice visualization of alignment. So it's a simple standard deviation channel. You just need to search, for example, for this one, standard deviation channel 4x, open source free indicator. And then you can apply those grid lines, which are standard deviations for the current price. And basically, it helps me to get an overview of how is the structure at the moment. For example, if I look at a 1 minute chart, which is the one on the left, on the right, I have a longer term, Renko chart in this case. And what I'm usually looking for, that's the theory. I haven't tested it. I don't have like any data to backtest. Does that actually work? So the theory would be if those two channels align. For example, on gold, we have a trajectory to the downside. On the longer term chart, then I would look for entries into a short position on the lower time frame charts, in this case, 1 minute again. So that, for example, would make sense. The green line being a 2 plus 2 sigma. So you would trade basically the return to the 0 sigma line. So we're talking about like $4 right now. Beautiful, LJ. That's the whole strategy there. But it's a little bit misleading also because the channel you see here, when we were back here at this price, for example, that was not the same channel.
Wait, hang on, Dirk. We're not on your screen. We're on Trumpet You right now.
Damn. Sorry.
That's probably more helpful.
Rambling and going on about it. Okay, I'll start from the very beginning. So it's a simple standard deviation channel. And in this case, this one is called standard deviation channel 4x. Why 4x? Because you can display 4 sigma levels, plus 4 until minus 4 sigma. Sigma meaning one standard deviation to the upside or downside. This is one sigma level. You can also add other stuff here, not going into that too much right now. And basically what I'm looking for is always an alignment. I want to see my longer term chart, which in my case is a Renko chart, aligned with a shorter term chart, shorter time frame chart, which in this case is a 1 minute chart. And the theory is, and as I said, I haven't like back tested that and like put this into a fixed rule book yet, is like if those two align, I want to look for trades, in this case for short trades, which I preferably would take like if we are at +1, +2, +3 or +4 sigma levels. So that you trade with the overall trend, so to say. If we have something like, we look if we have something not aligned right now, not really that much. But basically, if like the 1 minute chart would like be trending upwards, but the Renko chart, the longer term chart, like downwards, there's a misalignment between those, and thus not a pair I would try to scalp at this moment. And we're talking about scalping here because the left one is a 1 minute chart. So that's the whole secret about this. As I said, I use it currently to get like an idea of how trends align on multiple time frames. Where we are again, like talking about regime, for example. So that's a tool that helps me to judge what kind of market regime do we have at the moment. Is everything aligned? Meaning, like, are we trending, or is it unaligned? Meaning, like, we are in a contraction, or we are in turmoil, for example, as well. And I will eventually try to translate this also into a viable trading strategy. But as with so many things, it's on the to-do list, and there's sadly not enough hours in a day and in a week, and days in a week, and days in a month also for me to get everything done.
That's how it goes, isn't it?
That's how it is.
Yeah.
And like when you are younger, like time used to move so slow. And now that I'm getting older, like bam, 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 bam. I mean, can you believe we are like not far away anymore from half of 2026 being over again?
Don't start. Don't start, Dirk. I feel like it was yesterday I was talking about where like NASDAQ, S&P and everything will be higher in Q1, Q2 next year, 2026. Because we've got liquidity coming through, great financial conditions, all that kind of stuff, which we are seeing now, and it's been great, and we just hit new all-time highs. But I was talking about this literally a year ago. This was mid last year.
You better get your forecast for 2027 already ready.
Don't even put me there, right? We're not there yet. Because that felt like yesterday.
Yeah.
Mid 2027 feels like 10 years in the future. I got to say, for some reason, this time last year felt, reasonable. 2027 feels just. Is that even a real year?
Yeah, that too. Yeah.
No way. So, but yeah, Primal. How's trading going? We're pretty slow right now. Not much data. Not much else coming out in general. We pretty much the summary is we're talking about how it's probably going to be once again a very headline-driven day, and so it's kind of again one of those flip a coin, positive headline, go higher, negative, lower. Something else comes out, we go back the other way, back and forth, back and forth. Today is meant to be the sort of D-Day for the ceasefire. Trump obviously came out last night and said he's going to continue the ceasefire until Iran responds. Whatever that means, it seems like a very open-ended, they haven't got everything in line yet, so he's just said that. Whatever's actually going on, who knows? And yeah, like you said, current price action has been terrible. Good, bad, terrible. It's basically, it's just anemic. It's not really going anywhere is the main thing. It's kind of sideways. So maybe if you're micro scalping on a 1 minute and you're going, 4 pips to 4 pips or 5 pips or 6 pips, you probably could have picked up a bit. But yeah, that's about it. So.
Yeah, I see that headline that you were mentioning earlier. Iran received some sign the US is ready to break the blockade.
Yeah.
Whatever that means,
It's like, what?
I also received some sign that maybe it's going to rain tomorrow.
Yeah, I saw a cloud. Oh my God.
And I yelled at it.
But yeah, so we're Rich. I just saw your message.
He messaged you?
Yeah.
What is that? Some secret conspiracy going on there.
No, just about my Trump issue. That's all.
Your what? Your Trump issue?
My Trump issue. Yeah.
Oh, the Trump issue.
My Trump Pikachu. Pikachu Trump.
We should pick that up for Instagram for one of those stories. For sure.
Yeah.
If anybody knows anything about Pokemon, they'll know that there's a super effective and a not very effective combination. So like fire beats grass, grass beats water, water beats fire. So a water attack on a fire Pokemon is going to be super effective, and a fire attack against a water Pokemon is going to be not very effective. So I said Trump uses tweet. It's not very effective.
Yeah, it has been gotten less and less effective.
Yeah.
Maybe that's what we need to send to the US, right?
Ooh,
like they're
my
on
God.
water right now.
Don't do that. You're going
Iran is
to
on land. Now we
cause
need
like
to get a Pokemon battle.
a
Go on.
major national incidents between the USA and Australia, man.
Imagine that.
Propagator of that is LJ.
Yeah, we get World War III because of a Pokemon battle. Yeah. Trump's not happy. Throws out all his Pokemon and
Trumpachoo, I choose you.
gives it up.
I'm actually upset about the fact that you used Pikachu as the Trump base.
You should have used like
Well, it's yellow,
Snorlax or
right?
something.
I don't know. Pikachu's yellow.
No, Snorlax is too strong. Pikachu is too strong. You need a weak Pokemon, mate. Come on. Weak.
I don't know. Pikachu doesn't really do anything, right? Pikachu's kind of docile and just hangs around. And then when you want him to shoot his electric bolts, most of the time through the anime, like he just doesn't do anything, or he's tired, or he's already injured somehow when he didn't even fight.
Yeah, but
it actually ends up being pretty useless.
Swift attack too much, or he evaded, and what? Don't blame the Pokemon trainer or don't blame the Pokemon for what the Pokemon trainer is doing, mate. Pikachu's legendary.
Yeah, fair. Okay, Pikachu
I don't know.
probably
Make
better.
him Elekid, or like I don't know, like
What?
Magmar, whatever. You know.
What is this
I
name
was-
of his red Pokemon?
Hey?
Say again,
Retaka, or what is it called?
Which one?
Because I
Like a red-based Pokemon, you know? Back then,
Raticate.
like Raticate or Rattata.
Ratatata. Yeah.
Yeah. Because otherwise, yeah, I was thinking, what else could it be? I did also think Magmar, maybe.
I remember when
maybe
this was a
this is
trading
a
channel.
trading
We are
channel.
doing our best, Mr. NASMC. It's really, but the market is really not giving us many chances, honestly speaking, today.
And
We saw some nice trades, although, from Mr.
Right here.
Rossi, LJ.
So there, and then take profit down here. Then you're going to go like this.
There
and
were
go-
chances, but you know, in the LJ way, he's like very nonchalant about his trade. He's like, just do the, yeah, I did this, you know, there's a little bit of a position here, a little bit of a position there. Take profit here, take profit there, and yeah.
But yeah, this is what I'm in if we're running. So I TP'd earlier on there because we weren't really kicking on. We had the same. Let's get rid of this so it doesn't keep resetting the chart that way.
Strategy.
Come down to the 200 there on euro dollar. Similarly with the pound, we hit that, didn't push further. Aussie dollar, same deal into that 200 moving average. Again, a higher low through here comparatively. So jumped out of that. I said, if we come back up to here, I'll look to re-enter. Did get that wick. Back in again. There we go. I don't know what other trades there are right now, to be honest. Like there's
Gold looks quite nice.
everything's pretty similar.
Gold looks nice.
Gold
Looks nice.
For a short.
Gold. Looking
Yeah.
at something like this.
Yeah, I'm literally about to enter in once my terminal fires up on a gold short.
Yeah.
Yeah, that makes sense, man. Really.
It does.
It does.
Which is like, really?
Really.
Not to me.
I just want to motivate William, you know, that we see some more action, that we...
Okay.
I was going to say, that's what it is. It's a you jump first theory. It's like
Yeah.
you jump and, you know, if you
is
touch the bottom of the pool, then it's
You know of this of this whole concept of Schadenfreude. Have you ever heard that German word?
Schadenfreude, yeah.
You know, the joy of other people having pain or being
Other
in
people's
misery.
suffering.
We have a word for that in German, which tells you a lot about our
I was
mindset.
literally about to say that it's just that only in Germany can you have a word for that.
Yep. That's why I said it's the Etistup. It's if anybody has ever watched Norseman, they will know exactly what it is. It's the most honorable thing that a Swede can do. Is to do the etterstup. It's when you reach a certain age, you jump off of a cliff. And then the first guy that jumped off the cliff, the other ones were like, I don't want to do that.
Nah, not them.
That's Dirk right now. It's like he's egging William to to take the leap, and then he's gonna then gauge how it goes, and it'll be like,
Hit stop loss.
Okay.
Yeah, I probably won't do that.
No, I'm not that evil. Really not.
Goldie Blocks will tell you not to sell, only buy. Yes, Will, you're going against the teachings of Goldie Blocks.
But to be fair, I think it's not that much down trajectory. Maybe until 4,754. So if you're lucky, you can harvest out another 2.5 or 3.5 pips.
Well,
And then get like double the
you
slippage on your stop loss again.
Are you looking at
Sorry.
futures though, Dirk?
Sorry?
Are you looking at futures? Because we're at 4757 now. Or are you looking at like 1 minute or something?
I'm looking at the 1 minute.
Nah, okay. Yeah, fair. That makes sense.
Because from what I've seen so far, William, you're usually also on the shorter side of like more scalping the markets, day trading the markets.
Yeah. So I'm in a short at the moment now. It's just I'm about $2. I'm break even. I'm like $2 up.
I mean, where are you guys checking the futures information? Because the one that I have is 15 minutes delayed.
Yeah, I think you need to buy the plan if you're using TradingView.
Yeah.
But I'm not. I'm just looking at spot, honestly speaking, and
Okay.
from some broker, which is not ideal, honestly speaking, especially when it comes to the volume kind of side. You're not going to see anything there. What is that here? I have Pepperstone, and the right one is FXCM. Although on gold, I have to say, when it comes to the spot market, it's not that bad. Where it's like really bad is, for example, on the Nasdaq. It's like sometimes like totally different prices than on like the official sources. Like if you look at the Nasdaq from the New York Stock Exchange, for example.
Yeah, I generally just use the IC Markets one as my because it just correlates the closest to the Fiverr's data feed that they have.
It does?
Yeah.
Really? Oh, that's
Yeah, it does.
good, Because I was looking at O under, which is like totally different. Sometimes I have $5 to $10 of price difference between the feeds.
Yeah, so
Well,
I see markets like an ECN network.
Ah, good, yeah.
Right? Not like a spread-based broker, blah, 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 that kind of thing.
Yeah.
What is the symbol for them, for the Nasdaq? US Tech.
On
TradingView.
on IC Markets, it's US Tech, yeah.
US Tech. IC Markets, here we go. Let us switch to that one. My God, yeah, that's much better. I can already feel the profits coming in.
Yeah, no, it's quiet. You guys will probably have to get some music pumping, or it would be good if we had another.
I was just saying earlier, it's like I cannot remember throughout the last 26 years that I've been doing this on and off, like a time where the markets were this weird. So I'm really feel sorry if you're journey, and these are kind of the markets where you have to learn your ropes. But then again, as somebody commented earlier, it's if you survive this market and you can at least get out, with maybe a green zero, not losing money, you probably have a much easier time when finally, hopefully in the near future, the markets return to a more normal behavior.
Yeah, 100%.
We gotta wait for Trump to wake up.
I think he's probably already awake.
He's probably just in the decision room right now. The
breakfast, Diet Coke, and Bitcoin.
whatever.
Diet Coke.
He's probably got to hit a few golf tees first.
Yeah.
To be fair, he's gonna go do a quick 9-hole and then ruin everyone's career.
If there's one golfer in the world where I don't believe he really has like, what is it, like a 0 handicap or something, or +2 or +3, it's Donald Trump.
I am the best golfer in the entire world.
Yeah, he's the best.
Everyone's there like he's got a 24 handicap. He's there like that was scratched. Yeah, of course it was Trump.
Yeah.
That is one sport where I know next to nothing.
Oh, really? I love golf.
Oh, dude,
I don't get to play it very often anymore, but I used to have a handicap of 12 actually. But that was
dude, same as that. I was playing off a 12 at one point.
Yeah.
I can't help but think whenever someone says handicap, I have a handicap of this or a handicap of that, that I think to
I
myself,
had many
this
other
person-
handicaps as well. That is true. But when it comes to golf, it was 12.
Yeah, this person is struggling in life. They have a handicap.
True.
I remember I was watching. I read this golf joke on this golf page, and it was someone goes to park in a disabled bay, and he goes, "Excuse me, you must have a handicap for that." He pulls out his scorecard and says, "I have a handicap of like 9," and it was just one of the worst jokes I've ever seen. It was so funny. I was like, "Oh, wow."
I thought you were referring to this joke of, parking in the handicapped parking spot, and then somebody comes, what is your handicap? I have Tourette, you see.
Yeah, unfortunately, I cannot participate in this level of conversation because my golf knowledge is poor. Let's just put it like that. Just poor. It's not my game, unfortunately. I am a danger. I'm a hazard to other people on the golf course.
Oh, I'm that too, man. Believe me.
Oh yeah, same.
So, what do you call it when you hit the... okay, so I'm looking straight ahead. I'm hitting in this direction. But my ball goes 90 degrees the opposite direction from tee off. It doesn't curve.
It
doesn't curve. It just goes immediately in that direction.
Yeah.
Right?
That you probably... what is it called? You duffed it? Or what do they say? Like, a shunt? Or no, what is it called?
Well, I can tell you that if the most dangerous place for you to be when I'm at
whatever you want to.
The most dangerous place for you to be is not in front of me, but to the sides and directly behind me.
I was going to say, like, all jokes aside, like, when people play golf, they say always stand behind the golfer. Yeah. Don't ever stand next to or in front of.
Don't do that.
There was one situation I literally watched someone hit the ball, and it legitimately went behind them, and I was like, "Wow, you are not safe anywhere near this guy. Like you know, neither front, side, nor back, or like behind. You are not safe around him."
So we have a golf course very close to us, and there was a water tanker just to the right of me. And I'm saying just to the right, like, I don't know, like 25 to 50 meters away from me. Literally to my right. If I turned my head 90 degrees to the right, that's where it was. I was aiming forward. To the left of me was a golf cart. And the golf cart was basically in line. If I drew a line from golf cart to the water tanker, I was smack bang in the middle. Teed off. The ball literally goes, shoo, hits the water tanker. I tell everybody, listen, let me just retry that again. Tee off again, I hit the golf cart. That's all I'm saying.
Brilliant, mate.
Yeah.
I'd say that could be a win. Because, I mean, sometimes you're trying to hit the golf cart, right? You know, you see someone further out and just driving, you're like, hey, watch this.
Wished somebody decided to take a prop bet with me at that point in time. And then I could have made some money from the golf. But other than that, there's no way.
No, look, you just got to take out like personal injury insurance or something. And then we can all go play golf with you, Rich. And we're just going to stand to the sides and incrementally get cleaned up. And then everyone wins.
Yeah, let me go. You know those dog training suits, like the big suits that they run around in. Like, I'll be playing golf for Rich like that.
Face mask, teacup, everything, you know.
Oh yeah, I'll have like one of those paintballing masks on.
All right. Yeah. All right, guys. I have to make my way and get some lunch into my tummy. Let's hope the markets pick up a little bit. Nonetheless, please leave us a like, subscribe to the channel, leave us a little comment, and don't be too worried if we sometimes like to deviate a little bit from just looking at charts. As you can see, the markets are what they are this morning. It's hard to find something besides drawing Trump-a-shoe or having some awesome Aussie dollar trades like we saw from LJ today. And yeah, going to see you again on Monday and going to leave you in the more than capable hands of Richard and William. And as you always like to say, I'm going to love you and leave you. Take care, everybody, and bye-bye.
See you later, Dirk.
Thank you very much, Dirk.
Cheers, man.
Oh, what a slow day, dude.
Yeah, that's why we end up drawing Trump-a-shoe. So, after a while, it's what you're left with. So, I mean, look at this. Like, okay, even with that one drive that we had, what's that? 58 from 66.
8 pips or so.
And this is like, wow, we actually had some kind of movement. All of this is, literally like 3 pips. Got a euro, same deal. Like, this is nada.
Euro's flat.
Yeah.
It is flat.
So
the whole London range is 15.4 pips.
Yeah.
I mean, you can scalp that if you were trying to get like 5 pips, 6 pips kind of like thing, 6 pips scalp. But if you got in at the wrong place, your risk to reward might be a little bit off.
Yeah. That's what we were saying. Like, if you're scalping the, 3-4 pips or something minus commission, spread's going to be basically 0, so that's fine. But if you got in 1 or 2 pips too high, then
oops.
Yeah. Oops. You're not doing much.
GU does look like it wants to start going a little bit lower. I don't know.
Yeah, I'm sticking short. Right, my whole thing through this is I'm biased short. We're just not quite seeing it come through, but I'm going to stick to where I think we're going. Because looking at that 4-hour daily type thing, I still think we go lower.
I wanted to be short in GU, but it just didn't give me an entry. It didn't quite come up high enough, which is a shame. But I want a short GU.
What is the spread at the moment? Let me just have a little look at that at the market.
That's a good question. I don't actually know.
GU and EU on the fivers is effectively 0. EU is 0. GU is hopping between 0 and 1, 0 and 1, 0 and 1. So your spread is effectively 0.
Yeah. Point 1. It's not a whole pip. It's 0.1 of a pip.
Yeah, it's a pipette.
It's
so
point of that, whatever you want to call it.
1 point. So 1 point in this case would be a pipette, and then 10 points would be a pip. So for GU and EU. So, I mean, like you're saying now, like your spreads are non-existent to a degree. It's just it's not there. Which other pairs? Let's have a little gander. Let's see. I've never traded AUD USD, but I'm going to. I mean, AUD USD. No, never. I've never taken a single trade on AUD USD.
Really? Wow.
Yeah.
That's crazy.
To be fair, I don't think I have either, mind.
Spread is the same as GUs. It's 0 or 1, 0 or 1, pipette. So that is as close to 0 as you're going to get.
I have to call my partner. So I might do that, and then I'll come back.
Yeah, sweet, man.
So I'll be hanging around tonight. I got to do a bunch of admin stuff in the background, so I might as well also come chill with you guys on stream whilst I'm doing.
That's cool.
Sweet.
Yeah, so just give me a sec to make that call, and then I'll dip back.
Yeah, no man.
Right.
Yeah, no worries.
Sure. Thank you very much to LJ.
Richard.
What is up, William?
Remember my fans.
GU, mate. Like we had this section up here that I was talking about this morning. This was on Monday. During Tuesday, we did come and retest it after dipping a little bit lower, after coming and testing down here. It's just stuck here. in this range right now. So
yeah, fair, true that. But man, I don't know. GU looks beautiful. But having said that, look, I don't take huge amount of.
GU looks beautiful.
It does. It looks really nice. I was so annoyed when it didn't quite come up to my entry because there was a beautiful 2R setting up. But it just didn't want to happen. So I was like, all right, fine, bugger off then. Which is a shame.
I have nothing at the moment. Like, if I were to try and get into something, I mean, okay, let me just remove the gap, because we know there's a gap there, and also just because there's a lot of stuff here now. But if we're just looking at this range, so we're just looking at the bottom for from the whole of Monday. So the whole week's range so far, Monday through to where we are right now, has been the extremes bottom to top. And we had that the whole of Monday. So Monday's range is still Tuesday's range, is now Wednesday's range. So this is flat. I hate this kind of price action because I'm a trend following trader. So in this case, or a breakout in that kind of like idea. But if I had to trade this, and I look at let's draw a channel basically from the bottom here to the top there. Wait, let's turn it around. Delete that. Let's go from the top of this channel. So let's say from there, like this. That is basically what I would be looking for. So if you can see the red and the green line, that kind of like thing, I would probably try and sell when I reach this red line from after testing the tops. So just pretty much just looking for, as an example, a trade there, have my stop loss just above that area, and then have my take profit either at the opposite end or at the green line, that kind of like thing. And then I would do the same for a buy somewhere over there, looking to either reach the red or the top line there after a reaction down here. So you can imagine we've had the reaction there, price came down, retested and started pushing. I would enter on the retest effectively, and then from the bottom, if price were to eventually make its way down here, react off of it, I don't know how strongly, but let's assume it pushes through the green portion, green quadrant, retest, and then start picking up, then I would get in on that retest as an example, and then just aim to be within these two areas here effectively. That's what I would be looking at if I had to trade GU today, if I was ranging.
Yeah, I do, see, GU looks nice to me. It's EU that's the bit of an issue. No, go.
EU is even worse.
Yeah, that's what I mean. EU isn't nice at all.
Because consider this, we had the low, we had the low, which was already effectively broken yesterday morning. There we go. And we had the high, which was all the way up over there. The high itself just got wicked at rollover, and since then has been producing lower movements from Monday to Tuesday. Tuesday we had the touch in there, and then since then we've been stuck here. So it's like you said, it's even worse. It's horrible.
It is pretty crap, isn't it?
It's gross. I don't like it. I don't like it. I don't like it one bit at all.
It's gross. It's grody.
And I mean the same with Nasdaq as well. We pretty much still have the highs, the new all-time highs from yesterday, which we created here. We retested during the New York session, started pushing lower. We came back into an established area, which we already had a singular, almost a secondary reaction off of. And then we had the second reaction here. But since then, since this morning, effectively, we had a slight little attempt at going lower. We had some flat consolidation, a breakout, a larger consolidation, and then since then it's just been stuck here. So even Nasdaq to me is just untradeable at this point in time, because we're so close to all-time highs. We're struggling to break through the highs of the day. So initial high was created here, created a new high, and then a secondary attempt failed. We're showing higher low, higher low, higher low, but equal highs. So we're condensing at the moment. We're just wedging, waiting for price to either break or to break. And I don't particularly want this, to be dead honest with you, because this is difficult for me to trade.
Yeah, to be fair.
I'd much rather like a deeper pullback and then a turnaround at this point, a slowdown, maybe price action a little bit sideways, and then a attempt at trying to push higher. I mean, to be fair, we're getting a bit of a break right now. We had a break, effectively a retest, and then it seems as though another break. However, you have a lower high in relation to the high of London, another lower high, but you still have these highs of these lows down here, which may be in line to be tested. So you can almost think of this as a trend break, but it's not trending, it's sideways.
Pretty much.
So a little uninspiring. Let's have a look, see what Aya is saying. Please give me a free funded account for me, any amount once. Can't do that, my friend. Can't give you a funded account. I can potentially give you an evaluation account, and then you can prove your trading ability, and then there you go. You can work your way to getting a funded account, but we can't give away accounts like that.
Oh, no.
Primal Light saying I'm not looking at Forex. Sorry. Oh, spread is too wide. Oh, okay. What are you looking at in that case then, Primal Light? Are you talking about gold, or are you talking about indices? What are you looking at?
Speaking about gold is just doing its own thing. It's in its own little world. I was up like 30 odd bucks. Then I was down like $50. Now I'm back at break even, and it's literally consolidating.
I mean, I could have told you that.
Yeah,
Look at the price action today, mate. This is, if you go on to the 15-minute, it's like, yeah, you're making slightly lower highs.
Said that it was going to do nothing, by the way.
Who was that? Louis?
Was it Louis? Yeah, Louis, you bang on, mate. It was doing bugger all. It's doing nothing.
I can't remember who was it that said it wasn't going to do anything, but it's not doing anything. Can probably remove everybody's predictions. Yeah, I mean, the same thing happened yesterday. Just we had this absolute sideways action. Okay, I'm just going to remove some of this, but like we just had this area here as absolute sideways action off of that base area. One reaction back up to the lows of the previous New York session, and then the tops basically of the you can basically say that the tops of that channel, and then we eventually got the break, a bit of a retest, and then a continuation lower. And that's pretty much what we're waiting for now. We're waiting for, in this case, let's just say this is the current range. We need to see something break, like here. And if I'm going to go on what happened yesterday, we're probably going to get price try and come back up here to the highs, and then during New York, then absolutely start tanking. But then you got to be ready to be in.
Yeah.
That's, yeah. You can go on what happened yesterday, but like it's not a guarantee of what's going to happen today. But yeah.
Dude, Now's mind.
It's flat.
It is flat, but could be an opportunity for sells.
It could, but we need a break.
Yeah, true that. Yeah, fair.
We need a break, and the thing is, where do we break? So if you're just going
26,
if you're just going on the London range, it's not all that dissimilar from the Tokyo range.
Yeah, I suppose.
So
yeah,
the
fair.
whole Tokyo range was 85, and the whole London range is 83. So there's just nothing happening at the moment.
Yeah, we just gotta hope New York comes out with something, isn't it?
Come on, Trump.
Oh, I don't know. I wouldn't wish your life away just yet, mate.
Yeah, fair.
Don't know if we quite want to, that's like Beetlejuice. I don't know if we quite want. I don't know if we're quite.
Candyman, wouldn't you say?
Yeah. I don't know if we're quite ready for what that could entail.
Yeah.
Maybe a last resort. Maybe if New York's flat as well, then towards the end of New York, then we'll go Trump, and then see what happens.
I don't know. Me Vlad Lut. Me Vlad Lut. If you're struggling with purchases, you can reach out to help@thefivers.com, or you can use the chatbot section within the hub, and then just kind of see whether or not it's an issue with the payment provider that you're using, because we do sometimes have issues with some payment providers depending on which country you're from. So just make sure that you are using whatever payment method that you are using, that it is allowed within your country to make external payments, let's put it like that, online payments. But if you're still struggling, just reach out to help@thefivers.com, and they should be able to help you. Or, like I said, just reach out via the chatbot, load a ticket from there, and then they should be able to assist you as well.
Precisely.
Rook Mia is asking, are there any active competitions on Discord that we can join? I don't see any on Discord. So the competition, this whole month basically is the Discord community month. So if you go into the Discord and you go and have a look at the community announcements, you will see the current competitions that are active there. You should be able to see that. And then also under the announcements as well, they sometimes also drop some information there as well, like the 2-week gift caption challenge and stuff like that. You can do that there. So you should be able to see that.
I'm actually getting bored of holding gold right now. Oh, my shoulders, man. That kills me off every single day. I feel like a 90-year-old man again.
Aya is saying, I have passed the free trial many times. What free trial?
Well,
are you talking about the competition? Are you talking about the competitions?
Maybe.
I mean, we don't have free trials. We've only got evaluation accounts. So,
bro, give me a free trial. Give me a free account.
I don't know. Look sideways. Which way? Left or right? MGN saying to Rook, there are account giveaways in the Discord streams this month as well. Yes. Sorry, I also forget to mention that. So we have the hosts. We have Victor, we have Richard Wells, we have LJ and Akram, who is known as Void, that have calls Mondays through to Fridays every day. There's a call, and they do give away 20k boot camp accounts.
Got a good boot camp account.
Boot camp account. They do give away bootcamp accounts there for a lucky viewer, a lucky participant. It's all randomized. So if you're in there, they do have their own methods of randomizing the giveaway, but it is all random. You just need to participate. And there you go. Steve Barker is saying, I'll take one. Dude, I saw where your guess was on gold, mate. So I don't know, maybe if... No, I'm honestly just joking, man. I'm just trolling a little bit.
Just getting
we're going to have some giveaways once the Discord month is over, and then we'll start doing it because we don't want to take away from what the Discord is doing. So we would like everybody to get into the Discord and participate there. So once the Discord stuff is over, we'll start doing some giveaways here on the live stream again as well. And we'll also start doing daily giveaways as well. For argument's sake, like we did with the trivia last of last week, when we were just trialing that and seeing how that would go. We'll look at doing giveaways there, or we'll do spins, or we'll do predictions. We'll do something that is going to make it a little bit more engaging, and then for somebody to maybe win a nice little account while on stream.
Let's do a giveaway for the best trumpet drawing.
All right.
Just really weird is I've now moved the stream over because I think it looks a bit more natural when I'm looking at you over there. But I haven't connected my PC speakers yet, which are like surround sound. So it's coming from my laptop. So LJ just spoke. I looked straight over here and then realized you were back over there. I was like, oh my god, well, that's a roller coaster. Dude, I'm getting so bored of holding this gold trade now.
We should do like the best Photoshop of the hosts as Trump or something. That could turn out terrible.
Would you give Dirk hair, or would you have like a bald?
Right. No, it's perfect. It'd just be Dirk with a wig, just like Trump has.
Well, exactly. Yeah, fair. Yes, fair. Maybe if you give him like an even more obvious comb over than Trump already has.
Hang on, Will. I gotta say, Rich, that's not a Pikachu. That's a Raichu. Raichu has the skinny tail. Okay, that's a Raichu. That's not a Pikachu.
It doesn't matter, does it? He said Pika, mother effers. So it's Pikachu. Raichu would have said Raichu. Now, as everybody should know by now, I don't have an artistic bone in my body. I'm not LJ, that has a creative touch. My wife is the creative person. I am most certainly not.
That's fair. That's fine.
Steve is like Penguin. Screw you, Steve, thinking I don't know how to draw. You're right, I don't know how to draw, but how dare you point it out?
Yeah, how dare you quite obviously point out something that's blatantly in front of us. Your inability to draw.
Yeah. I can do many things, but draw is not one of them. Join Richard Wells' Discord streams. They are the best. Yes, indeed they are. I have a bias. Yes. LJ's is second best because they have ducks.
That makes me first best, obviously.
LJ, whatever you do, don't get rid of them ducks.
Actually, this is a good... hang on, because... Yeah, we're on a Pokemon live stream right now.
Yeah.
We're doing
Gotta
an
catch them all, mate.
So do you remember you said about your golf experience, Rich? Yeah, I'm the same, but with like Pokemon and shit. I don't have a clue.
It's okay. It's
you're there talking about Pokemon. I'm there like, yeah, same.
Dude, whatever floats your boat, mate. Like whatever floats your boat.
But okay, I've got a couple things we can show. Also, first of all though, Henry was saying merch giveaway. I think that's a cool idea.
I agree.
I agree. That would be a sick idea.
I don't have my merch on at the moment, but I think that's a great idea.
Because also, give me 1 sec. I'll have to
dip out.
Somehow jump back in to show you. But yeah, because I'm... Anyway, yeah. Give me a sec.
Are you going to get undressed?
Oh.
Shall we start playing some specific music? Oh, he switched off his camera. Anyway. I actually do have a meeting tomorrow morning with Sol. So I may as well just bring that up. Like, let's get some giveaways in terms of merch. That would be pretty cool.
I think a merch giveaway would be sick. I think you guys would love that.
Yeah, I think it would be pretty cool. Having people rock around with, and the hoodies are nice, dude. Like, I really like the hoodie. It's very nice and warm.
I was wearing it today, and I went up to see my brother on the family business, and one of the lads that worked for us, he comes up to me and goes, "Bro, nice hoodie." I was like, "Nice, isn't it?" He's like, "What is it?" I was like, "Oh, it's the Fivers, is who I work with." They're like, "Dude, that's nice." I was like, "Yeah, no, I know." And like, he's not a trader. He doesn't have a clue. And he was like, "Dude, I love that hoodie."
Pooley saying, "Can I have a free hoodie and a cap because I've been with the Fivers for 40 years?" Pooley, you've been alive for more than 40 years. So in this case, we can consider getting you one. Okay.
Pooley was trading with the dinosaurs, mate.
Yeah, he was.
They were called like the Fiversaurus Rex.
Fiversaurus Rex. It was Fivers BC back then.
Yeah.
Maya Trader saying hoodies are the best. Yeah, the hoodies are very nice. Like, I also like the t-shirts as well as the golf shirt as well, the polo. But the polo's a bit small for me. So it's because I've gotten a bit swolled, but it's a bit tight. It looks good, very good material, very comfortable, but still a little tight. How's your gold trade going? Ooh.
Finally, we're getting a little bit of something going on. There we go. Let's bring my screen up real quick. What screen have I got showing? Am I showing my MT5?
Trading view.
Okay. I'll show my trading view first, and then I'll bring my MT5 up. They're right next to each other anyway, so. We're about $60 up at the moment, so. Oh, never mind, 90. No, that was quick. We're doing okay. It's not too bad. I'll feel a bit better when we have a break of this low.
Yeah. So the idea, I think, would be awesome if we can come back down again to Tokyo low, and then from there on decide to potentially come and fill the gap that we made. That would be nice.
Yeah, exactly. So we've got the gap down here, as you can see. Now, we've also got this area here, which is Tokyo low. If we can come down to the gap, I'd be pretty happy. I would be. I'll be out around Tokyo lows anyway, which is about 800 quid for me. So I'll be out at Tokyo lows, but nonetheless, if we can, disrespect this zone.
That zone is Tokyo low. The Tokyo low is 4735.
Where am I targeting then?
You're targeting day open.
No, Tokyo low is 4718.
What time does Tokyo open up, mate? Let's just start there.
What time have I got Tokyo to open then? Tokyo.
Don't ask me. I know my time, but don't ask me about GMT or UTC. All right, guys, I'll just say.
No, that's Toyo Open Country. What the hell is that?
Toyo Open Country.
Tokyo Open times.
So Tokyo is 2 o'clock my time, which is GMT plus 2, which makes it 12 o'clock GMT. So it would make it 1 o'clock.
Fair. Yeah, it should be 1 o'clock then, not 12 o'clock.
Yeah.
Again, so, GMT, it's...
See, this is why daylight savings time is pointless.
Stupid.
Get rid of it.
Get rid of it.
Yeah, so we're looking now... Yeah, Tokyo lows are around here. Technically, I suppose. But the actual Tokyo low itself, like a distinctive low would be here.
Yes, yeah.
Yeah.
And Ashley had the same issue last week.
Yeah,
she took a trade, and normally it's because LJ, you know about this as well, because you've streamed with it quite a fair bit. But she waits for a sweep of Tokyo. And because of the daylight savings time change, she had not updated her actual times on the Tokyo low and Tokyo high changes. So she thought she had a sweep, and it wasn't a sweep at all. So she ended up taking a bit of a knock there based on that. Infinity is right. Right now, trading in indices and commodities is like hell. It's flat, mate. It's a tease the whole way. Bless you, LJ.
I thought there was going to be a second, but I'm good.
There will be a second. Don't worry. There always is. There's never, there's always a second sneeze. It'll come up when you're least expecting it.
Yeah, creeps up on you. But yeah, just like the time zone switch is so annoying, especially with the US data, like high impact data. And they'll be an hour earlier. And if I haven't, locked into that, or just busy or something, or you forget, and you're like, I've done that before. These days,
Same
obviously,
here.
right now I'm up to it, but
yeah,
it's still a pain.
If you get caught off guard, right, and you know in your mind, okay, the news usually comes out at X time. And then you're waiting for it. Then all of a sudden, there's high impact, or let's say volumetric movements happening on a chart, and you're like, what's happening? What's happening? And your trade just goes absolutely wild, either to stop loss or to take profit or whatever. And you're like, what just happened? And then you go and check the chart, and you're like, oh, Sunday had daylight savings time rollover. News came out an hour earlier. Damn. Yes. Exactly. Maya asking, who came up with daylight savings idea anyway, and why?
Why World War One? Who? I can't remember.
It was for productivity, so you get more time in the day to actually go out in the field and manufacture things back when you didn't have
I think it's
LED lights, and be able to just switch the power on and be like, yeah, cool, let's keep working,
Yeah. And it was also to save on electricity and the use of energy like oil and gas and stuff like that during the First World War, when a lot of countries, especially in Europe, were having, how can I put this, restrictions on where their energy was going to and going from or coming from. So that's where that came to utilize daylight as much as they can for all of their productivity. Wintertime, the sun comes up a little bit later, goes down a little bit earlier as well. So you have to adjust the times so that you can work within daylight. And obviously during summertime, there's more daylight, so you would then extend. So that was basically where that came from. But it's a pointless thing now.
Now, I was going to say now it is, I just Googled it as well. I was wrong. It wasn't 1914. It was 1916. 30th of April, 1916.
Yeah, that was smack bang, like just after or just in the middle of the First World War. So
yeah, I would say middle of the First World War.
There's even, I guess the thing you can pull from that is, like, case in point, even right now, we're talking about the war and oil. Who is the most affected? Europe is definitely still one of the most, right? Even to this day. So hence
heavy reliance on that kind of energy, because very few of the European countries produce their own energy. A lot of them. One of the other reasons, like when we had the Russia versus Ukraine war, that escalation, was who was getting what energy source, gas, oil, that kind of like stuff. Who was the actual users of that? And the majority of Europe had almost complete reliance on external energy sources. Like, for argument's sake, I think Germany was almost like 80 or 90% reliant on gas coming from Russia or coming from Ukraine, that kind of like thing. So it's just where you're reliant on it.
Yeah, and then the gas pipeline, Nord Stream 2, went offline, and obviously Germany disabled all their nuclear reactors, which was insane. That was one of the single biggest blunders in the modern or 21st century, like current century. Yeah, that's nuts, honestly. Go figure. Now we have where we are now, right? Like Ukraine would be entirely different if they simply had energy up. Like, it probably wouldn't have even happened, because Russia would have gone okay, this is not going to have the same effect. It's not going to have the same pull. The rest of Europe is going to be fully able to commit resources, so we're just not going to do it. So, yeah, pretty silly. But okay, my taskbar just reset itself.
Woo!
I wasn't sure if I was going to crash once again, but
Must be nice.
as far as this being a Pokemon stream, I guess it is now. We've taken over. I will say, Pokemon is actually pretty good investment here, guys. So
Yep.
don't count it out. All right, you know.
So all trading card games at some point has some sort of rally in its price. Magic cards, in this case, like if you were living in America and you had like the baseball cards or those collectible stuff like what, it's the same with comic books as well. First editions, misprints, all of these things, they add like a portion of value to a thing that was readily available until it wasn't. Until it was like, holy crap, this thing is a limited edition. There was only 10 of them ever printed. And the machine that was used to print them has now since been destroyed. It's like that idea. And it's the same with Pokemon cards as well. It's a collectible thing. It's very collectible. There's a lot of people that collect them. And it's the number one most successful, what was it, entertainment or slash industry is Pokemon.
IP.
Yeah, intellectual property. There we go. The single most profitable and growth-wise in the whole entire world is Pokemon. It beats DC Comics. It beats Marvel Comics. It like all of it.
Beats Mario. Beats everything. Yeah.
Beats Mario. The whole shebang.
But the principle is the same. It's just like you were saying, baseball cards. So since the market's not doing anything, I guess we can talk about some alternative investments just because we can.
Because it's still trading. It's still trading.
It is. Yeah, because that's what I mean. It's still based off the same principle, just like baseball cards or basketball, like Michael Jordan, that kind of thing. And same with classic cars, right? Now, classic cars, like you've got old Ferraris worth 50 million. Now, the thing is, they're probably not going to be worth 50 mil going forward because I don't think anyone of this era really cares about it unless you're a very like niche, like really deep into car history, that kind of thing.
Yeah,
it's not.
I mean, like Rowan Atkinson, Mr. Bean.
Yeah,
his
he crashed
McLaren
F1.
And he sold it for more than what he bought it for. Yeah,
exact same deal. There's a limited number. They're of a certain window. For certain people that grew up with these kind of cars and they want to buy them. And so those old ones from back then, those people have now matured through their lifetime. They have the money that they can pay for it. People that got there later have to buy it at a higher price and it keeps going up. Same principle with Pokemon cards. Like, people are probably not buying, like the old original Bulls, even Michael Jordan. Like Michael Jordan is definitely respected. Tyson, it will always have some kind of value, but I would be surprised that if in 10 or 15 years people are going to pay the same money for those cards, right? Because it's just of an older era per se. Michael Jordan might still have a bit more longevity than that because it's not quite that old yet. But who's buying, like, who's paying over sticker for like a Larry Bird collector card, right? You probably got to be of a certain time. So a similar thing, one of the examples that we've had is obviously crypto and NFTs, which NFTs are a bit silly, but it's the same principle theory of the new kind of thing for whatever relative generation, right? Yeah, exactly. Do not recommend NFTs. Do not buy it, even though they're on the floor right now. Silly. Probably the dumbest thing I have ever seen in my life.
Guys, I've just put my life savings into NFTs. Are you trying to say it's a bad idea?
the only rationale you can get, it's almost like altcoins in these ridiculous coins that are like meme coins.
Yeah,
that,
fair.
now NFTs are so beat down. There might be like one final resurgence where you can buy something for like $5 and it goes to, I don't know, 50 or something, because if there's some random like hype thing that just kicks things off and then it dies instantly. But if you do get that, sell it at whatever reasonable multiple, and don't think it's going to go 10, 100.
Don't think you can
no, just
1,000 exit. You're not.
The problem with NFTs is how replicatable they are. Because any person can literally come out right now and create an NFT. Yeah, whereas if you go and look at exactly what's on the screen right now, a Pokemon card, the baseball cards and whatnot, they're just not replicatable anymore, because the specific printing equipment there's scarcity. The specific printing equipment that was used, the specific ink, when it came out, the misprints, all of those things are entirely unique, and a lot of it is not available anymore. Like, you will not get that same quality. It's the same why a chip, okay, this is a poker chip, but like a coin that was minted in a specific era from a specific metal with a specific press has value. Yeah. Because there's only so many of them available. Can't see what that is. What is that?
10 grams of gold printed with a like Australian coin special.
Oh, okay.
And whatever thing. With,
that's cool.
The camera's not quite picking up, but yeah, it's 10 grams gold, that kind of thing. Yeah, exactly. Which the irony with the NFTs and also altcoins was anyone could create a coin, and anyone could create NFTs, which is also inverse to the entire principle of Bitcoin and crypto in the first place, which was meant to be scarcity, exactly the same, which is ironic,
And people wonder why these altcoins are not outliving or outgrowing the growth that Bitcoin had, as an example. They assume that all of these extra altcoins are going to have the same historic movements as Bitcoin. It's going to be the next Bitcoin.
Yeah.
And it's just not. It's just not gonna, because they think that if they print several billions of this coin, that it's going to be worth, like what was it? Pi? The Pi network?
Yeah, fair, yeah.
Every person and their mother had a Pi thing, and everybody was like, oh yeah, this is going to be as the same amount in terms of value per coin as it is for Bitcoin. Bitcoin still doesn't even have 21 million coins available, because A, they lost a bunch of it, and B, we're not done farming them all.
Pretty sure I've got tons of Pi.
Where Pi is like, you've got billions of coins. Billions. And it's not connected to any asset. How is billions of coins going to be worth anything if you just look, or how is it going to be worth as much as Bitcoin, like a Pi coin, when you have multitudes of it, like you have 10 times more of it? It just doesn't make sense. I think LJ's electricity or his internet just died.
Realized I was leaning and you couldn't see me. So.
No, we could see you.
Oh yeah, you could. Oh, that's fine then. As long as you could.
Yeah.
That's fine.
I'm back. Sorry, my I tried to change screen my trading view, and then it crashed.
Yeah, we thought as much, mate. We thought as much.
Because I was just going to say my trade is going well. So almost.
Oh, nice.
Just because we're talking about Pokemon and whatever, because we're waiting for markets. Now markets are actually moving.
Yes. Why is it moving though?
Getting there now. I think that's just the general direction. Like, I can't see higher highs. Like, I think we're just at the peak. It's like the Nasdaq and the S&P. Like we were saying, Rich. Like, Dirk was here earlier and saying yes, that normally leads to further highs, but near term. You would want, like, I would be concerned if we didn't see a pullback. You know what I mean? If we just see raging highs, like, that would be very unhealthy. So hence, exactly with this, what I've been looking at on the 4-hour and the daily on the Aussie, for instance, that I'm in, I would see this as bearish, right? We've had this massive run up through here. looking at this, like, what are we going to go to above 72, go to 73? No, I only see price coming lower right now. Same with the daily, right? That's been a stormer, right? Absolutely staunch. If we look at this, where's the measuring tool? Yes, this was the lows because of the current situation, but 5.7% on a currency. And this is in, what, how many days? First till...
47 days.
Yeah.
It shows it there to you.
Oh, did it? Okay, there you go. So,
Yeah.
like, that's ridiculous. You know, 1, 2, not 47. No, it's not 47, surely.
It said
Was that
47 candles.
31st to 17th. So 17.
Use the tool again. I just maybe I mischecked.
Oh, it's probably because I dragged it to out here. Right?
Oh yeah, that makes sense.
That'd be why. So if we go here to there,
17 days.
Yeah, 17. Yeah, because I had it sat.
Yeah, you had it there. Yeah, that's why I was like, wow.
Sure. Yeah. Okay. Yeah.
Misread.
Yeah, no, that's fine. Because even whatever Trump, I can't see much better stuff that we get right now from Trump. That's the other thing. As far as, like he said, he's extended the ceasefire. Outside of getting a deal, what else is more positive? Like it's either ceasefire or worse, or above a ceasefire is basically like a deal.
Yeah.
So, and I don't think a deal is going to happen anytime soon.
Yeah, can't imagine.
Who's VP again? What's his name?
The US VP.
Yeah. What's it, that we have all the memes of? What's his?
Yeah.
Oh gosh. Someone in chat. US VP. Yep. I've just lost. I've been doing this all day. I'm just losing words.
I just see his fat face. The fat face.
Yeah, exactly.
When he's like walking and dancing. That's all I can see.
I will say respect that he. Yeah, JD Vance. I will say respect to JD Vance that after those memes started coming out, he did embrace it. That's
he did.
Only thing you can do. If he tried to push back and be like,
yeah, if you show people that you're bothered, they just double down and they'll make your life hell. You just need to kind of like steer into the skid and just go with it.
Yeah. Hang on one sec. Okay. Yep. I took profit on these now.
Yeah, I've just taken out of my gold trade. It wasn't doing what I wanted it to do, so I thought, it's safer to just secure the little profit that I did manage to bag. I was up about 200-ish bucks, but I took out for 100.
Dude, a win is a win.
Yeah, really, literally. Yeah.
The market at the moment, I don't think is like really giving a lot of people a lot of options in terms of getting exactly what we want, but it's giving some movements, and I don't think you should expect rally days worth of profits from a consolidative day. Just
yeah, exactly that. Not all of us can trade like LJ.
I mean, I wouldn't be surprised. I wouldn't be surprised.
I did get out. Yeah, there's plenty of people that can trade like me, I'm sure. I did get out slightly late on this.
We got Baron Trump. He trades a bit like you, LJ, doesn't he?
Yeah, he does.
That's right.
All jokes aside, though, yeah, guys, I'm out of the trade on gold. It was just trading within a range. We had the consolidation. In fact, so you can see here, boom, entered, boom, closed. If you keep my screen up there for a second,
we'll keep it up there.
Trading viewer, and you can see it. There you go. Can you see my trading view? Okay.
Yeah. Very much so.
Cool. Yeah. So as you can see, price consolidated. It looked quite nice. Entered in around here, and then hoping for the dip. We didn't get it, but eventually we did after, really trying to mess about up here in a bit of drawdown. And then, we were coming ever so closer to the lows, and I thought, I'm just gonna adjust it, put my TP down here, low hanging fruit, and then we got to this low here and just started mucking about, and I thought, you know what, screw it, I'm done. Took out about here. No, it wasn't, sorry, it took out here on the wicks, and yeah, I'm out now and I'm done. So I'm done for the day. Like you said, in consolidated markets, sometimes it's just take what the markets are offering you, otherwise the markets will take it from you.
Yeah.
Yeah.
We do actually have two questions. One here from Petrus Maris asking, hey guys, can you please talk about trading, moving averages, support and resistance, trend lines, what you prefer, what works best and worst? Thanks. So your opinion on which one works. I know, William, you're a naked trader. You don't really use them.
I don't use them at all. I do use a moving average on my swing strategy. It's not to show. It's not that they don't work. I don't like them. I find them lagging. The only reason I use a moving average is because it helps me show overall trend within a certain period of time. Other than that, no, I don't use them at all. I'm a complete naked trader.
Yourself, LJ? Which do you prefer?
I use them all the
Which
time.
works best?
Sorry, I half missed the thing. I had to respond to something as well.
The question was, hey guys, can you please talk about trading, moving averages, support and resistance, trend lines, what you prefer, and what works best and worst? Thanks.
Okay, so moving averages, that is basically, if I had to go and take like a naked chart, like I'm just bringing up a terminal, in general, I bring up an asset, the first thing I put on, outside of making the colors look pretty, is put on moving averages. So for me, it will always be a 10, a 50, a 100, and a 200 moving average. And that just immediately gives me the identification of momentum, right? Are we starting to expand that or consolidate? The 10 is typically for the near-term price action, and I don't really use that beyond like a 15-minute typically, until we've had a large expansion of price on like a 1 hour, then I'll use the 10. So the 10 is very helpful for like 1 minute, 5 minute, 15 minute trading, very active intraday, that kind of thing. And then I look at the 50, 100, and 200 as like retracement points. So it's very good for like a mean reversion type instance. Trend lines, very controversial topic in general. Trend lines are not like a hard factor at all, but you can use them once again as sort of scoping out price, and it's not like the trend line has anything to do with anything. But basically what you're seeing is, say if you have a descending trend line like that, you've seen price having a higher high, it's now got a lower high, and if that consolidating, condensing price action is squeezing lower and lower, you can use it just as a basic measure of it went up or it went down. Almost like you're playing sport, like rugby, like someone's running at you, are they going to move left or move right? And so it basically gives you that indication. If you broke above, you're going higher, obviously. Break below, you're going lower. And typically when you have that, price consolidating into a narrower spot tends to propel, right? It gets like a springboard. So it condenses, and then launches after that. And that could be up or down. So that's kind of the way you use them, but you don't use them as like some kind of hard line where this is the head and it's not going to be broken because whatever. It's more just observing price action in general terms. Is it decelerating, accelerating, and eventually come to these kind of almost like we are now, where it's relatively calm, that eventually you're gonna get some kind of breaks. So it's more just mapping out the area around you. It's kind of like scaffolding, right? Where you're just giving yourself some areas to observe, and then you can react from those points.
Yeah, I agree with that, because I don't trade trend lines, but I do draw them up often enough because I like looking at channels. It doesn't matter if it's an ascending, descending, diagonal channel, or if it's a horizontal channel. It doesn't really matter. To me, it's a visualization of what price is doing over a range. And that's exactly what price action is. It's movements in one of three directions. It's either up, flat, or down. Or let's say up, sideways, or down. And it's just visualizing that. You getting a break of a channel is usually, okay, we have been doing this price action over this amount of time. Now all of a sudden we're breaking that norm. Let's say the norm was for the last 100 candles, we've been only sticking within that channel. Now we're busy breaking out of that channel, lower or higher. Why? And then I'll go and look at why is it that we're breaking from that area? Are we close to an area of support, area of resistance? Is it an area that previously was attractive to buyers or sellers? And then I'll kind of like look at that reaction there. It's the same thing with EMAs as well. An EMA, or a moving average in this case, is literally just a visual representation of what price was doing over a specific range. That's all. It's just telling you on average where price was. Now you can use like a moving average to determine whether or not we're getting expansions or contractions in price. Are we moving further away than what was the norm over the last X amount of candles? So if I have a 200 daily average, that is 200 days worth of price, meaning price on average over the last 200 candles was in this area, and we're trading way above that. It just means that there's something that's happened in the market that is causing price to move away from where it was normally trading. So currencies generally trade very close to the EMAs, or I always say EMA, but I meant like moving averages, because in general, Forex assets are trending. Oh, not trending, they're the other one.
They're designed to be stable. Like the point of a currency is that today a dollar is worth $1, tomorrow it's going to be worth $1 as well. You don't want your dollar to now be worth 50% of what it was, or 2 times it was, or 3 times. So that's why the same thing when you see trading strategies or approaches with like influencers, that kind of stuff. It depends very much whether they're trading like stocks or if they're trading something like FX. FX is going to be much more of a stable, mean reverting type asset in general, versus, stocks are going to run up 5,000%, 10,000%, whatever, over a certain time period. And that's fine. That's good. That means the company's doing well. You see that in a currency, you run for the hills. That's bad. This is something has failed. That's like the Turkish lira or something, right? This is not good. You do not want this. So hence the same, in that same vein, the trading strategies and approaches of how you engage in the market are going to be a bit different. And I think that's also where some people get some of the confusion with ICT and this and that, and they try and apply it to stocks and to FX and to commodities. And commodities, similarly with gold, are kind of in between the two. Gold is not meant to just run off in value. Otherwise, there again would be something wrong, that it's meant to be a solid, reliable store of value. And that's what you would call like a bubble, like tulips or something, right? So it's meant to be kind of stable, but go up, but be very gradually going up. Yeah. So not like where you see, I don't know, a tech company or like Nvidia or something that's gone from lower trading around and then just blows up to
parabolic levels,
essentially. Yeah. So I think if you take it in that sense, and then hence with the moving averages, know where to use them, where not to use them. And that's also part of, for instance, with a bunch of indicators in general, where they get a lot of hate because they're being applied to the wrong kind of asset under the wrong nature, like something like a stock in stock markets. They're much more useful in FX. They're useful in stocks, like in indices, over like a daily type period, on like a 50 and 200 day moving average, right? Intraday, still definitely useful, but you have to take in other considerations, put it that way, if that makes sense.
No, 100% agreed. The word that I was looking for was ranging. Sorry.
Sorry, I kept going on. My bad.
No, like you're giving valuable advice, mate. It's valuable advice. So the idea for me has always been, it's always a reference point. So a moving average, a support and resistance point. It's all references. And you can build a strategy around a reference point if you so wanted. But the idea of it is always to have it as a visual representation of past events. And that's all it is. That's all indicators should ever be, is just visual representation of a past event. And it gives you clues as to what is normal and what is outside of the norm in this case. So if you're looking at a moving average, if the norm over the last 20 days was this specific, or 200 days was this specific price, and you start seeing momentous movement out of that area, it should start triggering stuff in your mind. Questions like, why are we moving away from the moving average? What happened over the last 200 days that we were as expected pretty much, and now why are we all of a sudden expanding away from it? Why are we contracting back again to it? And then that's where you start getting the answers. You start looking at that, thinking, instead of, oh, we're gonna bounce off of the 200 EMA guaranteed, and I'm going to build my strategy around that. It's the idea that it's moving away or contracting towards why, and then you go and look at the reason of why it's moving. And in terms of currencies, like LJ already just said, it's the fact that we don't want a currency to be unstable. We want it to be stable. Because if it's unstable, there is some horrific stuff that's happening to your country. It's the same thing with gold.
Same thing with Bitcoin, even.
Yeah, you want to depreciate.
Why people like Bitcoin is not a currency, because it fluxes. It has too high a vol that you can't use it as a robust currency. Even though the principles
at least not a safe haven.
Over time, once it's more mature, yes, eventually. But right now, it can't really be a reliable currency. Put it that way. You can transact in it, but it's not reliable. Put it that way. Yeah.
So the idea, just what I was saying with that is that lost my train of thought. Can't even remember what I wanted to say. Just screwed myself over there.
Sorry.
No. It's all good, mate. It's all good. Anyway.
Either way.
I do like moving averages, and I do like support and resistance, but to me, it's the whole picture. And I don't think that there's one that's better or worse. I think that they provide you a small piece of a puzzle, and you need to take all of these pieces to build the puzzle. But the puzzle itself, the whole picture, won't come into your view by only using them. And you can omit them as well. You can, like with Will, you can trade without them. And you can go purely on price action. You can go purely on candle characteristics and whatnot. And that's fine as well. I just think that as a visual aspect, it's helpful. It's very helpful. You can quickly see a reaction. And the other thing is like exactly like LJ that you mentioned, was that you use them as like a reversion of sorts, like a mean reversion, reverting back to them and then being attracted, and let's see how it reacts when it gets there. If I'm coming to my screen, I'm having a look at my screen and I'm like, okay, we're super far away from an EMA of sorts or whatever. And I can then say, you know what? I'll come back in an hour or 2 hours and I'll have a look again and see how it then moves at that point. It gives you that quick visual indication. Great. I don't have to do anything now. It's still too far away. Go away, come back later. That's what I like about them as well.
Yeah, because basically what you're saying is that given where price is currently, the past 50, 100, or 200 bar closes have been lower. So either you have to take the analogy that, okay, the current close where we are is going to hold and we don't shift, or we just go higher. Or given the data of the previous 200, right? And if you divide the current couple bar closes by that, chances are most likely you're going to move at least somewhat back to that. Now, that will climb, but you're not going to go back to, like the price might sit around here for a bit and then those moving averages keep climbing. But the point is, you're not going to just run off to infinity, right? You are going to have some kind of general pullback to keep in equilibrium, stabilization. That if you didn't have that, an economy, etc., wouldn't work, right? Like nothing would function. It would just be chaos, right? The entire point of markets is to get a collective participation of everyone trading all at the same time, expressing their own views from whatever angle, and deciding what
average it out.
Asset. asset is worth. Yeah, and averaged out across thousands, millions of participants, you get an average price of what gold should be, what oil should be, what corn should be, what cattle should be, what the euro dollar, Aussie dollar, Nvidia, whatever it is. And the collective hive mind of that total brain gives that price. So what you're seeing in those moving averages is a fragment portion of the past hive mind of where they kind of think it's valued. And then you've seen more people come in or people exit potentially to shift price. And then you have to then further decide going forward, is that worth sticking here firm, or is it maybe somewhere in between? As we know, whenever someone says something's this and someone else says it's that, the truth is always typically kind of in the middle.
Yeah.
Right. So they
have to agree at some point.
Yeah. You know, people have hyperbolic opinions. Other people are super depressed on their opinions. The truth is normally in the middle. Like, that's just a good analogy for humans. And obviously humans are operating in the market, that kind of thing, blah, blah, blah. So that's kind of where it comes back to.
Yeah, it's the same analogy of you can't always get what you want. And the thing is, in when it comes to currency as well, we have two sides. Let's call them LJ and Richard. LJ says up, Richard says down. At some point, we're going to have to sit at a table and discuss what is best for both of us. And we find that mean point. We find that, okay, I will compromise a little bit. I'll cut it by 20%, and you compromise, and you'll pick up by 20%, that whatever that kind of thing. And then we start getting closer to what is beneficial to both of us, that kind of thing. Now, obviously, that is a super simplified version. Exactly like Henry said, it's probably what we can call fair value.
Yeah,
it's what both players want. And the thing is, trading is a net zero gain game. Because ultimately, you have two participants. One sells, one buys. One of them is going to lose in order for the other one to make a gain. It is unfortunately what it is. So it's a net zero game.
Yeah, I was going to say, outside of like outside intervention, like governments pumping in liquidity. Yeah. Definitely. And the funny thing that, dude, I've had through all these years, how many people I've said that to, and they just can't either wrap their heads around it or don't understand. I'm like, you realize that when you make money, someone else has to lose. Like, that's how it works. And then it technically becomes a negative sum gain because you still have commissions, transaction costs, that kind of thing.
Yes.
So there's a slight sliver that is cut off. So you got to, if you had 50-50 and everyone made 50-50 to each other, both sides would lose money.
Nothing would move.
Yeah, but both sides would lose money because of transaction fees, right, from the facilitators, right? So both sides would be out. So you have to make above that, just be flat, and then make beyond that, which means they already have transaction fees. You have to cover your own transaction fees, and then they have to lose beyond that. And that's where you get that diversion of the majority of people losing at trading, put it that way, or not succeeding over time, because those gaps expand and compound over time. Like, if you're a good trader, you're going to keep doing that. If you're not doing well, you're going to keep getting hit. And that's why you get that kind of those success / fail rates or whatever, which is also a function of that over like a large distribution of numbers as well. So
I mean, if you consider inflation, if you consider literal foreign exchange, depending on where you are, what currency you're trading in, the exchange rate, and you consider spreads, you consider commissions, all of that stuff, it is understandable why you're in a losing game, pretty much. Even if you are taxes, break. I was literally
so many other things. Like,
you just add on taxes onto that as well, and then you realize that the picture that's being sold is a zoomed in picture, and it's just of a very pretty portion of that picture, but they're not showing you the whole picture. And the thing is, at the end of the day, exactly that is when it comes to edge and stuff like that, where you have to try and find something that works for you. You have to realize that there's somebody else on the other side that's doing exactly the same thing as what you're trying to do.
Doing the opposite.
Yeah, I meant like they're trying to find their own edge. They're trying to implement their edge and trade their own edge. And someone's going to be wrong. And you're not always going to be right.
Yeah,
and
so why is the other guy on the opposite side of you right or wrong and you're right? I don't think most people think about where is their potential profit actually going to come from? Like, why is the guy on the other side actually wrong? Because that's what you're making a trade saying that all the people on the other side are wrong and I'm correct. I'm with the collective that is correct, which is very difficult. And it does come into the taxes thing. Even, not to sidebar, this is a slight tangent, but going back to all the super successful hedge funds or all these famous people that you know, billionaire traders, that kind of stuff in the history books, a lot of them took advantage of taxes as well, which allowed them to have these massive funds. Same like Jim Simmons with the medallion fund, that kind of thing. They had to settle with government or whatever in 2021, I believe, just before he passed away, around that as well. So especially some of those older time thing. Warren Buffett, if he started today, he couldn't do the same of what he did. It would be literally impossible. So
didn't he say so in an interview? He also said so that
I probably I have no idea, but I would assume yes, because it's very obvious. I would say, finance, trading, markets, stocks, all that kind of stuff is very mature these days. Back in the day, it wasn't so much. You had to be very knowledgeable, there's a lot more pen on paper per se.
Yeah, and a lot slower.
Yeah, exactly. So a lot slower. Hence, if you could do that pen on paper, you are way faster because the other guys have to do it, but they are way slower. They're not as clued in. Now then you had computers and stuff come in, just like the bond market that eventually ended up in the 2008 financial crisis. But yeah, this stuff was very different back then. So the same way, this is why I hate the whole guru sphere, because I mean, we've talked about this before. I saw
we've spoken it to death. I mean,
to death. I just saw this comment before. ICT concepts, look, doesn't make the money from trading, makes it from selling like a course and this and that.
He's a mentor and he makes money from mentoring.
Yeah, he's a mentor, which is not a problem if it actually works and that kind of thing. But don't pretend as though it's different, because then that's another matter.
Once again, it's never been
ICT is that he pretends to be something he's not. There's nothing wrong with being a mentor. There's nothing wrong with earning most of your money with being a mentor. I know a few gurus. They are fantastic traders. They earn some good money in the markets, but they have come online and they've made videos saying, I make more money with my mentoring or my teachings, my courses, than I do with trading. However, I'm still a trader, so they're very open about that. The issue I find with like people like ICT is they're like, this is the 100% holy grail. This is the brand new technique, next level trading. It's like, dude, this is the exact same. It's just dressed up differently.
Yeah, it's the same thing as like boxing coaches. I can't remember if it was, I think it was Mike Tyson or it's either Mike Tyson or Muhammad Ali. Like his main coach, I forget. Like I haven't looked up or recounted this stuff in a while.
Yeah.
But one of them, basically, they tried to go into boxing themselves, did pretty well, but weren't good enough to go all time, put it that way. I think one of the guys, I forget his name, had some injuries, whatever, went back to coaching. He was a good boxer, but not pro, right? But then coached these guys to be all-time GOATs, right? And he's the best coach hands down, nothing else. I think he's passed away now. Oh, God, I feel bad. I feel disrespectful that I can't remember his name. But the point is, sometimes you can be better at coaching or teaching than actually executing the thing yourself, because there's a lot of different attributes there overall. But the thing is, the honesty aspect, I suppose, like being transparent and that kind of thing, like we're saying. So, you know, like he could have just taught all the normal stuff and not tried to sugarcoat it in a new manner, in like as though he created something and just go, this is...
But I think that was the selling point, is the fact
that's
that
obviously what blew him up. Yeah, because
it's
it's different. And, yeah, of course.
It's the same as the example that you gave about Mike Tyson or whomever, whose boxer you were talking about. It's the same as Usain Bolt. Usain Bolt, widely considered the greatest short distance sprinter on earth. Multiple world records. The guy's an absolute legend. He was trained by a guy called Glenn Mills. Okay? He's also a Jamaican sprinter, but never, ever, ever to the same, like, pedigree as what Usain Bolt was. Now, the thing is, he himself was also a sprinter at a young age, but he never reached that, like, level. Like the Olympian, like, fastest runner in your country kind of like thing. But what he had was he looked at running, sprinting, differently to everybody else. So even though he wasn't a great sprinter himself, he knew how to teach other people how to be sprinters. And the thing is, just because you don't know how to do a certain thing doesn't mean, or let's say just because you can't do it yourself doesn't mean you can't teach other people how to do it. That's mentors. And then SRS, please stop spamming. If you're going to spam one more time, you're going to get a timeout.
We can tell you soon. Don't worry. Just don't keep posting it, and we'll answer you. Don't worry.
Okay. Can we give SRS 8827 a timeout, please, Remy?
And just before you keep going, Rich, as far as the market's moving right now, there was another ship fired on by Iran in the Strait.
Yeah, I just saw that as well now.
Which I'm now sad because I already exited.
Is that why we had a bit of a spike on gold just now?
Yeah, I exited my Aussie dollar short already, and it's gone.
Yeah,
full TP.
Yeah, it's a third ship that they've attacked now.
But wait,
do we know where the ship's
is this? Huh?
Say again.
Do we know what ship it is? Is it an American ship as well?
I don't know. It's just a ship.
Oh,
No,
okay. It's just a
third
ship.
But the point is, Iran did it. So I think that's all that really matters. Like,
yeah, fair.
yeah. But I gotta say, Rich, with my prediction, we might actually get there. I know you said London. No, come on. Hey, give me plus minus 2 hours, you know? Like,
just because you are staying on longer than your normal stretch doesn't mean that you get preference, because I love you, mate. Like, I love you to bits, dude. But when Dirk was here. Dirk's not here. Sorry, mate.
Look, you got to commend.
Dude,
pretty good.
I gave kudos, mate. I gave kudos this morning. I was like, wow, if LJ had this as a target for his trade, that would have been freaking amazing. He would have reached his 71.36. Amazing.
I did. I hit it last night, and then we came up, and I hope today we'd have, or last night, like we'd have a slight retrace, but we'd higher, but then we'd retrace back lower earlier than we have. So, but yeah, I'm just talking rubbish. Don't worry, I'm just having
I get it. Like, it's a win, dude. Like, I'm like sitting here, you're like, I wish, mate, I wish. You were at least a lot closer than Victor was.
Yeah. Look, I love Victor, but I don't know what he was thinking with that. I'm sorry, Victor, if you watch this.
He is in the background right now.
Background. I don't know what you were thinking, man. Come on.
He did go through his thoughts there.
Yeah.
The funny thing is, he's probably going to be right within the next few days, and anyway, because that's typically Victor. This is very right.
If we get a ceasefire, he's right. Definitely, I think we'll get that far. But
yeah.
For how long is another question, but do we get that far? Yes, I would say.
Yeah, good. I think so. I definitely think so. Will, are you planning any GU trade?
I've just answered him on TradingView. Yeah, I'm just letting you. I was just locking in on the analysis at the moment, just trying to understand what's going on, looking at the different news as well. And I was like, okay, what's going on here? I thought I'm just going to leave you guys chat away. And I started catching up a little bit with chat, and that's what Azrael's question. So, yep, Azrael, I was looking at a GU short, but it didn't tap me in, unfortunately. It missed my short idea. But it would have been a full TP, which is nice. But it's just not nice that I didn't get tapped in. You know, it wasn't far off what I wanted to look at as an entry either. We were around about... Why won't it let me do this now? No, wrong one. There we go.
Also, we did talk about ICT.
About 1.4 pips away, Azrael, from my entry, or from where would it be my entry?
There was actually a very, very good question earlier, and sorry about it, it's Vinny. I saw it, I marked it, and then we went on a tangent. I would love for us to just answer this, because I think that this is a real genuine, let's not call it a cry for help, but like a person rocking up and saying, hey, listen, I would love to have your advice. So, hey, Rich, Will, and LJ, y'all got a question. Been 3 weeks since I placed a trade on an account that I recently came out of an 8% drawdown, but have lost my confidence in trading. How do I get it back? Now, just some context. It's Vinny had profits in this account, and then let's call it the Trump regime recently kind of just led to a lot of his trading not going the way that it normally did. And then slowly working his way out of drawdown, that kind of like thing, and then lost his confidence. I think it was, you spoke about this like maybe 2 weeks ago or something, and then we said, hey, listen, just stop trading for now, go to a demo account, and then we'll see. So this is now, how do you get your confidence back?
I have my answer, but I want Will to go first. Okay, I would always have an answer, so...
Yeah. Best way to get your confidence back, you know, look, we've all been there. First things first, you know, 2-3 weeks without trading, make sure you are keeping on top of your minimum trading days. Make sure that you do place a bare minimum trade, open and close it, just so you keep your account active. That's the last thing I want for you, is to be losing confidence in trading and then actually end up losing the account due to the fact that you haven't placed a trade. However, it may not be a case of that you're losing confidence in trading. It may be that you're losing confidence in your strategy due to current price move, due to the current, you know, what's going on, the current affairs, should we call it, you know. So it may not be a case of it's your, you know, it's not necessarily a case of you're losing confidence. So don't beat yourself up over potentially a strategy that doesn't work during unpredictable times like this. I'm not the most profitable trader right now either. I have my days, and thankfully my risk to reward is an appropriate level now, and my risk management is an appropriate level where I can survive the markets, and I'm hoping that we can pull out the other side, and then I can put my foot back on the gas and earn some proper money. Now, you know, when it comes to staying in the market, best thing you can do, don't trade the account. Hello, Victor. Don't trade the account. Leave it. Put it to the side. Make sure you're placing your minimum risk trades just to keep it active. Move over onto a demo account. Don't stop trading whatever you do. Stay on the account, because the minute you stop trading, you will become nervous to place a trade, because you'll spend so long out. It's like if you don't go to the gym. If you don't go to the gym for a week or 2 or 2 or 3 weeks, you go back to the gym and you're like, oh, this is a slog. You know, it feels like you're carrying like a ton of bricks behind you, and you're pulling a sled. You know, it becomes really hard to do the things that you were disciplined to doing. You know, motivation will get you so far, but when you're lacking that motivation, that's where discipline kicks in. Keep your discipline up. with your trading account, just move it over onto a demo account. Keep trading, keep risking your appropriate, keep doing what you would be doing. And if you're losing, that's absolutely fine. Just keep building that data, and then just put the other account to the side, and you will find that you will either come out the other end, or you would have completely blown the account. If you would have completely blown the account on a demo, just say, yeah, that's absolutely fine. How could I have not have done this? How could I have reduced the chances? And then you can look at, okay, I could have risk managed a bit better. I could have lowered my risk. So what you're able to do is what you're doing is teaching yourself risk management strategy and risk management optimization instead of profit optimization. So during times of standard volatility, during times of normal trading, what we're looking for is price optimization in a way that we can try and find the best profits possible. During times of market volatility and turmoil like this, where it's super unpredictable, you've got Trump tweeting God knows what garbage, you've got potential war outbreaks. So the best thing what we can do then is risk management optimization, and I think that's what a lot of people fail to prioritize and realize is a bit like the market's being secular, a bit like the market's running in cycles, so should your strategy. We should focus on, optimizing our best risk to reward, our best price, trying to get the most profits. But then when the markets cycle in a direction that isn't optimal for our strategy, the sooner you can realize it, the sooner you can shift from getting the best profits to getting the best risk management and the best losses. So that's what I'd be doing if I was you, Vinny. Do not lose confidence in your trading. Bro, honestly, I don't know a single trader at the moment that hasn't taken a bit of a hit from Trump and his shenanigans. I don't know a single trader that's just 100% profited their entire career. We go through peaks and troughs, there's pullbacks in life, and that's what, that's usually just before we get that break of a higher high. So yeah, Vinny, honestly, bro, don't stress over it. Don't beat yourself up over it. Just ask yourself and understand, how can I now optimize my risk management? Best way you can do that, move over onto a demo account, keep trading how you would according to your strategy, and make sure you keep your account active.
Sound advice.
That would be why.
I think I gotta say, okay, so what I'll say is that, dude, don't lose any confidence. Like, why?
Yeah, 100%.
Right? No reason why. Like, it's obvious. Okay, so this goes back to the whole regime thing that kind of what I was I actually said we should do today. Dirk came in with it, and I completely forgot because I've been busy. So it's my fault. But this was the exact point. So identifying certain regime shifts and understanding when you're in one or the other or the other or the other, right? So I would not take a single confidence hit right now with your trading, given what's going on, right? It's clearly a very, 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 not even very, it's 100% macro dominant and driven. Like, that's it. Pure and whatever. If you happen to find certain technical structures based on like highs and lows of the expanse of the volatility that we've had, and you've been able to take trades, great. But what is driving the market right now is 100% entirely macro. So if you've then had a situation where your approach is not performing right now in that kind of macro environment, and that's not your wheelhouse, you shouldn't be surprised. That should not hit your confidence because it's outside of what you had defined. So I would say the main thing is to identify when that has changed to that macro dominant type situation, and then either sit on your hands, don't trade, or be very, very selective in between that. So instead of trading actively, you go very selective at the tops, the bottoms of once the macro kind of situation. Right now it's headlines and tweets, which is also very weird. Just like we had Dirk, before, he's been trading for 26 years, worked for family offices, trading billions of dollars, right? And he has been saying as well, this current environment is something he hasn't really seen. I would say the same. This is This is very odd. It's not exactly unexpected per se, but it's very different. It's very odd. We don't have a prior comparison. So within that, if you have that, trade the tops, the bottoms, trying to trade intraday. That's one of the things where you might just have to sit aside. That's how trading goes sometimes with certain things. Certain years, certain periods, you'll get that, and you'll have to kind of take just a low month or maybe 2 months, right? And then hence with your trading, you have to set yourself up that you're not relying 100% on your trading. That say if you do have kind of a flat month or just a marginally above month, say for 8 weeks, 9 weeks, 10 weeks, it's not going to floor you as far as your personal finances and that kind of thing. But if you can sit on that, and the main objective being to not lose, once things go back to normal, bang, you're back in the pocket, you keep going, right? So that's where you go into that positioning of defensive trading rather than always being on the attack. Now, depending how you have it set up, you might be able to go on the attack all the time, but if you don't have that macro pocket, then you're probably going to have a hard time. And that's fine. Like, everyone starts out somewhere. Some people just don't like macro altogether. So you might just, you've been trading for 10 years, but you're just like, I don't like this. So anytime that happens, I'm just going to sit out. That's fine. Or you might decide that's something I need to learn and add to my wheelhouse, right? Just like some people like swing trading and they hate scalping, vice versa, all that kind of thing. So I would not take any kind of negative confidence hit on that whatsoever. I think it's more something that was outside of your perspective. And so to take it as a real hit to your actual day-to-day operations would not be fair to yourself at all. The next question from there is whether you decide to start learning macro or you decide to just step aside. Now, obviously, you want to start learning macro, you would probably step aside first and learn it over time and test things separately. And then eventually maybe you can build that into what you do. So.
Also, very great advice, LJ. Actually, our viewers are, privileged to have the access of, different traders, and each one of us, have a slightly different way to put things into context, to understand what's happening. And I think those who are listening in actively, they have a palette where they can choose, combine, and it's like it's very resourceful having us here. That's my humble opinion. And if I may add something, the first thing I want to say is, you as a trader, I don't know the name of the person. Can someone put it on the chat on the screen?
I got to scroll up. I think Rich had it before. Where's the comment?
It doesn't matter. Anyways, that one. Well, Vinny. Yeah. Vinny, and actually this is for everyone who is in a similar position. You need to begin with, you need to dissect these two things: your performance as a trader and the value, the confidence you put in yourself. Because they not necessarily have to do with, the fact that you as a trader or your strategy is not performing as expected doesn't mean that you as a trader, you're not worth it, or you're not good for it, right? Because they're separate things altogether, completely, I should say. That's one thing. So don't make the mistake of having your worth as a trader be dependent on the performance you get, right? Rather, instead of having the outcome as the one that decides whether you feel confident or not, look at your process, right? We say this a lot of the times. Do not focus on the results, more on the process. Are you learning? Are you advancing? Are you understanding? Do you have a sound, deep understanding of your strategy? Do you know its weaknesses? Maybe that is what's happening. Maybe it's your strategy, as Will said. So that's one thing, right? So make sure that you focus on the process. The second thing is, Of course, if the performance, if you're having drawdown and it's going deeper and deeper, it's, you don't have anyone, no one has to tell you that you need to reconsider the strategy and x-ray, so to speak, the process you have been going through. If you're a very rule-based strategy, the first question I want to ask yourself, how long have you backtested this before you start trading live? How objective are these rules? Are they very dependent on, subjective? Is it very discretionary? Because that makes things quite more difficult to fix, right? And maybe in your trade plan there is too much space for discretion. That's not a good thing, because it depends on where you are mentally and mindset wise, how you will then make good or worse decisions, which will then result in performance, better or worse. So there's a couple of things that you should go make sure that everything was done as you were supposed to. You have plenty of data supporting your strategy. The second is, have you traded while you were going into a drawdown? Have you really honestly look at yourself in the mirror while you're observing your stats? Have you executed as you should? Maybe your strategy isn't the complete problem. Maybe it is you, right? And let's be honest about it. A lot of times it is us, not the strategy. It is because we get fearful. We get greedy. We want to do this with the money. We always see this payout. You get funded. You see the payout potential and your performance goes down. Why? It's not about the strategy a lot of times. It's your psychology, right? So you start deviating from the plan. So you have to go through these and make sure that what kind of problem is it a strategy problem? Is it a execution problem? And of course, if all of these things, clear out, meaning you did have good data, you did have backtesting, ample sample size, and your data that you have was, pure data, not half following the plan, the other half not following the plan. And you executed the plan you were supposed to do, then the logical options or scenarios are either market condition has switched and your data doesn't cover this market condition, right? So you backtested in a regime, as LJ was talking, where your strategy is profitable, but now we're in a different regime, and that wasn't included in your backtesting period. And it's obvious that your backtest doesn't represent your strategy performing in this particular regime. So it could be macro, it could be that, or it could be simply that your strategy isn't as robust as you think, meaning it goes in and out of having an edge. Whenever we have a backtest, it only tells us something about that particular period. If that backtest was 6 months, which is a lot of work sometimes, that only tells you about that 6-month period. It's not representative for 3 years ago, let alone more years than that. But the reality is that the market is not the same. It changes from one year to the other, from one decade to the other, even sometimes from 1 month to the other. So you have, as you can see, there's many things that can totally break your performance without you being, the cause. Meaning, why would you bear all the responsibility? I mean, you are, in the end, you're responsible. It is your ship. But if there's a thunderstorm, it's not the captain's fault, right? So you gotta maneuver your trading. So what I would do is, and this would be the advice, is anytime, what I would do is, first thing is use fractional risk based on the distance you have to your max loss. If you're in a funded account or you're in an evaluation account, doesn't matter. Whatever it is, your distance towards that max loss limit, that is your available risk capital, right? That is what you have to work with. based your fractional risk, meaning a percentage of that capital, right? So the distance to your max loss. That means that as you go into the drawdown, you'll be risking less, less, and less. You'll be soft landing into that limit. That's one thing. That automatically will affect your psychology in a good way. You will feel less anxiety, and you will go slower. Even if you're not performing, even if you're losing, you're going to be slowing down as you go down, right? And as you recover, you would be, the more profit you have, the more the distance from that max loss limit will be. Automatically using a fractional risk management, you would be increasing your risk as you perform better, right? That's one thing. So your risk management needs to be based on the difference, the amount of capital you have, or the distance towards your max loss limit. And the second thing is, I think Will has a good point to not stop trading. If you stop trading, you start rusting, right? You gotta be in movement.
I do agree. To be fair, yeah.
I beg your pardon?
I was just saying I do agree with that. Definitely.
Yeah.
Even whenever, if I'm not trading, which maybe is also like a bad thing, but like I still try to be connected to the market. Like even when I take a break, I try and like tap in, see where momentum is, that kind of thing. It's obviously rare I take a break, but get the idea. I think that's very good. I think you should keep like the role per se. Yeah. Even if you're not actively trading, at least be either active on the charts or maybe doing like demo trading or something like that.
Or in the community, talking to people.
Yeah.
That always is good thing. But I mean, any skill, you have to maintain it just as any muscle, right? You stop using it, you lose it. And you don't want to lose everything you've worked on so far. So one thing is, you use risk management for as long as the strategy still has potential of an edge, right? Meaning you can see in the past that it comes and goes, and you can assume, all right, maybe this is one period where it's likely to come back. But once you have plenty of evidence that the strategy no longer works, then there's no point in trading it. So you got to have the data on that, meaning you got to have more data, not just 6 months, to understand, is this something that comes and goes through the years, through the months of each year? If that is the case, then maybe you just need to know how to maneuver through the drawdowns, and that's it. You're going to be ending up in the end up. But if it's completely broken, then no risk management will save you. And in that case, you should to go back one. When we trade, we go from a strategy, we backtest typically, and we paper trade forward without risk, and then we lower our risk, like minimum position, as we go forward, and then we go to full position. So what you would do then is de-escalate that trade. So go back to minimum position. That way you're still trading, but you're not harming yourself. And if you're completely, if it's completely broken, then you could go back and see, maybe look for another strategy altogether. Because no strategy has a lifetime guarantee.
Yeah, I agree with that.
Yeah.
I'm gonna finish on a point real quick. And this is just backing up and put it into a real time, like a real life sort of example. And I was in karate last night, and I haven't been there since December, just before Christmas. And
you're 10 years old?
Huh?
Since you're 10 years old? That's the last time I did karate.
And just in the space.
Sorry, Will. I'm sorry.
I'd lost all my flexibility. My sensei said to me, he's like, "Well, if you don't use it, you'll lose it," just like what Victor was saying. And yeah, I lost all my flexibility. My kicks weren't as high. I was super tight. My back, my whole sort of lymphatic system is super stiffened up and blocked up today as well, which is absolutely crazy. So yeah, and that was after 3 months, you know. So LJ, I dread to think where you'd be like now after 20 odd years. So
Look, it hasn't been that far, at least since going to gym. Like, it has been a while. I think I think it's 21 months now since I've been.
Yeah, exactly. So you can imagine now if you go back to the gym, like you'll keep a lot of your strength. Like I lost a lot of my muscle while in Hong Kong. I wasn't doing as much gym or as heavy a gym. Get back and I'm now lifting with my brother, and I can see my definition coming back even after 2 weeks. The muscle fibers are they're waking because you don't forget it, you don't lose it. They just lay dormant almost. Your muscle fibers will lay dormant, and what that means is they're basically in some form of hibernation. And same goes with your trading. You won't ever lose the ability to trade. If you take a break, your ability will lay dormant until you gain that confidence back, until you gain that momentum back. So the best thing you can do to make sure you don't have to go through the stage of regaining and rebuilding your confidence and trying to wake up your trading muscles is don't allow them to lay dormant. Stay well oiled keep those cogs moving, keep consistent in the markets. But anyway, guys, I'm gonna love you and leave you with these fantastic gentlemen, and I shall see you all tomorrow. So guys, thank you very much. Make sure you smash the like button, make sure you subscribe to the channel, and we shall see you mañana. Peace.
Cheers, Will.
Take care. Will, go ahead.
Yeah, likewise. I'll have to tap out. I'm sure Rich is about to say the same. Just to finalize on what Will was saying. You do have that stuff from neuroscience, that kind of thing. It does stick with you. So if you have to take a break from trading, it's fine. Don't freak out. Don't lose confidence, that kind of thing. Take a step back, reevaluate. You can come back to it. The markets will be here tomorrow, the next week, the month after, like I've said before. Now, before, Rich, you say whatever you're going to say. We were talking about merch before. This was...
Duck.
Share before. Yeah, this is the duck one that I just mocked up. It's the Duck Legion.
Duck Legion.
Profits, Pond Profit Syndicate. And we got Jerome Powell in there as well. And just some ducks and some...
Oh, you've got a mallet duck. Nice.
Yeah.
The prettiest of ducks.
So we got stuff all over, as well as my personal little duck
Quacker.
in the corner there, like that one, which is
Seems like they look for. They're just waiting for the market open to smash
basically
the
this guy
market.
that I have on my desk, right? So I put that in the image as well. So I don't know, maybe we can get something like that going on. I was thinking about doing this as part of the community month.
The community month giveaway.
It's like
I think
some
it's pretty
kind
good.
of final end of month giveaway, something like this. This was just a mock-up. It was a trial version. Maybe I might have to change it. We'll probably have to get approved, etc. But point is that I think we could do some cool kind of merch in general for giveaways.
Unique once-off merchandise for.
Yeah, that was my point. Like
event.
kind of limited runs for certain events. So,
LJ, you just got yourself a best friend.
my first job was a duck farmer. Oh. Dude, come join the Discord on Friday at. Okay, Rich, what's the time in GMT, please?
For yours on Friday, it is.
It's basically
12 GMT.
Yeah, 1 hour before now on Friday. That's all I know.
Yeah. It's 12 GMT.
Come join the Friday Discord this week with myself and Akram. It'll be great. You're a duck. You're literally a duck farmer. I mean, dude, please come join. Open voice, run over New York, that kind of stuff on the Friday when we normally don't have the YouTube stream. I want to speak to you. Please do come.
Wow, what a personalized invite from LJ to come and speak on the Discord. Steve, this is a once in a lifetime opportunity. I mean, you may as well just grab it, get to talk to LJ. I just wanted to say this before I also drop off is that, yes, we do have the community month going on right now. What we do have in the literally just posted, you can win a one-on-one coaching session with performance coach Rich, plus a 20K bootcamp challenge during the 10-year self-reflection raffle. And all you need to do is you just need to follow this post in Discord. So you need to get into Discord first and foremost. If you haven't already, you can get into the Discord. There's a link in the hub if you have purchased previously or purchased one today or last week. And it doesn't matter when you purchased one. You actually just need to have purchased, and the size of the account doesn't matter. You can get the smallest account you want. Purchase Fiverr's evaluation account, get yourself access into the Discord, and then you can literally win a one-on-one session with Rich. That's kind of crazy. That's kind of crazy. You go into the community tab on the Fiverr's, you go and see all of the community information that's dropped in there, and you can win a one-on-one session. I cannot even begin to tell you how amazing that would be. Like, for anybody that knows Rich Wells and how he approaches trading, the psychology, the mindset, all of that kind of like stuff.
Rich,
one-on-one, dude, amazing.
He's basically our Wendy Rhodes. Like, if you guys have watched Billions, like the TV show,
yeah,
Rich is our Wendy Rhodes. Sorry, Richard Wells, if that makes you female, but he is
Regina Wells.
Yeah, no, that's just not. I don't think we can get it like a.
Doesn't feel the same. It doesn't have the same role.
If you had to pick a female, that's probably not too bad. Either way, so Billions. That's basically Rich.
You've lost it. You've just lost it.
This went terrible. But that is basically what Rich is to us. It's our Wendy Wells in Billions, right? So
yeah,
big dog.
Point is, it feels like a one in a lifetime experience, and it can be life changing for anyone who is serious about trading, to get your one-on-one with a performance coach who has, the skills to not only give you, offer you the knowledge, the insight, but actually connect with you and see what you need, right? Because that's what a coach is good in doing, not giving you just general information, but watching you, observing what your strengths and weaknesses are and what your biases you have that is impairing your trading performance, and do a custom-made assessment as to what you need and help you get it. I mean, what else can you ask for?
Yeah, that's next level.
Exactly.
That is a great price. That even beats the 20K account, I would say. I think it's worth it's worth 100K
way
account.
more.
I think
worth
that's
100K
way more. Rich.
So
That is.
yeah, it's a once in a lifetime. You guys need to be in the Discord in order to get this. It's Discord exclusive, and like I said, you can get in for as much as, I think it's $19 to buy a 5K bootcamp account, which is technically a 20K bootcamp account, but it's
starts at 5.
Yeah, it is pretty legit. Anyway, with that being said, then, ladies and gentlemen, tomorrow Soul is not going to be here today because they have a public holiday at home. So Soul is not going to be in today. However, Soul will be joining us tomorrow afternoon during Victor and Samir's session to have a little bit of fun. He is going to not only do his regular online live trading, but he's also going to be, how can I put this? Reveal a nice little thing. And
wow, that's amazing.
That nice little thing that he's going to reveal is pretty much thanks to all of you guys. So it's just going to be a small little reveal, small little celebration of something that we've all done together, and it is just to say thank you for everybody for being here with us for as long as you guys have. All right.
Soul is going to reveal for that you don't have to come tomorrow to our session and to find out for yourself what it is.
See you guys in
but it is
24
expensive.
hours.
Yeah. I mean, I couldn't have scripted that better. The moment Victor was like, Sol is going to reveal, everything went in the background. I was like, how's he doing this? That is so good. Anyway, guys, I'm going to love and leave you. I'll see you all tomorrow. Do not forget that today is Wednesday, so Victor has his own Discord stream as well that you guys can join after the stream has gone over, and then we'll see everybody there. Have fun. Victor, LJ, Samir.
Thank you.
Take
Thank
care,
you very
Rich.
much.
Thank you
Rich.
so much.
Okay, mate. I will also be saying goodbye. I need to go get myself some actual dinner. I've got a pizza today, pepperoni.
Well deserved. Some calories and a lot of protein, I suspect.
Oh, I'm gonna
go.
dump so much extra cheese on that thing. It's gonna be beautiful. Anyway, I'll see you guys tomorrow. And for now, adios. Ciao, guys.
Take care, LJ. Awesome. All right, we have let's adjust the size of my head, which is a bit
All
oversized.
right, we are seeing a huge momentum here. Can you hear me,
Yes.
Victor?
Yes, I
Okay.
can. We can hear you. EU has had a reaction, a nice candle. We'll be talking about that momentarily. There is one thing I wanted to ask before we continue. Not too long ago, there was someone who asked about how to get his confidence back, and let's see if I can find it. It is this Vinny was asking this question about how to get his confidence back, and in my response, I said about fractional risk and so on. So I posted on the chat the link to the how to do that fractional risk strategy and risk management strategy. So if you're interested in how to lower your risk automatically while you're going into drawdown, and how to increase it the optimal way while you're coming out of your drawdown, then go check that video on YouTube. Something we did some time ago in a webinar, a masterclass webinar we had not too long ago. Samir, how are you doing today? No fever?
I am awesome, and thank you for asking. How are you doing today?
I'm great, thank you.
That's amazing.
I actually I want to check the EU because the market is.
Let's see what the EU is doing.
The market has a little blip there. So I'm checking on the background. Is there any reason today on the Forex Factory? If I'm going to switch to mine just a little bit, I'll switch to the share this. You'll see that there is no, there are no red folder news event. And if we go to let's check here on financial juice, you can see that there is, nothing, at least not right now, nothing that has come out in terms of this is the last 10 minutes, nothing in red, meaning maybe it's still out there. So I'm not too sure what this is about. I have no idea. There's nothing being released, and it was 9 minutes after 3 in my time. We'll have to see. We'll have to see why that happened. Who knows? We'll sometimes there is there is nothing you can actually. I'm not showing my chat. I'm not showing my chart. But this is. I have no reason, why it did happen. But it could be maybe a little veil being lifted, a little bit of buyers coming in soon. Maybe as we get to the daily order block, we can talk all about that in our market breakdown that we're going to be having in a short while. But Samir, what are you watching today on your US 30? You've been very profitable. I mean, last time, was it yesterday or the before yesterday? Yeah. You had like a 7 minute huge win.
That was awesome trade yesterday and fitted my plan. I saw a consolidation as I was explaining to our lovely viewers that if we get close to the VWAP, we liquidate this area. We consolidated. Once we broke out of this, I took a buy here. My stop loss was around this area and I was going for 1 to 1, which was somewhere around this area. So beautiful trade. And I also saw this, this channel. So I was like, we are going to see impulse somewhere. So as we was having more confirmation for the bullish move, because there was a pattern, there was liquidity move and all these things. So I was like, maybe we can get impulse to the upside, and I played it logically. The story made sense to me, so I took a buy here. Amazing trade. And on Monday also it was amazing sells. Okay, look at this consolidation. Once it broke below, I shorted it, and there was also a whole gap fill. So I was like, gap is filled, we are consolidating. If price has to continue its bullish move, it should break to the upside. If it breaks to the downside, I was like, maybe we can fill this gap, which we did. So me and Dave, we took trade here. Stop loss was somewhere around here. Took my profits around this area. But now we need to keep up the performance. We are traders. We show up every day. We do the same thing. We follow our plan. And yeah, that's why we are traders. So basically, to keep up with the performance, I have to make some rational decisions, or I have to, enter in a good area basically. So let's do some analysis on US30. I'm going to start with the daily candle. Okay, let's go to the daily candle. So if we see daily candle, this is a dodgy candle. So this have a very small wick here, but it does have a wick, but very small. Okay, let me erase this VWAP for a while. Okay, daily candle dodgy, may can go bullish, may can go bearish, because as it is dodgy, so there is not too much information around this area. But we do have this high which may can get liquidated in near future, so I'm just gonna mark it just for the reference point. And we do have this small fair value gap. I'm just gonna mark this daily low first. We have this daily low and we have this fair value gap. So we have a couple of areas on the daily. Let's go to the 4-hour time frame and let's try to understand what the price is trying to do. Okay, price rejected from this demand area. Looks like a huge wick right now, guys. I'm trying to make a story, and then we can potentially plan a trade idea ahead of the time, which is NYSE open in my case. Okay, so right now I'm creating some story here. Okay, we have this as a previous day high, which is very close to the daily high that I've marked. Let's go to the 1-hour time frame now. Okay, we took out this high, we closed below, we are in the fair value gap. We rejected this area. Okay, we don't need that, but we can delete this also. But I'm just gonna keep this line here because this is a daily low. Okay, and this is a fair value gap right here. I'm just gonna see it visually, but just for your information, I'm just gonna mark it like this. Okay, so you will know that okay, this is a fair value gap, but I normally don't mark it. I just see it visually. I just react accordingly. Anyways, let's go to the 15-minute time frame. Now I do need the VWAP and 200 EMA. Okay, you can use one of these things. Both are somewhere similar. If 200 EMA is bullish, I try to go for buys. If it is bearish, I look for sells. Right now 200 EMA is bullish. Okay, and VWAP is also bullish. I'm gonna delete it again. I'm just gonna keep VWAP only. Now it is a very crucial thing that I have to do. I'm just gonna delete the fair value gap again. So now I have to plan some kind of trade idea which can support my strategy. So what the price can do, let's draw a couple of scenarios here. Okay, so what if price closed below, retested? Can we go below? Yes, high chance. Why? Because we will see an impulsive leg. We can say, okay, this is a break of structure, or maybe this area. Maybe we can get a pullback and we can go short here. So this is the first trade idea for me. Second trade idea can be, let me go to the 5-minute ones. Okay, we have this small area. This is some kind of order block here, some kind of demand area. On the 15, we don't have much information. Yeah, this is a daily low actually. So if I want to go longs from here, we have a barrier here. This is a daily low here. So this will not be a high probability longs here. So I will rather see a break of this small consolidation, and then I might can go for buy. So this is trade idea number 2. The trade idea number 3, which is good. This is the area I want price to respect this area. If we go on the 1 minute time frame, I want the price to show the momentum, fake momentum to the downside, and then the actual break later in the NYSE session. Can be 10 minutes after the NYSE session, can be 15 minutes after the NYSE session. Of course, I'm talking about the opening of the session, okay? So this scenario right here, it gives me a little bit more confidence because we are bullish overall on the 15-minute leg. I like to observe the 15-minute leg the most, so that's why I'm saying it. So this is the idea that I want to see. And the last idea for me will be, let me go to the 15-minute once again. If we impulsed way too much and we are away from the VWAP, then I will short it here. Anticipating a pullback here, I will get involved in that pullback and maybe we can go higher again, but I want to capture this kind of leg here.
Market reacting on EU. I don't want to interrupt you, but if you could go to EU, there is something happening that's also visible on the NQ. Are you switching? I'm not seeing.
I'm just seeing I'm seeing Euro USD right now. But if I share my thoughts, let me take a look at the daily candle first. Okay, we have this daily low and 4 hour. Okay, very bearish. Okay, making a top wick here. Daily low is not swept yet. Going to the 1 hour. Quite bearish candles here. We have small fair value gap here. 15-minute. We have structure here. I think it can be a selling day. We tap here, a couple of rejections, going for shorts. This is just my point of view on Euro USD. I don't trade it, but if you guys want to know my point of view, so I'll plan trade something like this.
1 minute. But 1 minute. Sorry to interrupt. 1 minute on EU. Could you switch there?
Okay, this is something we saw a decent amount of momentum here. Let me check financial juice here. Do we have anything?
Yes, Trump is talking Iran talks possible as soon as Friday. I'm going to put it on the screen right here so we can see that's what's happening. I think there are rumors happening. That's why we saw before that the market was getting, these there it is. These not too long ago we asked ourselves, what is this candle about, right? And the second, a couple of minutes later, it's another one. I think this is the rumor of something might be coming out. And then this is the actual release of Trump saying there is possible talks, no talks yet, but possible talks as soon as Friday, right? So positive news out of the Middle East, and that's what's driving the technicals, the market really on all financial instruments. I mean, almost all. I mean, EU equities. I'm pretty sure you would see something similar on gold as well. Sorry to interrupt you twice, Amir, or even 3 times, but I thought, this is the heat of the moment because this can. I mean, any day now, any minute now, you could expect Trump to come out with either a very bad or a very good news tweet. And that could move the market completely in the, in one direction, regardless of what the technicals were at that moment. So the kind of acute, sharp, and reactive being ready to watch the market on the lower time frame is actually crucial for your survival. And of course, risk management before everything. But that's why I thought it was important for our viewers to, in this case, interrupt you, Samir, your analysis, so we can look at it and talk about it. But please go ahead with what you were elaborating on before.
I just gave you trade ideas on US 30. Now it's just a matter of we have to wait for the NYSE open. Okay, and NYSE open, very crucial information I'm going to tell you here. We have to wait at least 10 minutes into the session because that will give us what the price is trying to do. So it will be easy for us to make the story around that particular time, So I think if you are trading indices, wait for 5 to 10 minutes after the market open and then make your decision accordingly. I have taken trades right at the market open, haven't really found success in it. So that's why with experience, I'm telling you this. So we will wait for 10 minutes after the market open, and then we will observe the price, and then we will take decisions accordingly. So yeah. Let's take a look at very popular pair, which is gold. I saw someone in the chat was asking about gold. Okay, very beautiful consolidation I can see here. If I would have seen it, this is some kind of trade that I want to get involved in. But anyways, let's take a look at bigger time frame. I'm just gonna go to the 2-hour time frame. Okay, daily is very bearish, guys. And today we can see some selling based on the daily candle. Okay, we are retesting this area. 4-hour closed bearish below the VWAP. Let's go to the 1-hour time frame now. 1 hour, I'm not liking this leg because this leg is way too big. I don't think we're gonna mimic this leg because it is just experience telling me right here. I know the gold. Whenever I have traded gold, I have shorted somewhere around here, not like here, but I'm just giving you a scenario. I used to do this kind of thing, support turning into resistance. I was finding shorts here, so I have done this thing in past. My experience is telling me I don't think we're gonna mimic this leg. Technical wise, definitely we are bearish. Experience wise, I'm not liking the shorts, so I will say avoid this pair. Completely experience based, nothing technical is involved here. Technicals are telling shorts, by the way, because we have broken the structure, retesting it, a couple of rejections. But again, as I mentioned, experience wise, I'm not liking a short here. So and the second key point here you have to take from this stream is experience, because if you're trading markets, let's say for 1 year, 2 years, you still have a lot to learn. Okay, so don't be like I know the strategy, this, that. I think experience matters a lot. So in this case, you can journal your trade so that it can help you in future. Maybe after 6 months or 1 year or 2 years, definitely that data is gonna help you. And my data is telling me I have traded this this kind of leg. I have tried shorting it, haven't really found success in it. Of course, 30% of the time, 100 out of 30 trades, we can see some shorts, but I don't like this number. It should be at least 60% in my favor. Then only I can put risk on the table. So gold wise, I will stay away. I will rather buy actually based on the experience again. But again, it doesn't mean that I will enter a buy randomly here. I want a closer above this area so that I can say, yes, this is the higher low. Maybe we can see a higher high at least toward this area. So yeah, gold, I don't like the idea of sells. Buys if we break this area, it will be good. And lastly, I'm gonna see NAS 100. Okay, we are consolidating actually. We can get a liquidity move today, and then maybe we can go short. Let's take a look at daily time frame. Okay, we are at all-time highs, guys. So this is tricky now because trading all-time highs can be tricky as we are trending way too much. So that means that we should not anticipate a top in the market. We're gonna sell from here, something like this. That I don't want any of you guys to do. I'm just gonna take some intraday looks here. Okay, we are at the resistance right now. I think if we can break this area, sustain it, then definitely looking for buys. But again, you need to wait for that sustainable move. It can also do a V-shape kind of a move here. So I don't want you guys to be FOMOing here, then entering the trade that don't make sense. So just wait for 10-15 minutes. Let's see how it behaves around this area. Then we can react accordingly. By the way, 3 minutes left for the market open. Let's take a look what USD US30 is trying to do. I'm just gonna mark this area. We might can get sells from this area. I'm just gonna mark this wick. Okay, 1 minute time frame. Yeah, let's see how it behaves around this area. 2
All right,
minutes for the market open. Yeah.
Yes, let's stick to your chart for the time as we count down towards the market open. Everyone trading these assets, whether you're from a CFD or a future point of view, this is the moment, right? You want to be watching what range do we create, how do we position, how is the price action as soon as we open, how does it develop, the positive news. I mean, it may not be a coincidence that right before the market open, Trump says this, right? It was an article actually on New York Post, but I mean, who knows? Maybe it's orchestrated to be released just before the market open, so the market opens with some kind of a good news, some indication, even if it's just rumor, even if it's just based on very little evidence. It doesn't matter, right? That's how the market works. Market reacts first and then thinks and then investigates. But in the meantime, it reacted already. So that could set the tone for some beginning minutes, or perhaps, who knows, maybe even much, much longer than that. All right, so we're gonna wait for the open about 30 seconds,
Yep.
and as you talk about it and analyze it, and after that we'll be looking at EU, perhaps GU or dollar CAD or any
Let's take a
you
look
guys
at GBP actually.
want us to analyze. There is a free account today on the Discord channel. We're gonna have a call in about an hour and a half, and there's gonna be a free 20,000 bootcamp account, a 20,000 bootcamp account, and you can win it if you're there and participate actively in the chat, as many of the members do. Yesterday was all these days we've been giving a free account there, so it's your chance to win one. All right, the market has opened in the last 30 seconds already. Do we see? Let me check here.
All right. So guys, market has opened, and I'm seeing what I can do here. So actually, guys, it is a very beautiful thing, Once you learn your setup, every day you see that setup, but in some kind of different way. So I think that you should work on. So once you see your perfect setup, then only react. Of course, you are not gonna get the similar setup every day, but your A+ setup, just wait for that. It can be in different shape or forms or whatever your technical is, so you can act accordingly. By the way, let me draw the trend line here. Okay, we have a trend line. What if we close below the VWAP? How much stop loss I'm gonna get? Like 150 points. Okay, let's keep it 100 points. Can I target something like this? Yes.
Looking to go long or short?
No, if we break this trend line, we close below the VWAP, it is a short. If we continue from here, we respected the trend line, or we created some kind of liquidity move, then I will wait for some kind of consolidation to go for buys. And if we tap this 70% retracement area, we saw some consolidation, kind of a pause, breakdown, I'm going shorts. So yeah, by the way guys, you might be wondering why I have this rectangle here. This is a Fibonacci level, which is 70%. Okay, so I've seen on gold and these indices 70% do likes to respect sometimes. So that is, we have to wait here. I think when we was talking about there was a session, I think Jonathan organized that, where we all was discussing about the strategy. I focused on one particular thing, which is whatever strategy you are following, once it gets to your area, please wait for like 10-15 minutes. I think that can bring you a lot of insights, and it can shift you from being unprofitable to profitable trader. I'm not even talking about the strategy right now. I'm talking about the behavior, how you should behave when you are coming to the charts, how you should train your mind, Anyways, we are I'm not seeing anything right now, but waiting here. We are just 3 minutes in the market open. Let's wait for 5-10 minutes, then I will get some kind of information, and then I can act on that information.
Okay,
So,
while you're waiting, I would like to talk a little bit about NQ because I see an opportunity here.
Yep.
Let me switch to mine screen. Of course, we have on the higher time frames. If you go to actually, we broke that. That's the monthly, so we haven't broke it yet. We are above the bearish structure on the monthly time frame, which is a very bullish sign, right? As long as we're above this structure, it means that buyers are winning, basically. And if you see it from a weekly point of view, we do have a weekly quasi. And I'll show you where the quasi is according to me. This is all macro move, right? So we broke that neckline, left shoulder head, and we went straight to this structure, which is the entry order block on the weekly time frame, which is a combination of different. Look at that move. A combination of order blocks, right? So this is the area, and you can see how last week we just closed short of breaking it, meaning if we close above here by the end of week, that's a clear indication that not only we recovered, we touched all-time high, but we're likely to just continue higher. So that's one thing. So that's lingering in the air for the buyers are threatening the bulls with that, basically, right? So I mean the other way around, the buyers are the sellers. So that's one thing from the higher time frame. And if you look at the sequence, there's a good case to be made that this will have continuation, right? The market has been very, very extremely strong, and it's likely, it's not going to stop there and turn around. It's likely going to have some kind of a reaction, perhaps, and eventually go through it, even if it's just for a little bit. So that's one thing. However, what we do have here is a daily quasi, as well as the weekly quasi. Right, so we have multiple quasis forming. That's breaking of the neckline. We already had the first break of the neckline, the second one, and we come in at one structure right here, which is that one. So that's on the higher time frame, meaning this could be, maybe not today, maybe not even this week, but this area could be a turning point, right? For some day, some session to go, because we've just had a massive reaction. And it wouldn't be too weird for that reaction or that move to be somewhat, it would be even healthy if it's a beginning of a new trend to retrace somewhat before we continue. So that means that leaves that door open for a possible retracement. And since we've had such a huge move, that retracement easily can be a big amount or big level below where we currently are. And if we go to the lower time frames, what indication do we have of a possible of that possibility playing out? That's the kind of strategic tactical things that I would like to see. Does the lower time frame, and by lower time frame I mean the hourlies, do they confirm that we are starting possibly going for a reversal? And if you go using the same patterns, you can see actually it's not on the 1. Let me double check. It's not on the 5 either. Actually, no, it's not on the 4, but it is on the 1 hour. The 1 hour, we do have a quasi. This was mislabeled. It's on the 2, as you can see here. We have this. You could even use it, see it from different angle, but this is the highest time frame that we recreated that quasi. We went through the neckline, that's the left shoulder, the head, and we're getting right there at a possible area, right? This is, let me mark it like so. This is the area. If the market is going to reverse from using this quasi, this is the area it should not close above. So today, we could get resolution potentially for that. If it closes above, that's an indication that we're going to be, pushing forward. It's going to be much easier for price to continue higher, and we're likely going to have some kind of a short squeeze going higher. Or this could be the area that we go for that retracement. Remember, on the higher time frame, this is how on the hourlies it creates reversal patterns that are later on going to see on the higher time frame as a much bigger move, right? So you can get in on intraday, and possibly, especially if you're on the CFD side, you can hold that through, or on the Fivers if you're trading futures as well. All right, so let me go back to the lower time frames to keep breaking this down. So what I'm interested in, what is the open tell us, and how price action is developing around the open in respect to the open, because that could set the tone for the next couple of hours, and maybe that could tell us, whether we're going to have this move or a continuation higher, the open, right? And that's going to give us a possible, it may not happen today, it may happen in the future, but today could already be a good idea, a good moment to get some indication what's going to happen soon. So you can see that's the H2, even though we don't have an H4, and there's another structure right there, which is also H2. It's not the only one, so you should not base your decision just based on that, but it is there. So I do want to point it out. And the other thing we can do is, let's see, we don't have anything about that. Let's see, on the H2, there's 20 minutes for that to close. As you can see as well on the H4, if the market, for example, on the H4 closes below this level, which is still about 50 points below in 20 minutes, which, it's the open, it can happen, you would have a H4 outside bar. Now that would be a strong indication of a tone, if followed, which is likely because it's the open, it could be a good indication that price is going to go, the rest of the session, or at least portion of the rest of the session, to much lower levels, and that could be the beginning of a possible retrace. Keep in mind that there is that headline risk that anytime, a second talk can come into the picture. Trump could be tweeting, yes, we have a deal, even though it may not turn out to be real, after a complete deal, but, just the tweet coming out could change things completely, and every quasi in the pond will get blown away. But so you gotta be, very tight with your, really responsible with your risk. But this is what's happening, and in the absence of any news, it looks like it could start breaking down a little bit, and especially if you see some escalation sign or signals coming out of Middle East, you will see this quasi materializing in a reversal. So I'm very keen to watch what will happen. So this is the open. That's market for our viewers. Actually, there's another level I can talk you guys about. So that's the open, 50 minute. It's not over yet, still another 3.5 minutes, but you get the idea. Let's mark them as with a different color so you can see it more clearly. And there's one thing before we go back to Samir. If you go to lower time frames on the 1 hour, 1 hour isn't not 1 minute. I mean, not on the one. I have it here on the 5, but it's actually on the 1. It's not an entry, even though I have it as an entry. So actually I should, it's not an entry, but okay. If you can see here, if you go to the 1 hour, you can see that if the market this would be the neckline. If the market is going to reverse, these are the level. Actually, on the 1 minute, it's slightly different. It's not even here. So it's actually, the marks that I had was on the 5, but this is on the 1 minute. That's the entry. That's the quasi, right? That's the neckline. That's the left shoulder neckline. This is the head, breaks the neckline, goes all the way to this point, and then comes back to the entry order block for that. We already completed this quasi basically, right? So it's only on 1 minute, so it's not very significant. But I mean, it should get your radar. It should get this a possible short on your radar, and start looking for, are we really going to break? If you have a structure like this, you have a breakdown of the opening range. You have the hourlies telling us that we are, possibly we are at a place where we could see a reversal, and you get the picture. This could be a massive sell from this point. But the risk is the fundamental news, that headline risk that could be positive anytime in between, and you still get stopped out even if there's not really anything materially better. Let's switch back to Samir. Go ahead, Samir.
Can you hear me now?
Yes.
Mic check. Okay. So guys, I have a couple of scenarios now as US 30 is moving and we are in a consolidation phase. Let me go to before I continue, please take a look at this 5-minute trend line and this VWAP. Okay. Going to the 1 minute now. If we reject this trend line, good. If it didn't, and if we closed below this, I will take shorts here. Stop loss placement can be, I think 150 points is decent. We have plenty of range here to target. I'm not even gonna say I'm gonna hold till here. I'll just take my 1-to-1 and I'll just get out. So this is the first scenario that I have. The second scenario, if we reject from the trend line and we get a closure above of this trend line, reject, close above, I'm buying here. So 2 scenarios here. Seems like we are gonna get the trade right on the stream. If we close below, we have 11 seconds left. Let's see how price close or behaves around this area. Now it is a very crucial moment for me because I have to see how price will behave around this area, as this is the trend line. I think we may can get a sell today. So I'll just use my risk to reward tool right now. Of course, I'm not in the trade. I'm just calculating my risk. I think you are also planning for shorts, but it is on NQ, right?
Yes. Yes. If it breaks down, then I would be considering a short. Yes. And
Okay.
the same token, my strategy or my setup is, this is the crossroad. This is the intersection where we are, and a break of some structure here would mean a short. But if that fails and it breaks the higher side, that means that the whole reversal pattern becomes invalidated. That means that's it switches. I would want to take a long, not perhaps at a breakout, but something when it comes back to retest some demand area. So I'm not only looking for a short. That short reversal can actually be a sign to go long if that fails.
Okay. That's amazing. Okay, seems like we are rejecting the trend line. So I'm very patient right now. I'm observing the price. I am making some stories in my mind. Okay, if this happens, what can I do? If this happens, what should be my action? So let's take a look at other time frames. 5 minute, we closed very strong here. 15 minute. Okay, seems like we're getting a breakout to the upside. Okay, I should be ready for the price also.
We just had some news. Sorry to interrupt you, Samir. If we could go back to my screen, this is a response on Trump. Iran is saying they have not decided yet to hold discussions on Friday, right? So this is the kind of market we are in. One side says one thing, the other one says the opposite. They're playing the media basically, and you as a trader, you're in the middle, and this can set the tone. This can, cancel each other out, or depending on what the credibility is of each, it can, influence the sentiment. This is what's going to be driving the sentiment. So that's what I wanted to show. Let's go back to you, Samir.
Okay. I want to close above this trend line. If we break this, I think we can continue bullish. Then I'll be taking buys here. I'm just waiting for the breakout. My entry will be around 351. Actually, the price, there will be difference in price. On the MetaTrader 5, on my 5 terminal, it is about to break the high. So I will get ready for the entry here. And my stop loss will be somewhere. I want to keep 100-point stop loss as I think I'm getting the better entry. Okay. Yeah, I think it's fine. 100-point stop loss for 100-point TP. And my TP is also making sense. It is below the structure. Amazing. I'm in the trade, guys. Yeah, I'm in the trade. Let me place the stop loss here so that I don't.
All right, I'm gonna switch back to NQ. As we are watching right here, we talked about the order block. The market, it did not get followed through. Right, this is the quasi. Right, this is the smallest quasi possible. So you gotta take it with a pinch of salt. We got a break of the neckline, comes back, reacts. This is the completion of the quasi. However, it goes back one more time, and you can see the reaction it has on that beautiful entry order block, and that's a clean indication here. I'm not sure what it is that's moving the market, but my thoughts were, if the market is not finding follow through at completing the quasi, that means that we're not going to go lower. Right? And if we're not going to go lower, then it makes sense that we're gonna not, use this quasi as a pattern and continue higher. But in order for that, it needs to break these structure, these areas, and it's doing the opposite. It's still reacting to it as if this is typical of when price is going to go lower. So it's giving you mixed signals, switching flip-flop constantly, and that's difficult as a trader. So you got to have rules in place, not to be too greedy and not to jump at every first indication, but first, have your rules in set and only trade when these rules are met, because otherwise you'll be just losing left and right, and the price is really not doing anything yet. We can see that, let's see here, it's still in the range, in the opening range of this is the 15 minutes so far, which is already closed, by the way. That's the 15-minute range, as you can see, and the market is not really going anywhere. It's still in the opening range, meaning hasn't made up its mind. Looks like it's wanted to go lower, but I think it's until this range is not decided in either direction, I think it can still break out and go to the upside. Even this does look quite suggestive, I would say, quite suggestive of the market wanting to go lower. But we'll see where it goes. And this is only for NQ. Remember, NQ and US 30, both US equities, but they don't always move together. So you could get a long signal on one, and and both of them could be right. It doesn't necessarily mean a same signal on the same pair. I'm gonna go back to your trade, Samir, which was looking quite nice there. A break and retest of that breakout, a trend line.
Let me take a look at 5-minute time frame.
Looking good.
Yeah, let's see if we reject from this trend line or it is a stop loss day for me. And I'm just gonna take my Fibonacci once again to set that as my target. Yeah, which is close to that area. Yeah, and we are also close to that structure. My target is below the structure. My target is also making sense. I'm not aiming for a huge target, which makes no sense. Even if price has to reject, maybe it can hit this area. And this is the 1 hour order block, by the way, guys. Let me shift to 1 hour area. So this is 1 hour area. So my TP will be done before that. And VWAP is bullish. My my analysis is on point. And we have the 70% retracement also on the Fibonacci. Yeah, I'm not making any mistake here. I'm just following my trading plan. I waited for like 10 minutes after the market open, saw the pattern, saw the trendline breakout. We are in the consolidation phase. I am expecting impulse to the upside, at least to that 1 hour order block area. So I can even set my target something like this. So let's see if we get the target, or it will be a stop loss day for me. I'm just gonna wait.
We have some news from the White House, and that's what reacted. This reaction we got Let's see, 47. Look at that. 47 is this candle, this exact candle. That's when this news came out. So the reaction on the quasi was actually the White House saying, we already knew that the ceasefire was extended. Trump said until he will give Iran some more time until they can unify, behind a proposal. But what this news is about, it's about the definitive, or it's not too definitive because it says 3 to 5 days, but it says it gives you some time limit. It's not unlimited, the ceasefire. There is a time limit to it. And so it's actually Trump is trying to put pressure on Iran, to make its mind whether it wants to have talks and come to a diplomatic resolution or not. If not, then we will have some escalation of probably he'll go back to military action. So this is the reason the market reacted just here, right? So we are, that's the importance these days, right? Where you have the Middle East conflict being the driver, you need to be untouched with, what's happening out there because of the headline news risk. And even if you're not, I'm not a fundamental trader, right? I don't use this for the signal. I don't use it as, this is to me is just the sentiment, right? But I use the actual structure to understand, where I want to enter, what the market is trying to do. And if this is in accordance to me, then it's great. But even if it's not, I will still trade the technicals. But this makes it more easy to understand why the market is behaving the way it is. And, also for risk, you need to know, is there a possibility of something very positive or very negative coming out that can backfire and sabotage your trade? Because if so, then you should lower your risk. As you can see, the market is not deciding, very indecisive of that opening range. We had the range being created. We took liquidity right here. As you can see, right, fake breakdown, only to come back to that area again. So to me, this is the first test on the 1 minute, right? Is the market gonna react again on this structure? If it is, right, then that's a bearish sign, right? If it is going to react, if it reacts to this again, and it's not doing that still, then that's an indication that perhaps we're going to be going lower again, right? So you got to be flexible, and the minute we stop reacting to the structure, that's the moment you start thinking, all right, so this is switching over, there is a change in behavior, and we're going to be going and breaking out here. And once we break this, let's say Iran says, yes, we agree to go to the tables. What do you think will happen? We're going to have a huge move. So you got to be careful with your shorts. If you're short now, there was someone in the chat that said, Bajram Rexa says he's short, and I understand. I would be short too. But this is the kind of headline risk that we're running if we're putting a short. I'm not short yet, but I'm considering a short, given everything I'm talking about. But I want to be at least I want to know about where the risks are so I can defend my portfolio in my accounts for that risk. And it's very intense, very, very intense. Abrado Flinkler, thank you for your support. Everyone, if you're watching this and you're learning, you are getting, value out of us, which is the idea, that's the intention, then please consider a like and a subscribe while you're at it. We are doing this completely free, and the only thing we want you to get is to get better at trading. That's the whole point. And if it is helping you, if it's even just by piquing your interest, if you're not a trader yet, hit the like button. Let us know that we are reaching you, and we will be very, very grateful for every support and every like we get, as always. Perfect. All right, Samir, what is on your side of things?
So I'm just waiting for it to hit this area so that I can close my day in some profits. Seems like we are going to the upside because 5-minute candles are showing. some kind of strength, and this is also the 1 hour order block. I'm just keeping my take profit below that area, because in case if price would try to reject from this area, I'm still protected, so that is I think you should also be mindful about setting your take profits in those areas where it makes sense. I know some guys, some people use trailing method. That's also fine, but if you ask me, I am strictly taking 1-to-1s. I'm trying to keep my take profits where it should be. By the way, Tobia Trader, where are you getting this news? We are getting this news from the website called Financial Juice. So you can search it on Google. Free. It is free. You also can get this information. And other website we use, which is forexfactory.com. So we use 2 websites, and you can also use that. Beautiful trade, Samir. Thank you so much.
I posted it in the chat for those who are interested. It's a free website. They have an app. We're not affiliated whatsoever, right? This is just sharing things that we use to help you, that helps us to help you as well. So it's just Financial Juice. It's a free. It has a premium, but I mean, I'm using the free version, and that's plenty. I mean, I'm not a fundamental trader anyways. Just want to know what's happening out there, and that's enough for me. Financialjuice.com. Check it out. It's a good tool to, get good way to have your ear on the ground, listening what out there could endanger your account or your trade, your setup. So thanks.
All right, I'm very close to the take profit. If take profit hits or get triggered during the stream or while being here, that will be awesome. If it didn't, then also it is good. By the way, it also can reverse and take my stop loss, so we should not be getting excited or anything like that. So I'm just following my plan, and that is what matters to me. So yes, I am not gonna break my plan, because if I break the plan, then I know I'm not gonna get the results. Trading is already hard. I don't want to make it super hard. I can make it simple by just following my plan. So that's what I want to do here, and that's what I want every one of you to do. Make a plan, don't break that plan. No matter what happens, just follow that plan. And I know for a fact that nobody can stop you from passing the accounts, getting the payouts, and you might can join us here, at the Fiverr. Show us your skill, and you can be profitable if you follow your plan. So that's what again matters to me. Let me see my terminal. Okay, I'm very close to the take profit, like just a couple of points
very soon.
Yeah, now it is just rejecting.
NQ is trying to break out as well on the upside, and that's gonna totally make you take your TP very quickly if that happens.
Okay, that's amazing. I think I'm just like 1 or 2 points away from my take profit, guys. And let's go US30. I want to hit the take profit while being on the stream, but whatever, if we hit the take profit, that's fine. If we hit the take profit later on, that's also fine. And yeah, dear Samir, like your live videos, I have a question for you. Use DOM in your trading? No, I don't use any DOM. I don't, just 1% of this DOM that you just mentioned. I know on the side, on the side of the futures platform, there is a terminal called DOM, if I'm not wrong. I just know about this. I have never used it. I just use trend lines, and I just figured out how to calculate the position size, how to place the stop loss, and just follow my plan. So these 3-4 things I care about,
Yeah, DOM is the depth of market. You can see it on many platforms, even on Amplify, where you can see the at each price level on where the sellers and the buyers are with their limit orders, and that gives us extra information as to how aggressive each side is and how many traders and
Yeah.
how many volume there is on each level, which is very useful. But I don't use that either. And the
I
bottom line
just
we're trying to tell you is, you don't have to use everything. You don't have to know everything to be able to be profitable and successful in trading. You can, there's plenty of ways to do it. It's very, very simple. Samir is a very good example of that. He focused on what works for him. Keeping
now,
it
as
simple.
this guy was asking about Dome, and you also mentioned about Dome, what it is. So one, my memory about trading came to me when I was trying to find new things, when I was knocking the door of every influencer, like, hey, what is your strategy, this, that, what do you use? So that made my trading the worse. So I think you should focus on a couple of things. If the Dome thing that you just mentioned, if it is working for you, you can focus on that. And yeah, you just focus on very simple thing, Okay, we are rejecting from here. I might can close my trade here. I'm just gonna wait for the 1 minute candle close. If we closed very bearish, then I think it's a sign for me to close the trade. If we printed somewhat like a rejection candle, I might can hold the trade. Yeah, because I don't wanna risk this trade, as it is getting it got just way too close to my take profit area. Okay, now I have to close the trade. It's okay. I didn't made my full take profit, but I have to close the trade.
Already?
Yeah, I just closed. I'm just gonna close on my other terminal also. Yeah.
All right. Let's switch to mine in the meantime, so we see what the market is actually doing, at least from the point of view of the quasis. You can see that the market very clearly talks to us, right? It reacts to the order block before. That's a sign you got to be thinking, all right, so we want to go lower, right? It goes down, takes liquidity again, right? Before it took liquidity already, takes liquidity again, does not have follow through. What does that tell you? We flip back again. We're going to be going up. What's the next test here? How we react to this order block. How did we react to that order block? We went through it, closed above it. That's the first cue. That's the first sign you have. We're likely to be breaking up. And we did, right? We did, at least on the 1 minute, we did go and take out this high. Now, the second test is, how are we dealing with this last order block on the 1 minute? I know it's only 1 minute. It's not too significant, but it is what we have. And so actually, before I start talking, it was looking as if it's going to continue, only to not pass the second test yet. And the market keeps doing this over and over again, having a test, passing, failing it, both sides, until, and to the degree it starts passing one side, failing the other, or vice versa, you get the idea. All right, we're gonna go up, we're gonna go down, and it keeps flipping up. But you gotta be flexible, and you gotta keep your calm to look at the higher time frame. While it's doing this, what did it say on the 5 minute? Right, so you have that 50-minute opening range, did not break it, right, on the higher time frames. And on the lower time frame, there was a close above, but that's only on the 1 minute. And look at this, look at this reaction. It still has 3 minutes, so you can't do anything with that open candle, but it tells you something. We are, there's a lot of thing happening here, a lot of aggression on both sides. That's why you see these wicks expanding on both sides. The market is indecisive as to what it wants. Look at these big wicks on the 50-minute. Huge wicks, but the market not going anywhere. Look at these wicks. No, that tells you something. It's not clear what the price wants to do. We'll have to wait who wins this battle. So basically, I think it's still looking strong for a continuation to the upside, if you ask me, because we had all of this. The market structure has been up anyways, right? We have higher highs and higher lows. Tells me, we're likely to continue. The tiny time frame of the 1 minute tells us, we did have an attempt twice for a reversal, but it's failing as we're talking. That's the first retest. The second one, and we're not getting. This is the failed test of this retest. So this is not one. It failed. It did not have follow through. Second retest or second reversal attempt failed again. right? So understanding what the market is trying to do, which is the reversal, and failing at it tells you it's likely going to go up for some time, not for the rest of the day necessarily, but sometimes that's it. That's the only the beginning of the move, and the move never comes back. Look at that big just happened there. I don't know if you guys saw it, but it just looked very, very bullish on this. It looks failed reversal.
I think now maybe we can see a push on US30 as well, as we are breaking the highs on NQ. Yeah,
it's likely we're gonna, this is the area. Basically now it needs to hold this low. It can come back. That's fine. It can come back to as low as this, and then continue. That's all fine as long as it doesn't endanger that swing low, right? Anything in here, even if you go quickly or it come back with some retracement, is just fine. Looks like it's going to continue to go, but you need to keep your calm and follow your rules, follow your plan, and that's the best thing you can do. No problem, Louis. Thank you for your support. We really, really appreciate you hanging with us here. Someone talking about EU. Let's take a look at EU. EU on the higher time frames. I didn't talk about this, but we did have on the H4 a structure, a bullish structure, which is relatively fresh. However, you can see already how the bullish structure has been invalidated already. So that's on the H4. In any case, this looks like eventually we're going to go lower because of that break on the H4. The other thing is we do have a daily structure below us. If you go to the daily, we tapped into it yesterday, and we'll have to see if we get back to it and how the market reacts. That could, at some point, maybe today, maybe tomorrow, maybe next week, could start pushing price higher. But the initial thing is that we are still in a daily structure, right? A daily fresh order block, even though it's very close to the bearish one above us, that did get squeezed but hasn't been invalidated yet. So if you close here within, that's gonna push the market just a little bit maybe tomorrow, if it holds. We don't know that. And if you go to lower time frame, it looks bearish. If you look at the H4, what does this tell you? H4 structure being created, bearish. Market is now retesting it. That tells me that likely, unless we have a major news, maybe something like Iran causing this movement, as long as that doesn't happen, we're likely going to continue lower. This is just a retracement to go lower later, but anything is possible. Just have to watch price action on the H4, H2. Sure, there is a little order block here, which it's not very convincing. But the fact that the H4 just invalidated, to me, is a sign. This is bearish. This is likely to continue lower. That's the easy path here, in my opinion. But we'll see. We'll see how if this move should not slow down and break down. And for that, you can go to the other thing that I was gonna talk to you guys about this. The other thing you can see, if you go to, let's say, to the 15 minute, you can see that the reversal pattern that we could have had never materialized, right? You have this is the quasi, actually goes all the way up here, goes down. That's the head, left shoulder, the neckline. And did we break it? No. We did not break the neckline. It's a 50 minutes, so it's much more significant than just a 1 minute. Still not an H1, but it's something. It tells you something. It tells you that the market is weak. We did not mount the minimum requirement for a reversal. What is likely to happen? We're gonna likely, we can do all kinds of things in between, but eventually it looks like we're gonna be going lower. So we have the H4 telling you an indication price going to go lower likely. The 50-minute market structure telling you that this is looking weak. It can still turn around and do this, but in the absence of that, you should expect price to be just continue its way to the downside. This looks bearish for sure. And you have let me double check here. What else do we have? You have an H4. Let's mark it as such. All right. Yeah, this is that's not looking great at all. All right, so if we are, which I think this is not a good alignment because we lost H4 already. But if the market is going to continue higher, let's assume that this is going to happen. What is the test of the market? What is the test of price action? At least in my point of view. If this is going to be true, which I don't know, we should be able to find a reversal pattern here. And do we get that? Now we see, do we have a reversal pattern? So you have basically this. That's the quasi. We have the break of that quasi. And actually the quasi is already here. This is the reversal. That would be the entry order block. So we already have you do have a reversal pattern, but that means that the market, this was the last structure. Actually, this is the next structure that the market needed to respect and reacted upon. It already did that here, right? So now we have a second structure, which is untested. Both of these are tradable, and because they're overlapping, basically it's only one. So the market should not break this, right? So the market it can come, interact, even squeeze this, but it shouldn't break it to me. If that's still happening, still holding, then I can still think, okay, this is gonna go eventually higher. But that's the first test, and that would be the last one for a proper reversal. That's on the 5 minute. On the 3, there's nothing here. On the 1, there is nothing either. Yeah, the higher time frame, this is negative or bearish. So I don't think this is a high probability trade or a high probability reversal. I think if anything, you might get some kind of a push for maybe an hour, maybe 2, but eventually we're going to break down. That's what I think. Why? Because of the H4. The H4 should not have closed there and validated the order block. That's my view. Going back to you, Samir.
The trade that I was in, I'm still holding this on my futures terminal, but on the Forex side, I took a 0.6 hour trade here. So my future side, I do have a live account with futures also. So I need to complete like profitable days to be eligible for the payout. So I'm trying to achieve that. So yeah, I'm still holding this. Okay, seems like we are starting to break this high. But on the future side, I haven't seen a TP, so I'll just close the trade manually. Okay, so finally, I just
look at that breakout. Beautiful breakout.
Guys, I just took a take profit here.
Oh
wow, intense day.
Yes.
Oh yeah. So guys, here closed around CFD platform, 0.6 hours secured. Again, got back up, secured on the futures platform. So W day for me. Monday was a good day. Tuesday decent day. Wednesday is also a decent day. So
hey, we're streaming past the time without even noticing it. What a day, Samir.
Oh, wow. Yeah, I was in the trade. I was too focused. I was like, yeah, guys. So we are crossing the time here for you guys to share as much value, to show you the live emotions or psychology attached to a particular trade. So I think we deserve a like, guys. So make sure you're liking the stream, and if you are new to the channel, don't leave without subscribing to our channel, because these type of things you don't see it every day. Like I executed the trade live here, I updated what I'm gonna do, and I showed you my plan. I executed on the plan. So yeah, we will be back tomorrow, guys. Yeah, as you can see in the chat. So the closing word from my side, Please, guys, make one plan, follow that. This is my go-to thing, which I say every day when we are close to the end of the time of the particular stream. Please, guys, again, I will mention, make one plan, follow that plan for 6 to 8 months, because I think this is the only thing which can make you a profitable trader. So again, guys, please follow the trading plan, because I have been there 4 years in the dark. I don't want that thing happen to you guys. So you can escape that path, or you can just eliminate that thing by just following your plan. And of course, we are here tomorrow. We will also be there here, basically, on the stream. You can ask as much things, or as many doubts as you have. So yeah, with that being said, I will see you tomorrow, and awesome day for me. And thank you to Victor also, and thank you to the Fivers also for giving us this opportunity. We are hosting this for you guys. So yeah, I'll see you tomorrow.
Perfect. Perfect. Samir, on behalf of our viewers, actually, I want to thank you as well for being, showing us, how you trade, authenticity. I like that. I like that a lot when we do that here at the Fiverr Show, you guys. That's our mission, to show you how we trade as pure, as raw as possible. I personally am convinced that is very, very helpful to let you see how we deal with the uncertainties that are always in the market, how we execute despite these uncertainties. What are our strongholds? What do we focus on? What is the process? And so you can, apply a little bit of that on your trading and start seeing the profits or the benefits of having someone to look up to, in the sense of an example, a trader, a profitable trader, someone who has been, not too long ago. I mean, Samir, mentioned, his payouts. That should be a little bit of inspirational for everyone who's in that grind, trying to make, his or her way in the trading world. So this is the last few seconds of our stream. Please consider joining us on the Discord community today. There's a free account for the celebration of this month, which is Community Month, for our great community we have. There's also many activities in the Discord. You can check them out with prizes, with competitions, with all kinds of fun things and educational things for you. So don't miss out. I'd like to thank everyone and invite everyone for tomorrow's session. So take care and watch out for that Trump tweet. Bye-bye.
Bye, guys. Take care.